GMs. So watch those shares off about 2%. Now, Donald Trump says the tariffs will come into effect on April 3rd, initially targeting fully assembled vehicles, and will expand to include major automobile parts by May 3rd.
This is the beginning of Liberation Day in America. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe.
Bloomberg's Tyler Kendall is at the White House to explain. So, Tyler, what do we know now about Trump's tariff timeline?
Yeah, hey, Matt. Well, importantly, when it comes to these auto tariffs, he said that they are going to be permanent, that he has no intent to negotiate them for any sort of exception down the line. He did add that he was in touch with the big three autos, and he told them they need to move their production to the U.S. if they want any sort of relief. As you well know, and you've been talking about, this could really impact those North American car makers, considering that the supply chains are so highly integrated across the border. We're already starting to see, for example, lobbying groups for those automakers sound the alarm about consumer prices, not just for foreign autos, but also domestic autos, because of how many times the parts end up crossing the border. Now, we should note, when it comes particularly to these auto tariffs, the U.S. is saying that it will impose a 25% tariff on non-U.S. content in USMCA compliant vehicles. It then, though, goes on in that executive order to say that USMCA compliant parts for now will not have any tariff, as the U.S. works out a process to differentiate between a non-U.S. content part and a U.S. content part. So a little wonky there, but important for our broader conversations about how this White House views its current trade agreements like the USMCA. But Matt, a big escalation here as we move forward, particularly because these auto sector-specific tariffs are just going to get stacked on top of existing levies.
One part of this that I think is interesting is those April 3rd tariffs on fully assembled vehicles, but the engine parts, powertrain components, electrical systems, that could also face tariffs by May 3rd, according to the order. Now, what do you think is the variability behind this? May 3rd is still a long way away compared to what we're seeing in the initial set of tariffs.
Well, Shanali, the negotiations are ongoing, but it remains to be seen really what this White House is specifically looking for when it could come to those potential exemptions or carve-outs, considering President Trump at this point says that he's not going to issue any. And we have to keep in mind that these sector-specific tariffs are going to go hand-in-hand with some other sector-specific tariffs we're expecting, such as on lumber, chips, pharmaceuticals, and then, as Bloomberg News has been reporting, in copper, importantly, too. It's all gearing up to April 2nd. We're going to have to see how our trade partners retaliate and how this administration responds to that, because yesterday we saw President Trump say that he's going to be fair and nice. Those are his words come April 2nd, but it remains to be seen if that's really going to happen, considering that this is considered to be a pretty big escalation.
Yeah, it's a good reminder. We have to get through April 2nd before we get to May 3rd. Tyler Kendall joining us from the White House lawn. Let's broaden out this conversation and take a look at how U.S. automakers are responding. Let's head to the Motor City. Bloomberg's Detroit Bureau Chief David Welch joining us now. And David, I want to talk about winners and losers. We had up a board of Tesla, of Ford, of GM. GM really standing out, down almost 7% pre-market. Talk us through the uneven impact here.
Yeah, GM's taking a big hit on this one. They make some very key vehicles in Canada, Mexico, and in Korea. Specifically, they have a pickup truck plant each in Canada and Mexico. It's their highest volume vehicle, the Chevy Silverado and GMC Sierra trucks, and very, very profitable for them. So they do have 2 plants in the U.S., but you're talking not quite half of the production for that vehicle, those 2 vehicles, being imported in. Now, those vehicles are USMCA compliant, and therefore they will be exempt, but the non-US made content on those trucks would be tariffed. So they will be hit to some degree, and GM will either eat it in profits or they'll have to try to pass it on to consumers. And then GM's 2 cheapest vehicles, the Chevy Trax and Chevy Trailblazer small SUVs that they sell to entry-level buyers, they come in from Korea, they will face the full 25%. So, you know, these are very tough tariffs for GM. Stellantis also, they make pickup trucks in Mexico and some key vehicles in Mexico. They're going to take a hit from this. Toyota will really get hit by this. About half of their volume sold in the U.S. is imported. So some of those vehicles are from Canada, so they'll get part of a tariff, and anything from Japan would get the full 25%. Those are the 3 companies that are probably hit hardest. Tesla makes everything they sell here, but they do import parts. parts, so they will be they'll be subject to some tariffs, but because they build everything here, they get off a little easier than most car companies do.
So just to be clear, so you say it again, David, and everyone understands. My Chevy Silverado ZR2 was 73 grand when all was said and done in 2022, made in Mexico. It's not going to cost 92 grand now. They're not going to raise the price 25% because they won't be hit with the tariffs. It's USMCA compliant.
That's right, but let's say there's a $50,000 pickup truck coming in from Mexico. Let's just say, and I'm making this up, half of the parts are made in the U.S. and the other half are not. What would be hit by the tariff are the half that are not made in the U.S. So $25,000 worth of parts would be tariffed at 25%. So, more than $6,000 in tariffs added to the cost of that vehicle that GM has to pay at the border. That's the way it would work, roughly. And then you will see later on some other tariffs on parts coming in once the Trump administration figures out how to actually levy them. It's actually tough to do. You have to dig into how it's done with every model. But that's how it would work with the pickup trucks. Pretty tough.
David, thank you so much for your reporting. That is Bloomberg's David Welch in Detroit. Now for a look at the global impact on these tariffs, we are joined by Bloomberg's Christoph Ravald in Frankfurt. We were talking about all the automakers across Europe that are affected by this, but Germany has really the bulk of the imports. How is Germany expected to respond?
Yeah, that is a big question right now. I mean, at the moment, the German manufacturers are basically pointing towards the European Union, which is the sort of like the negotiating counterpart for the U.S. administration. It's not done in Europe on a national level, but of course, pretty much everyone who's like related to the industry has pretty strong views on that, since there's a lot at stake. The German industry.
Nation. I love it. It's my dream job. Come to the Red Sea Mountains and regenerate your body.
I'm David Weston. Join me for the next generation of Wall Street Week. Governor Ned Lamont on dealing with the Trump administration. Zanny Minton-Beddoes of The Economist explains the European defense buildup, 2 stories of corporate redirection, one that worked for New Balance and one that didn't for Hertz, and the business of video gaming as the world waits for Grand Theft Auto 6.
It's still the standard bearer for the industry. That's kind of astonishing.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What makes it India's time? It's us women who are going to transform India. I truly feel that the time for Indian women has come. They're not only breaking glass ceilings, but they are redefining, whether it is in sport, whether it's in medicine, creative arts, they are everywhere. And I have so much positive energy that comes back to me when I'm talking to Indian women. And I just think at all these little girls and boys, I don't want to discriminate, who are now in school-going age, imagine once education, sports, we empower them. What a difference they would make not only to India, but to the planet and the world. And the world needs it now than ever before.
GameStop today down after Wedbush analyst said its offering of $1.3 billion in convertible notes will, quote, fall flat. Analyst Michael Pachter said it's hard to understand why any investor would pay more than twice cash value for GameStop to potentially convert it into Bitcoin. Pachter has a sell rating on the company. Oh, and the company said yesterday it's going to borrow money to buy Bitcoin. AMD is getting a downgrade at Jefferies. The analyst says the chip maker is falling further behind NVIDIA and its technological capabilities, and the gap will widen even more with NVIDIA's upcoming product offerings. The firm also cites increasing competition from Intel that may pose an additional risk to AMD. Sonali?
And Matt, another move that's on our radar, NVIDIA and H3C, which is a large chip server maker in China. They have flagged the potential shortages of the H20 chip by NVIDIA, and that's according to a Reuters report, citing a client notice seen by the outlet. The drop you're seeing this morning, guys, it's only about 1.7%, but again, it is a big mover, and it also brings it closer to that 25% drop from NVIDIA's all-time high.
Right, clearly in a bear market there, at least for that one specific name. Just to give a little bit more context, H3C, it's one of China's largest server makers, and we're talking about NVIDIA's H20 chip. That is the most advanced AI processor that's legally available in China under U.S. export controls. Clearly just more bad news on that name. And that little bit of that drop that we're seeing in NVIDIA, down 1.7% pre-market, it's weighing on the broader indexes as we count down to the opening bell.
Well, and don't forget, those H20 chips are exactly the ones that China is targeting in curbs. It's not allowing them because of their energy efficiency. So new regulations announced yesterday say that Chinese companies can no longer buy and use H20 chips.
Exactly. Of course, chips, specifically NVIDIA chips, really in the crosshairs of these trade tensions that we're seeing between the U.S. and China. Let's quickly check on these indexes, though. We were talking about NVIDIA's drops showing up in the S&P 500. Those losses steepening a little bit, down about 0.2%. It's big tech seeing the brunt of that selling, though, down about 0.3%. Small moves relative to what we've been seeing, but still some pain there. The Russell 2000 pretty much unchanged. We'll unpack it all with Morgan Stanley's Mike Wilson. On Monday, he said that last week may have been the bottom of this correction. We'll ask if he still thinks that's the case. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Wall Street is trying to game out the impact that tariffs might have on markets. Morgan Stanley's chief U.S. strategist, Mike Wilson, believes that the tariffs are a starting point for negotiations rather than a, quote, clearing event. I'm thrilled to say that he joins us now at the desk. Mike Wilson, how are you?
I'm doing great. How are you?
So you wrote that on Monday,
yeah.
I believe. Is that still the case? Because we heard from Donald Trump yesterday saying that these most recent tariffs, specifically the auto tariffs, are permanent and that he's not interested in negotiating any exceptions.
Well, one thing we know about the president is he changes his mind back. I mean, this is a negotiating tool. The question is, how far do they have to go to get what they want? And the other question is, what do they want? So it's, like I said, it's the beginning of learning. We're going to learn more next week, and then we're going to learn more kind of as we go through this back and forth process. And how much do countries engage? We've seen a difference there, too. Like, Mexico seems to be engaging, Canada not so much. So this is going to be, volleying back and forth. But, I want to go back to our call for this year. Like, we were not that focused on tariffs because there were so many other things that were probably going to be a headwind for growth. And so even if this gets resolved, some of those other headwinds really don't go away probably until the second half of the year. And that's something just keep in the back of your mind.
What do you mean headwinds? Don't you still think the market's going to go up like 800 points by year end?
They could. I mean, we have a 12-month target of 6,500. I mean, I still stand by that. But that assumes that we can get to the good stuff of the policy by the end of the year. Now, maybe that 6,500 gets pushed out a quarter or so.
But that's your base case, right?
Correct.
So you do assume that we're going to get to the good stuff.
I think we are. I mean, look, and I think we've been right about this, which is I think people came in too excited that, oh my God, we got all this, pro-growth strategies, but that really isn't possible given the output gap. And that's what's very different about this term versus the president's first term. When he came in the first time, we had all this slack in the economy. And this time that wasn't available. So I think they're actually doing it the right way. The sequencing is, let's do the growth and negative stuff first, and we can go through all those. And then the good stuff like deregulation, lower taxes, maybe we get term premium to come down because the budget deficit looks a little bit more attractive. That's going to take time. And I think, it's interesting to watch. I mean, first of all, Treasury Secretary Bessent and then the president himself have really sort of confirmed that thesis. Every time they speak, they kind of talk to this idea that we're gonna have a tough 6 or 9 months, maybe 12 months.
Detox period.
100%, and that's a tough message for investors who've become addicted to policy.
So let's for a moment think about what happens if we don't hit that base case. So what are the headwinds that you see around the corner that are not related to the tariffs?
Yeah. Well, I think they're all related. So, I mean, not related would be that everything conspires together and it gets away from them. Like, I don't think the administration wants a recession. They want to slow things down, and then maybe they want to affect a recession in government. Okay. The question is that going to spill over into a recession in the private economy in a way where it's much worse? And in that scenario, then we're going to go lower than our 5,500 kind of first half downside target. Okay, we're not there yet. Like, our economists have cut their estimates, but they're not in the hard landing camp. Another thing I just want to bring up is, a term that we sort of invented 5 or 8 years ago was this rolling recession. Right, and we've had another one of these rolling.
You're in a battle with Ed Yardeni now.
Yeah, well,
I thought that was his.
We could check the tape on that. But let's go back to the original rolling recession in 2018. But anyways, my point is that we've had another one of these rolling recessions. Okay, so why aren't we going to have a rolling recovery? In other words, as Scott Bessent has said, and we've been making this case for 2 years now, most of the private economy has been in a recession for 2 or 3 years. So what are we talking about? Like, in other words, if the government goes into a recession, slow down, negative growth, okay, does that mean that housing is going to become worse than the GFC? Because right now we're selling a number of homes that we were selling in 2012. I mean, that's kind of a recession. Okay, same thing for manufacturing, same thing for consumer goods. Call that we've been, underweight consumer goods for literally 3 years, and it's paid every year. Small cap stocks, it's paid every year to be underweight these areas. So the market gets the joke. I just think a lot of stock observers haven't really understood what's been going on here. The economy has not been strong. Okay,
right.
It has not been a balanced, good economy. It's been a very unbalanced economy. Strong government. Okay, strong services, because a lot of rich people are making money off the stock market, and then you have this AI capex sort of driver.
Right.
But beyond those 3 areas, I mean, please tell me, where is the strength in the U.S. economy? Where has it been?
Yeah, no, it's a good question. And you think about the rolling recession, and you mentioned the AI CapEx story, that really papered over a lot of the ills that maybe you saw if you looked closely at this economy. So if the play during the rolling recession was to just buy the indexes, bet on big tech, how do you play a potential rolling recovery? What sort of nuances do you look for there?
Yeah, so we're starting to do that work now. We've been doing that work. I mean, clearly, if you have a true hard landing, okay, the day that it becomes consensus, the first thing you want to do is buy the lowest quality stuff in the market. So consumer goods, right? You want to buy beaten up, really levered companies, bad balance sheet type businesses, maybe material stocks, energy stocks, the stuff that is really languished, that needs economic growth to kind of reset and then have a reflexive move higher. So in 2020 and 21, I think we were fairly out of consensus on this idea that we were going to have this huge operating leverage story coming out of the recession and the V-shaped recovery, and that was going to lead to this incredible earnings story. That's when you had a very broad stock market, right? When inflation is actually accelerating and you have pricing power. Today it's the exact opposite. Companies don't have pricing power. They can't really pass this on. So we've had a margin squeeze really in a lot of industries for the last couple of years, except for if you're a monopoly, okay, these large tech businesses or other businesses with scale, and they've been able to kind of manage this, the operational efficiency, the managing their costs and passing on price where they can. And so that market is still very much intact. So our core portfolio is still quality defensives and quality growth, and that's going to continue to work until one of two things happens. Either growth accelerates exogenously, like there's a new driver of growth, or we have a hard landing.
All right, Mike, I am happy to say that you're sticking with us through the opening bell, which is coming up next. Let's take a quick check on futures before we get there. You take a look at the most traded stocks right now. It's Ford, it's NVIDIA, it's Tesla, the names you would expect, and how it's filtering through into the benchmarks right now. The S&P 500 down about 0.3%, but it's big tech that's really taking the brunt here. That NVIDIA move lower really weighing on your big tech benchmark. We'll walk through all of it. in the next block when we get to that opening bell on this Thursday. Don't go anywhere. This is Open Interest.
Been offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognise the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We are moments away from the start of trading on this, I guess it really feels like tariff day, but the market isn't reacting that much because we got 25% tariffs on autos, at least the announcement of. They won't go into effect until midnight on between April 2nd and April 3rd. But S&P futures aren't getting hit that hard. NVIDIA is a loser today, and that's one of the reasons you see a drop of 0.3% there. NASDAQ futures down a little bit more because it's NVIDIA, because those chip stocks, AMD, NVIDIA, are down. And you see the small caps there also off about 0.2%. On the New York Stock Exchange, I saw something that said IR impact, which makes me think of the Ingersoll Rand drills that they use in NASCAR, but apparently it's something to do with investor relations. They don't trade, so I don't care. And then there's Baya International Group. They just started trading last week. This is a cloud-based internet platform that provides one-stop crowdsourcing, recruitment, and SaaS, software as a service enabled HR solutions.
Wow.
Who knows what they do? The point is they started trading at $4, and now they're trading at about $5 a week later, Katie.
All All right, well, the line is going up, so good on them. But let's talk about where the line is going down, and that, of course, is with the auto stocks. Lower right now as investors try to suss out the impact that these tariffs will have on the supply chain, the companies themselves, and, of course, the consumer. You take a look at how the fallout is shaping up. GM is your big loser so far, down almost 6%, of course, very reliant on Mexico, as to is Stellantis. What's faring a little bit better is Ford. Ford is an interesting one, only down about 0.7%. Sonali, it was higher by 2% pre-market. About 80% of the cars that it sells in the U.S. are made in the U.S., so one of the relative winners here.
Sour sentiment largely on cars, except when you look at Tesla. It's up about 1.3%. It's largely seen as a winner from these tariffs. The domestic manufacturing operation here insulates it from many of the levies that its competitors face, Matt.
Yeah, although I think they got another downgrade today saying that they would lose another 50%, right?
A big one.
They're already 50% off of their peak. One good day doesn't change that kind of loss. Let's get back to the even bigger picture, the S&P 500. It's mostly unchanged. It's had a down year as well. Barclays sees the benchmark dropping even, further than they did at the end of the year, right? Dropping even, further than they did at the end of the year, right? 5,900, I think, is their year-end target. The strategist Vinu Krishna joined Bloomberg Surveillance this morning.
I have sensed this bearish sentiment on the rise, especially in the last few weeks. So I just came back from Europe. Without doubt, there's a negative sentiment, certainly in the U.S.
We're back with Morgan Stanley CIO and Chief U.S. Equity Strategist Mike Wilson. And Mike, you've been on a world tour. You've been traveling a lot for work to see clients. It's interesting to me that U.S. Strategists, even you, who are kind of a known bear, think we're going to still go up to 6,500. All these European banks, Barclays and UBS, cutting their targets. HSBC, double downgrade. Do they just see it differently than we do here?
Well, I would say their path has been different, right? So once again, I think a majority of strategists and clients came into the year probably too bullish about kind of the trajectory. And look, we overshot all of our base case targets into the last year. We talked about 6,100 as our bull case. We were bullish. First of all, we were bullish in the second half of last year for very different reasons than most people. Most people were bullish because everybody was saying, oh, the economy's great, earnings are wonderful. No, what was going on was the Fed was cutting interest rates, okay? There was an election that we had a clean result in, which caused a lot of short covering and hedging coming off. And we had a recession getting priced out from the summer. So we just overshot. And then we have all these growth headwinds. So what I view is I think a lot of people are just catching up to what's happened. And so now, of course, they're marking themselves to market. We always had a 5,500 to 6,100 target for the first half of the range, for the first half of the year. We hit the low end of that range, so we got to be true to our original call. Once again, we can take out 5,500 in a hard landing. Okay, we're not there yet. I would say the risk of that has gone up. It's probably 35% now. It's probably more like 10 to 20% at the beginning of the year. So that's what we're watching. We're just being more tactical, I think, than most people. Once again, clients right now don't care about year end. What they care about is making money in the next quarter or two. That's our job. And so we've been in the right sectors, we've been in the right factors for the most part, really for the last year. And as I like to say, proof is in the pudding, right? The numbers don't lie. Like our focus list is up 7% year to date.
Right.
So, I mean, that's pretty good. And over the last 7 years, it's up 80% relative to the S&P 500. So,
right.
Those are the numbers, right? The numbers don't lie. And because we've had the right call, not just in the last 12 months, but really over the last 7 years, understanding what's really going on in the economy and earnings, and understanding policy and the impact on valuation.
You mentioned that you're being tactical, and I want to talk about how tactical you're actually being, because there was a really interesting note out from Julian Emanuel from Evercore overnight. He says to buy options when the VIX is low, stocks when the VIX is high. Are you that short term? That seems like a very specific, narrow, you have to be quick on your feet there. Or are you looking out, when you say tactical, maybe a month or two?
Well, it depends on the client, right? So most of our interaction now is with institutional clients who have, time frames from 1 day to 2 months. Most people don't have 12 months. They're not trading their portfolio, turning it over that much, but they are looking to make money every month. And so that's how we gauge it. So like 5,900, give or take. I don't think we can go to new highs. We're on record saying it's going to be really hard for us to go to new highs until earnings revision breath not only bottoms, but actually gets in positive territory again. And I think that's going to be challenging in the first half of this year. Now, as I mentioned earlier, I think in the second half, as investors start to look forward to 2026, we could see revision factors start to reaccelerate, and that will be when we could potentially make new highs, 6,500. Maybe it's end of the year, maybe it's early next year. Timing is, going to be uncertain.
Mike, my question is who's buying? Because the reality is the S&P 500 is still down more than 3% this year. The NASDAQ down almost 6% for the year. Hedge funds across the street have been clobbered through March, so I'm not quite sure what money they have to buy. Yeah. And so is there really dry powder on the sidelines to buy into these dips with conviction when you still could be worried that you break under that 5,500?
So asset owners remain very active, whether that's retail, pension funds. In fact, there's a rebalancing going on this week. One of the drivers for this rally in the last 2 weeks has been rebalancing from bonds back towards stocks. And of course, corporates are probably been the single biggest buyer of stocks, and there hasn't been much supply. As you know, the IPO calendar, equity calendar has been pretty light. So we still have kind of a good supply and demand balance. That will change. Like, when would the asset owners sell? The asset owners will sell when they think there's a major trajectory change, i.e. a recession, okay? I.e. The Fed has to raise rates again because inflation's really coming back. Neither one of those conditions is in place yet, but those are your risks, right? That's what we get the asset owner client to sell stocks is you get a hard landing or you get the Fed having to raise rates again.
By the way, so I always ask the same question, Sonali, because we always talk about retail is fully invested, foreign ownership of U.S. stocks is at an all-time high. But I think it's a good point that corporates will buy. In this administration, they'll embrace that as opposed to the previous administration. And we were talking during the break about retail clients used to have 60-40, right? 40 being bonds, and now you're seeing it more like 70-30, 30 being cash.
Yeah, well, it's not 70, it's low 60s. It's like 62. The big loser has been bonds. So retail investors who get a bad rap are not that dumb. I mean, they basically have been letting their long duration portfolio roll off, as bonds have been by far the worst asset for the last several years. Now, could they buy bonds again at some point? Yeah, potentially.
But or they could buy stocks, right? If you look at money market funds, sure. We always pull up MMFA index on the Bloomberg terminal. It's up and to the right. And, any sucker can get 4.5% now in a Marcus account or whatever.
Right, so they have a barbell. They're overweight, they're a little bit higher than normal on stocks, okay? And they're higher weight on short duration fixed income, i.e. cash in 2 years and in. That sounds pretty smart to me. That's been the right barbell. High quality stocks, okay? And short duration fixed income, because you're getting paid a real rate of return now for the first time in 15, 20 years. I mean, it's not a bad barbell. And then of course they're doing stuff in alternatives, whether it's private credit, which you're getting a pretty good return still, maybe some private equity, and of course they own real estate.
We don't really have time for another question, but I just don't understand the pitch to go out into bonds when cash you're earning 4%, what the 10-year treasury yield is at 4.5%, 4.3%. It doesn't make sense why you would move out at all.
Well, our strategists are bullish on bonds now because growth is slowing. Mm-hmm. The Fed eventually will be cutting more, and that will work its way in. So we could see yields below 4%, maybe 3.5%, even without a recession. And of course, if you get a recession, it's a great place to have some duration.
Mike, super nice to have you in studio today. That is Morgan Stanley's Mike Wilson. Complicated market we're looking at. We're going to look at some movers on our radar as well, because Jefferies saw a drop in investment banking and capital markets revenue.
Woof.
Woof, right, yeah, seriously. Due to a lack of M&A, they're down now 8%. They were down a little more. Also, woof, but the actual,
Petco.
Right, exactly, hilarious. It's up a lot, up almost 32%. They see double-digit improvement in adjusted EBITDA for the year. And we've been talking about this all morning, guys. NVIDIA, check out NVIDIA now. It's down more than 2.6% this morning. There was a Reuters report this morning on potential shortages of a H20 chip, of course.
In China,
yes,
where
correct.
that specific chip, yesterday we learned from the FT, is going to be banned.
Correct. And now one of the largest server makers in the country, in China, flagged those shortages to clients, and that's what the stock is.
You see why that's silly,
to.
right? Because if it's banned, who cares about the shortage?
Well,
right?
I think
are we on the same page here?
I think it's more of a sign of the times.
Okay.
I mean, there's a lot of nervousness about demand, et cetera. Maybe we got ahead of our skis when it comes to the AI boom. But as you would expect, NVIDIA, obviously, your biggest weight on the S&P 500
Over our
right
skis,
now.
Sonali.
What did I say the other day?
That's an inside joke.
That's cute. I mean, I've been off for about 2 weeks, so I'm just catching up. Just remembering how to do television, and I think I'm supposed to tease to this camera now, because coming up, one winner stands out in the wreckage of Trump's planned tariffs on auto imports, and that's Tesla. More on that next. This is Open Interest.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape in fashion?
Yeah, AI definitely helped. When I did the jewelry, I used the AI, helping me to give some idea, but ultimately you still have to do a lot with it. They just give you very superficial ideas, and but at the end you still have to customize and have to really make it and do that. I do not think that AI and the technology can replace the human mind at this moment.
Are you concerned one day we won't be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I see that, when the design is doing, it's the spirit, it's the heart that the computer don't have.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
All right, welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, AMD no longer a buy at Jefferies, getting cut to a hold, with the analysts saying that it's falling further behind NVIDIA and also facing increased competition from the likes of Intel. Next up, Phillips 66 getting downgraded, no longer a buy over at Goldman Sachs. Yesterday, the oil refiner nominated new directors to its board as it battles with activist investor Elliott. And finally, we have HSBC slashing its price target on Tesla to $130. Now, that new forecast suggests an over 50% downside potential for the stock, and the analyst cites limited driving assistant technology and challenges with European fleet buyers. Specifically, it's saying that robo-taxi opportunity, it's way too far in the future, and as such, it has a sell rating on the company, Matt.
All right, let's stick with Tesla right now. Elon Musk says the Trump tariffs will have an effect on his car maker. He tweeted, I guess we can still say that as a verb, quote, important to note that Tesla is not unscathed here. The tariff impact on Tesla is still significant. However, its large U.S. factories will help insulate the company from tariffs as compared to its rivals. Joining us with more is Bloomberg's Max Chafkin. He co-hosts the podcast Elon Inc., focused on all of Musk's businesses, but obviously Tesla is the big publicly traded one. And I have to say, as somebody who follows the car world, I'm really, I think impressed is the right word, by how American Teslas are. I mean, no other company has cars that are this much made in America.
Yeah, this is a real point of pride for Elon Musk. He talks about this all the time. Tesla is largely vertically integrated. It's not. They do get some parts from outside the U.S. They, as Musk is saying, there will be some tariffs, but they make a huge percentage of the car in their own factories in the U.S. There's also an advantage in EVs. You know, EVs have fewer parts than gas-powered cars. So anyway, there are a bunch of reasons why this helps Elon, not necessarily helps Elon Musk, but doesn't hurt him as much as some of these other automakers.
Well, when we think about some of the pains that Tesla is feeling, it's not because of U.S. manufacturing, right? It's because people are not buying the cars in Europe. People are protesting. You're watching rivals in China.
Even here, not just Europe, right? Look at California sales. They're bad.
Yeah, and I mean, sales globally have been poor for the last year. You know, they were down last year for the first time in like close to a decade. There are real sales challenges, and you know, in certain ways, yes. Again, it gives Tesla some advantage if a gas-powered car costs $3,000 or $6,000 more because of tariffs. But if the economy is bad, it's not good for car manufacturers. It's not good for Tesla. I do think there are probably some Tesla investors, the bulls on the kind of robo-taxi thing, that generally look at this tariff thing as no big deal because, again, they're going to make money from services. If you really believe that story, the cost of the car, even if the car price goes up a little bit, doesn't matter as much.
Interesting. And I mean, when it comes to those brand issues, the HSBC downgrade or price target cut is even more interesting because he writes that the seeds for the current sales weakness predates the recent brand issues. I mean, you add it all together and it seems like it's pretty dark out there for Tesla, especially, I mean, just going off the HSBC note, talking about that robo-taxi opportunity. There's been a lot of optimism built on that, but at least HSBC thinks that's well far into the future. You know, if Elon Musk did not have this close relationship with Donald Trump, I think it would be a much gloomier picture. And people will be talking about, you know, a perfect storm. You have very few new models. You know, they haven't really updated the cars much. Cybertruck has not done well. The electric car market is getting bigger. There's more competition. There are all these issues that have nothing to do with politics, nothing to do with the brand. And then you layer on top of that these kind of polarizing, you know, the polarization in the country and the way that Musk has really leaned into that, and that, you know, that adds to the stew.
Max, you know, we could talk about this forever. We have to leave it there, though. Of course, a volatile ride for Tesla. That is Bloomberg's Max Chafkin. Now, coming up, we're going to talk about CoreWeave because it is planning to cut the size of its IPO. We're going to tell you why on the Bloomberg Scoop. You're watching Open Interest.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Listen carefully.
Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. A quick check on what's going on in stocks here. We're looking at red arrows on the S&P 500 and that NASDAQ. Not huge. You might have expected a bigger drop on the day after President Trump announced 25% tariffs on autos, but you're not really seeing it. Take a look at some of the individual movers. NVIDIA is what's driving us down right now, off 1.2%, so well off of its lows for the session. Tesla on the way up because the product that Elon Musk makes for sale in America is a very American product, and it isn't likely to face much damage from Tesla. GM is the other story. They assemble a lot of their vehicles in Mexico, in Canada. And then you got a couple of rental companies here that I think are really interesting. Avis, Budget Group, and Hertz Global Holdings doing incredibly well. Wow, Hertz up almost 25% because as cars become more expensive, a lot of people are going to be renting cars instead. I don't know what the deal is with Lululemon, but do you know?
It reports today.
It reports today. Lululemon reports today, and we all need a little bit more Lululemon in our lives.
Thank you. Anyways, we are going to talk about a stock that is not currently trading, but it's going to look to list very soon. CoreWeave is cutting the size of its IPO to around $1.5 billion. It is a sign of how stock market volatility is hurting demand for even highly anticipated listings. The cloud computing company will announce new terms of the offering later today and has been planning to list as soon as tomorrow. Let's get details with Bloomberg's Bailey Lipschultz, who co-wrote this story and broke the details of the revised offering. This went from attempting to raise $4 billion to attempting to raise $2.7 billion, now to $1.5 billion. What's going on?
It's not a great look, Shanali, and it's really a combination of factors. When I talk to investors, long onlys, and hedge funds who have opted and told me they're sitting this one out, there's concerns about the competitive moat, how the longevity of the business will continue to operate in the years out. Obviously, we've seen headlines, Microsoft pulling back on spending as it relates to data centers. We've seen Joe Tsai come out and really question the future of that business and whether there's an oversupply of capacity. And really just when you look at a deal like this, you're coming public at a time when you launch your IPO that as you mentioned, targeting $2.7 billion. NVIDIA over the last week down 4.5%. So certainly not helping with that concern. And obviously in the back of everyone's mind still is DeepSeek. And keep in mind, 8 of the 10 largest US IPOs this year are trading in the red. Venture Global is down more than 55%, the biggest IPO of the year. So if you're a flipper, it's not really that exciting to go out on a limb and allocate some of your book to an IPO when you're really betting on the stock ripping 30%.
One thing that has nothing to do with this story, I will point out that co-founder Brian Venturo is a Haverford College graduate.
Oh, congrats. Did he run cross country there or no?
That would be amazing if he did, but I don't think so. But along illustrative
So he went there, Howard Lutnick went there, and you went there.
Yes, and Alex Karp too, actually. So small,
an illustrious
but mighty.
crowd.
Yeah, I know. Some real titans on that one. But in any case, you think about CoreWeave planning to downsize. According to sources, you mentioned the recent performance of recent IPOs. Talk to us about the effect this might have on some of those pipeline candidates that we keep talking about. Is this going to sort of chill the mood music?
It's bad.
Yeah.
It's bad. When I talk to hedge fund people who flip these stocks or even long onlys, the expectation was no matter what, CoreWeave can get this done. It's an AI play, it's computing, it's backed by NVIDIA. If there was a time or a company to break open the IPO market, this was the company. Now that, as you mentioned, Shanali, you go from talking about $4 billion to 2.7 to now 1.5, with NVIDIA, according to CNBC reporting, having to step up to shore up that book, there's a lot of uncertainty in what that could mean for other companies.
You know, the indebtedness is also something I want to talk about. There was this FT report about a technical default on the loans. I don't want to have you get too into that, of course, but I want to point out here that you have existing investors who have been particularly frustrated with the way they've managed their balance sheet. How often does the company's debt load come up in conversations with investors?
I mean, that's critical. It's normal normally, though, skewed towards private equity funds. So when you're looking at companies that are coming out of a, call it Platinum or Carlyle, your who's who, the real question is, what does that leverage profile look like? Less so typically with a fast-growing hyperscaler type of company like CoreWeave. As you mentioned, the company, according to disclosures in the IPO filing, violated key terms of a $7.6 billion loan last year, triggering a series of technical defaults that lenders have since agreed to waive. So there's been a lot of scrutiny around the filings, around the disclosures, and around the business operations and some of the deals that they have struck.
Bailey, thank you very much. Bloomberg's Bailey Lipschultz talking to us about the CoreWeave IPO. I'm looking at famous Haverford grads here.
There's a few of them.
Chevy Chase,
yes,
apparently.
I don't know if he actually graduated.
Judd Nelson.
Yeah, it's not bad.
From the Breakfast Club.
Coming
up the next hour, we have Bob Sloan of S3 Partners on short interest in Tesla.
What would it mean for India to host the Olympics?
Heslinda, I don't think it's my dream alone. I think it's a dream of 1.4 billion Indians to see the Olympics being held in India. I think once sport takes over, the transformation will be seen, not only in the lives of the youths, but in the economy of our country. India is one of the biggest centers for digital usage, and 1/3 of the viewership of the Olympic channel comes from India. So India as a sporting market is huge.
Countries which have hosted the Olympics have always grappled with the issue of infrastructure, for instance. Building it is one thing, maintaining it is another. How can India do it differently if it were to host the Olympics?
So I think we're talking about innovation and sustainability. And I think the same holds for holding the Olympics. What if you look at a sustainable model? What if you look at refurbishing old stadiums, reusing what we have? So I think the move has to be a sustainable move.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Insurance.
I'm Deborah Rodriguez. Brand new plans in place for a major restructuring at the government agency that responds to disease outbreaks, approves drugs, and helps people with insurance coverage. Correspondent Steve Kathan has our top story.
Officials say the administration will cut about 10,000 jobs from federal health agencies today, including 3,500 from the Food and Drug Administration and 2,400 from the CDC. 1,200 job cuts at the National Institutes of Health and 300 at the Centers for Medicare and Medicaid Services. No FDA inspectors or CDC infectious disease workers are being cut.
Those cuts are in addition to about 10,000 employees who chose to leave HHS since President Trump took office. The White House hasn't ruled out firing someone over the group text on Signal that accidentally looped in a journalist on precise details of an attack on Houthi rebels. Correspondent Ed O'Keefe is at the White House.
The president says he plans to ask Secretary Hegseth to review what kinds of information should be classified. He also said an investigation by the Pentagon watchdog that's been requested by the Senate Armed Services Committee wouldn't bother him. It's unclear, though, who would lead the investigation since the president fired the Defense Department's Inspector General back in January.
Attorney General Pam Bondi's announced the arrest of a man she describes as one of the top leaders of the MS-13 gang.
He is an illegal alien from El Salvador, and he will not be living in our country much longer.
She says the 24-year-old, whose name has not been released, was arrested in Prince William County, Virginia this morning in a joint operation that involved the FBI, ICE, ATF, and state and local police. Some drivers could be rushing to buy cars before President Trump's newly announced tariffs on foreign-made automobiles and parts kicks in April 2nd. CBS's Kelly O'Grady.
Automotive analysts say the 25% tariff could raise car prices by thousands in the U.S. for vehicles using car parts just in Mexico and Canada alone. That price could skyrocket to $6,000 for cars entirely built outside the U.S.
Wildfires are still raging across the Southeast. Dustin Johnson says his wife is worried flames will destroy family land in Pickens County, South Carolina.
She's terrified. Her family's had that property for decades. It's on the brink of, being gone. She's terrified of it.
Prosecutors in Paris have just put in a request on the last day of actor Gerard Depardieu's sexual assault trial. They want the 76-year-old to be found guilty of groping 2 women on a movie set and given an 18-month suspended sentence. Depardieu faces a maximum of 5 years in prison. The verdict's expected at a later date. This is CBS News. Federal prosecutors are investigating the timing of a COVID vaccine.
The drug maker GSK claims its rival Pfizer waited to announce the success of its COVID vaccine until after the 2020 election, which President Trump lost to Joe Biden. The Wall Street Journal reports a senior scientist at GSK who used to work at Pfizer told his colleagues about it. For years, Trump claimed Pfizer sat on the results of its vaccine trials, which he said could have helped him at the polls. Michael Wallace, CBS News.
Kylie Kelsey's about to give birth to her 4th child with retired NFL star Jason Kelsey, and she has a few choice words for TikTokers who've been criticizing women who have C-sections.
You can kindly
right off. The person you're speaking to just grew a human being, and for whatever reason, that little baby needed to come out the front, not the bottom. You know whose business that is? Not ours.
As she commented on her podcast, Not Gonna Lie. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're streaming live on YouTube as well, so head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Alex Steele bailed on me after 3 hours of surveillance. She's going to go do, a bunch of TV stuff. So Norma Linda sitting in for Alex for the next 2 hours. Norma, thank you so much. Appreciate that.
Happy to be here.
Coming up, we're going to check in with Steve Mann, Bloomberg Intelligence. He's a global autos analyst. We got tariffs coming on the auto business. What does that mean for these companies? Steve Mann, he covers all the global autos. He'll give us his research on that. Adam Coons, Chief Portfolio Manager at Winthrop Capital Management, will give us his thoughts on these markets. Stuart Paul, U.S. economist with Bloomberg Economics, and a crazy expert skier. We're going to talk to him about some of the economic data we've had out today, and we're going to get some inflation stuff tomorrow. John Lynn, Chief Business Officer at Equinix, on AI's impact on the data center industry for 2025. How can you lose money making data centers for AI? It seems to be like an easy game, but we'll see how that's playing out there. But let's go to John Tucker right now. Kick things off for a Bloomberg Business Flash, John.
And we are lower right now, the major averages, but off the worst levels of the session. This Bloomberg Business Flash being brought to you by IBKR. Will the U.S. CPI exceed 2.4% in March 2025? Trade your prediction with IBKR Forecast Trader. The yes was recently at 60%. Buy yes or no, earn $1 if you're right. Go to ibkr.com/forecast. Stocks, as I say, extending losses into a second straight session, but we've paired some of the earlier losses. And then you have automakers, and this includes most of the entire group. They're getting hit. However, Tesla, with factories in California and Texas, seems to be benefiting or not severely impacted by the tariff news. In fact, Tesla, one of the most actively traded right now, up 2.4%. By comparison, you have Ford Motor, those shares right now down 3.3%. And most actively traded right now, shares of NVIDIA, they are down 1%. S&P 500 overall down just 7 points right now, down 0.1%. The Dow down 62 points. The NASDAQ 152 points lower. That is down 0.3% after yesterday's 2% sell-off. Data today, the government lifting its estimate of U.S. economic growth. Revised data show America's economy expanded at a faster 2.4% pace in the closing months of last year. Some of the individual stock movers: Eli Lilly expanding its online platform, Lilly Direct. They're going to include resources for Alzheimer's disease patients, allowing them to find in-person specialists or connect with virtual providers. Can I clear something up?
Go.
Because it's always confusing, and I get this question all the time. On the economic data, the Fed's preferred measure of inflation, PCE deflator, out tomorrow. But we got one today, and people are asking, I don't get it. Should we call this the Fed's preferred measure? Should we today? It's the month-over-month measure. That's out tomorrow. Is that the preferred measure? So here's the answer from Anna Wong. The preferred measure is just core PCE deflator, either monthly or quarterly. Core PCE deflator comes out monthly tomorrow, but also as part of the GDP releases that we got today. Today's GDP release is for Q4, so it's not the latest number, whereas tomorrow's is the latest number, so the more relevant
The big one that we care about.
That's the big one. So that's the confusion.
Thanks for clearing that up.
Okay.
Very good.
Much needed.
That's my public service for today.
Very good.
Much appreciated.
All right, John Tucker, thank you so much. We appreciate that. Norma Linda sitting in for Alex Steele here for the next couple hours. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live video on YouTube. So head over to youtube.com, search Bloomberg Podcast Live, and that's where you'll find us. We've got some red on the screen here. But let's take a look at some of the stocks on the move today. We're joined by Bloomberg, Natalia Kenijevich. Natalia, what are you looking at?
Yeah, let's guys start with AMD. I know you will be talking about AI infrastructure, and this is also an important part of this puzzle. So AMD shares were downgraded at Jefferies. Analysts are saying that it will be more difficult for the company to compete with NVIDIA, and the gap is expected to widen in the next couple years. It is also important that this is overall the 8th downgrade that we've seen so far this year.
Wow.
Analysts are getting more and more pessimistic on AMD, and then during the last earnings season, AMD provided really disappointing earnings results. We also saw that NVIDIA itself is down today. And as one source told me yesterday, every piece of information erodes sentiment across big tech stocks, and especially when it comes to AI infrastructure. And yesterday, of course, we know that TD Cowen said that Microsoft is planning to walk away from some of these data center projects.
And, you know, when we're thinking about tech, I'm seeing also in the story that you're referencing that we had Jeffrey saying that street estimates still seem too high for AMD. That's really interesting, especially on a year-to-date basis. I'm seeing AMD shares down about 12% this year, NVIDIA down 16%. But really interesting when you're thinking about the outlook. What else are you watching?
Yeah, so I'm also watching Jefferies. Shares extended declines on Thursday. Earnings came below expectations. We also saw one downgrade. Morgan Stanley downgrade this stock, lowered price target to $75 from $81. Revenue overall slipped 8.4%, and a bigger decline was seen across asset management revenue, down 30%. The company said that it really has seen difficult environment across different investment strategies. This is also an important piece of this puzzle because this is an early read for bank earnings results, which we expect in April.
Right.
How about General Motors here?
Yes, of course, car makers are front and center today. It's also important to look at every single stock specifically, which one will be more or less exposed. That is why our team, stocks team, is doing a really great job in putting together on analyst comments. I think the most interesting, of course, came from Wedbush. Dan Ives is saying that the price of cars can jump by $5,000 to $10,000 for some cars. He's saying that General Motors and Ford in particular can get many parts and do some production outside the U.S., such as in countries like Mexico, and these countries companies will be under pressure. At the same time, Bernstein saying that Tesla and Stellantis can be better positioned.
Crazy stuff out there. All right, Natalia, thank you so much for joining us. Natalia Kenijevich, equities reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio, and I am all over the pronunciation here. It was tough for me for a while, but I think I got it now. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes of the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Natalia was talking about General Motors trading off today. Let's go to Steve Mann. He's a global autos analyst. Steve, I know you got earnings models out there for a lot of these big auto companies. Are you adjusting your earnings models for tariffs here? How's that going to impact some of these big global automakers?
Yeah, we are actually going through that right now. One of the things we did publish this morning was the auto sales forecast for the U.S. You know, we were initially looking at down 0.5%. We're looking at being down at least 3% now for the year. But you know, we are going through the model. One thing that really stood out for us was really Ford. Ford, look, you know, they're losing an arm and a leg on EV sales. The popular Mach-E is actually made in Mexico. So like for us, if you tack on another 10 grand on the price, and it goes through the bottom line, you know, it could hit you could hit $500 million on earnings. That's 10% of their earnings. So those are some of the things we're looking at.
Steve, what are the names that you're seeing are most exposed here?
Well, I think on the downside are definitely the legacy, you know, the big three autos plus the foreign legacy automakers. You know, they do have a lot of production outside of the U.S. As you can see, you know, the pure plays, not just Tesla, Rivian and Lucid are actually performing relatively better because there's a possibility that the pure plays could take market share, EV market share from the legacy automakers if they have to increase prices on those EV imports that they make in Mexico. The other thing that's interesting too that we're keeping an eye on is really on the retail auto parts companies like O'Reilly, AutoZone, Advanced Auto Parts. You know, they're actually bucking the trend. They're up, and simply the reason is that, you know, if people are not buying new cars, they're gonna have to maintain existing ones, and so you know, those DIY parts stores are actually doing well today.
Yeah, I'm looking at those stocks. I mean, AutoZone, for example, is up 2.7% today, 52-week high. A lot of the other names are up 2, 3, 4%. And Steve, I'll have you know, I did buy a new, or at least a new vehicle this past weekend, a Honda, but I got a hybrid. So how about that?
Which Honda is this?
Okay.
CR-V.
Okay.
Yeah.
Love a CR-V.
So I got in front of the tariffs there, so I'm all set to go there.
Oh, you're on your way there.
So, Steve, what are you hearing from the Hondas of the world, the Volkswagens, the Toyotas of the world? How are they viewing this environment?
Yeah, you know, I think they're going to face some cost pressures as well. You know, they do have a big chunk. Actually, the CR-V is actually made in Canada, by the way.
Oh, okay.
So they're going to.
I don't know what the big deal is.
C for Canada.
Yeah.
So you know they're gonna get hit, but the difference is that Honda and Toyota in the U.S. and I think globally they do have a much lower dealer inventory. So you know there's still a lot of demand for their cars because they're known to be more reliable. So you know they may be able to pass on some of the higher costs, the higher pricing, the price increases to the consumers. So they would probably fare better within the legacy automaker. But the European will probably get hit pretty bad, especially like the luxury brand BMW, Mercedes, and Audi. You know, they have a different strategy. You know, they don't have multiple plants for certain models. They have a global plant for their models. So for example, BMW and Mercedes makes SUVs in the U.S. So it's going to be hard for them to shift footprint. But the other way to think about it is, you know, if someone is able to afford a more expensive vehicle like a Mercedes and BMW, they may be able to stomach the higher prices.
Yeah, I don't know. Through. My BMW X3, I guess it's South Carolina, or I don't know where it was built, but it wasn't in Stuttgart with the rest of them. Yeah. Steve Mann, thanks so much. Appreciate it. Steve Mann, Global Autos and Industrials Research Analyst for Bloomberg Intelligence. He's down there in a Bloomberg Princeton office. The office, probably some of the best food in all of global Bloomberg. I'll lay it out there for you right now. Looking at the markets, boy, we're trading off the bottom here. Pretty much the markets are looking pretty much unchanged here. The Nasdaq's off about 25 points. That's 0.1% of 1%. That's a lot better than we were doing earlier. So we'll see how the data rolls in throughout the rest of the day. We're going to have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks right now, they parrot some of the earlier losses, relatively unchanged. The S&P 500 down just 5 points, down 0.1% at 5706 on the index. The Dow Jones Industrial Average 11 points lower. The NASDAQ 100, that is down 52 points. That's about a 0.25% loss after yesterday's 2% slide. Pending sales of U.S. homes rebounding 2% in February. This is the latest economic data. That beat economists' estimates, and they're crediting calmer weather and a greater selection of houses. Tesla expected to be less affected by Donald Trump's auto tariffs due to its domestic manufacturing operations. They have plants in California and Texas. So that makes it one of the most actively traded today. Shares right now up 1.9%. Oh, here's one for you. A plan is taking shape to put Hooters into bankruptcy and return control of the brand eventually to the Florida businessmen who founded it decades ago. They're calling this the re-Hooterization. The Hooters founders are making a pitch. It's a PG-13
I saw
pitch.
this.
No bikinis and more families.
It actually was a read spike on the Bloomberg terminal.
Reed
That's how I saw it this morning.
I always went because of its fine cuisine.
Right.
You know, some people.
Great wins.
More families, no bikinis.
We check the markets for you and other stuff all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Polidora.
All right, John Tucker, thank you so much. We appreciate that. We have Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's talk about these markets here. Adam Coons joins us, Chief Portfolio Manager, Winthrop Capital Management, Carmel, Indiana, which is a burb of Indianapolis, which raises a question, the age-old question, what is a Hoosier? And I've asked a million Indiana folks, and best I get is a Hoosier is somebody who's from Indiana. So that's the best I got for you. Adam Coons joins us. Adam, what are you telling your clients these days about these markets? We're getting whipsawed all over the place here. It looks like the market doesn't really care for this inflation talk, but here it is.
There it is. We're telling our clients, don't use the crystal ball method of investing. You have a strategy, stick to it. This is just a short-term kind of headwind of uncertainty. And I think we all know that, Wall Street obviously likes nothing less than uncertainty. You can get bad news, and if it's expected, it doesn't really do much. But uncertainty will drive, this higher volatility, higher risk premiums. But like I said, we see this kind of as a 2025 story, weather this storm, and fundamentally, there really isn't a lot that's changed. So that's really, as boring as that is, that's the story we're sticking to.
Well, Adam, what are the safe haven areas? Are the traditional safe havens even really safe havens anymore?
Well, that's a great question, because it seems like when you do find a safe haven, like healthcare, there's something else coming out of DC that will, kind of shake that up. So there's probably not a lot of areas that are absolute safe havens. I think, one of the tried and true ways to invest to protect capital is just to go into those more boring stocks, to go into high dividend, lower beta stocks. And that's largely what we did kind of coming into this year. We weren't trying to time markets and move out of equities, but we did realize that, valuations were a little bit on the high side, and kind of there were a lot more unknowns coming. So we did dial back the risk in that regard. That has helped this year. But it is difficult to find, like I said, those more pure pocket safe havens right now.
So what are you thinking about the fixed income market these days, Adam? Do you stick there at the 2-year Treasury at 4%, or do you take some credit risk here?
Well, so that is the place where we're finding, more of that safe haven, because like I said, it's difficult to find in equity markets, and it's probably going to be difficult in fixed income markets as well. Credit spreads are really tight right now. They've widened, over the last couple months similar to the sell-off in stocks. So we are seeing opportunities, as you said, to move out of treasuries and into lower A-rated or triple B-rated bonds. Look, when you're looking at asymmetry of risk to return profile, there's not much better right now than fixed income and corporate bonds alike, because, like I said, the risk of interest rates going much higher from here, we think is really low. On the flip side, rates will probably stay where they're at for quite some time, and if they come down, I'll benefit as well. But yeah, with spreads widening, we are incrementally increasing our credit exposure right now.
Adam, are you advising that clients stick U.S. side, or are you seeing more opportunity abroad?
Yeah, I mean, we are seeing is some opportunity abroad. I think you really have to, pick your spots. I think you can't use a broad brush there. Obviously, we've had in equity markets, we've had outperformance in Europe, and I think that that's probably short-lived. When I look fundamentally, like I said, there's not enough that's changed there. There's some potential shifts maybe with trade, but I don't think it's enough to move the needle for you to have, if you look, you've got about, depending on the day, 800, 900 basis points of outperformance of, international developed stocks, so over the U.S. market. And I think that's a short story. I think where you kind of have more to play on the international side is China. I think long term, when you look at what are going to be the most competitive economies in the world, it's most likely going to be the U.S. and China. Those are the two that are going to go head to head, competing with one another. The headwinds, structural issues in Europe and Japan, those haven't gone away. So it's really just China and the U.S. for us long term.
Adam, what do you do with alternatives? How do you talk about alternatives with your clients?
Yeah, that's a tough space. We're very active in private credit. And so that's another space where we've seen spreads tighten. And, it's similar to some of the dialogue we had several years ago when the, levered loan market was moving towards, just easier credit standards, lower spreads. And so we're starting to see that in private credit market. So it's another area where you've got to do a lot more due diligence, but there are plenty of opportunities when you're looking in private credit. There's a lot of opportunities in real estate too. You just have to know. You can't just go out and blindly buy. We're just talking to someone this morning about some of the real estate and some of the distressed real estate in the Manhattan area. You're looking at like World Plaza. The value of that is currently a third of what it was when it was put into a CMBS holding several years ago. So there are opportunities. You just have to know what to do with it. So if you're willing to put money to risk in some of those distressed markets, there's a lot of upside if you can handle it.
Adam, thanks so much. Appreciate it. Adam Coombs, Chief Portfolio Manager, Winthrop Capital Management, joining us from Indianapolis, Indiana via Zoom here. We got some economic data here today. The GDP, I don't know, annualized grew 2.4%. That seems pretty good to me. I don't know. Feels pretty good. I got inflation coming down. It seems okay. But there's definitely some headwinds out there for this economy. So let's check in with an expert. Stuart Paul, U.S. economist for Bloomberg Economics. A crazy expert skier as well. What's the best place you skied this past season?
This season, I was mostly staying at home. I was stuck in New York. So every
But you do like the ski.
Yeah, every weekend I was up at Windham Mountain doing the ski patrol thing.
Ski patrol.
Yeah, about 30 days this season. Not too bad.
Nice.
See, that's how you do it, John.
Okay, what's the stupidest thing you've seen on the ski patrol by other skiers? Just go right for the stupidest one.
I mean, anything that you could think of, I've seen it at this point. I've seen people skiing into fixed objects more than like you could even. I've seen people skiing into moving objects, not even people. People skiing into rope tows. People skiing into anything under the sun that you could think of. I've seen it. Unfortunately,
it's dangerous out there.
Be careful, kids.
Yeah.
All right, Stuart. Again, the GDP print today. What did you make of it? 2.4%. How does that stack up with what you guys are modeling?
Look, the upward revision to the fourth quarter GDP print isn't anything really to write home about. What I'm really taking away from the report is what we got that's new. And we got surging gross domestic income, 4.5% annualized growth in gross domestic income, major surge in corporate profits in the fourth quarter. Now, part of that is base effects. The third quarter was pretty dismal, but the surge in fourth quarter profits is important to keep in mind. Now, we had seen for a couple years now this widening gap between GDP and GDI that made people look sort of cross-eyed at the GDP numbers, look at them with a lot of skepticism. When we see that gap closing, as we did in the fourth quarter, we could actually think, all right, maybe the economy is a bit more on solid footing. Now, as you mentioned, there are some headwinds mounting. Of course, we have tariff risk, we have every uncertainty index, economic uncertainty, policy uncertainty, spiking through the roof. At the same time, we have consumer sentiment that's tanking. So even as the economy is on solid footing through the fourth quarter, of course, there are some headwinds that a lot of folks are facing.
Stuart, clear this up for us. We were having a conversation earlier about how there's an element of PCE that also shows up in the GDP data, but it's different from the PCE that we're going to be getting tomorrow in terms of what we view as the Fed's preferred measure of inflation. But how is inflation looking in terms of the metrics that you saw from this GDP report?
Everything was fine, mostly through the fourth quarter. What's really becoming a bit of a problem is that goods inflation is really adding. It has been adding so far this year, typically because of both hedonic adjustments and because of improvements in efficiency and production. GDP is a drag on core inflation, goods are a drag on core inflation. We are seeing goods that are contributing positively to inflation so far to start this year, and that's probably only going to get worse. Beyond that, we're also seeing higher price resets in a lot of services industries, things like healthcare, hotels, and other services. So we are seeing mounting tailwinds for prices, and we do expect to see core inflation end the year higher than it started. And that's going to be a bit of a problem for folks that are betting on the Fed to cut, given the fact that tariffs are probably going to take a chunk out of GDP, possibly, even 20 basis points from full year GDP. Based on what we just saw yesterday with the tariffs implemented on autos.
Have you guys at Bloomberg Economics taken your GDP numbers down?
We have. We've taken our GDP numbers down pretty dramatically relative to full year growth 2024. We're running about half the pace.
And when did you do this? You did this at, like the beginning of the year kind of thing?
Yeah, way early this year.
So, I mean...
And what are you adjusting most? What areas do you think will be the most hit by tariffs?
Fixed investment and spending.
Okay.
So that's in addition to what we expect the dynamics to be around the trade balance, right? So we also just this morning saw the advanced economic indicators, which include estimates for trade-in goods. So folks had been expecting consumers and firms to load up on imports in January, a little bit less in February. The idea being that they're loading up now, building inventories in anticipation of tariffs that are coming down the road. The trade deficit is just getting blown out to start the year, and that's going to create material drag. And this is not just a story of gold imports. Of course, the gold story, I'm sure you guys have covered in depth. It's a reason why we're not going to get negative growth to start the year. But that front loading of imports is going to take a chunk out of GDP.
Yeah, you mentioned gold. It's up another $30 today, $3,051 per ounce, up 1%. Just extraordinary. Stuart Paul, thank you so much. Always appreciate getting a few minutes of your time. Stuart Paul, he is U.S. economist for Bloomberg Economics, expert skier. So if you're out there in Windham Mountain, be careful. He's out there watching. You don't want to get on his bad side. Let me tell you that right now. Hey, we actually got the stock market positive. S&P is actually up 7 points after a day of negative performance. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Things have turned around. Right now, we've paired the earlier losses. In fact, the Dow up 47 points, a rise of 0.1%. The S&P 500, 12 points higher. That's up 0.2%. And the NASDAQ 100 right now, after yesterday's 2% sell-off, it is 31 points higher, up 0.2%. You have the mega caps like Tesla and Amazon advancing. So that's offsetting concerns about the widening trade war. According to J.P. Morgan analysts, General Motors and Ford, their earnings likelier than ever to take a hit as President Trump's draconian tariffs, their word, and anti-electric vehicle policies hang over automakers. Right now, shares of Ford, they're actually down 4%. General Motors shares, they've extended their losses. They are down 0.8%. And Tesla shares with factories in the U.S., California, and Texas, they're up 5.2%. The market volatility hurting demand for even highly anticipated listings. CoreWeave intending to cut the size of its IPO to around $1.5 billion. The Livingston, New Jersey cloud computing provider plans to offer investors about 37.5 million shares at $40 a pop. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and it's your Bloomberg Business Flash. Nora Paul.
All right, JT, thank you so much. We appreciate that. Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well, so you can head over to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us. We're talking about the AI trade for 2 years?
It's been
I feel
a
like
minute.
it's not just been a tech thing, it's been a market thing. It's every company in the S&P 500 in their conference calls, they talk about AI. It's been going on for a couple of years. One of the ways to think about it is from the real estate perspective.
Definitely.
Yeah, we can do that. John Lynn, he does that. He joins us. He's the Chief Business Officer for Equinix, joining us here in our Bloomberg Interactive Broker Studio. John, tell us what you guys do at Equinix.
Thanks so much for having me. We're really the fundamental digital infrastructure provider of the world, building 268 data centers across 74 markets.
So you're the guys doing
So
it.
we are the guys building and connecting all of these cloud providers and enterprises, making all of that data available for AI.
And it's really interesting because I was just speaking with him during the break saying that I cover U.S. real estate stocks. I cover real estate investment trusts, and that's exactly what Equinix falls in that patch.
Okay.
This is my guy.
Makes
So
sense.
wonderful to have this conversation. But I think that there's often, people don't really, when they think about data centers, they don't often think about the people that are actually providing the real estate for data centers. So can you talk a little bit about how Equinix differs from maybe if you're thinking about a data center itself, but more or less the fact that you guys are acquiring properties and doing it that way?
Yeah, you can think about it as full scope development, where we're going from raw land, getting their entitlements, and then building the entire data center, and then operating that for perpetuity, essentially. And our focus is around making sure we're getting as many customers as possible into the facilities and really interconnecting their data flows together, which is pretty unique in the data center space, which has also been a great opportunity for us to participate in the AI growth.
What are you guys seeing here? What are you seeing from your clients, the people you talk to, about kind of their needs going forward? Because right now, I think in the marketplace, if you look at like NVIDIA stock and some of the other stocks that trade around the AI theme, 2025 has not been a good year after obviously phenomenal, extraordinary growth in 23, 24, maybe even before that. How are you viewing the growth here in AI and from your end of the business, the real estate side?
Yeah, first, I'd just say, AI is a portion of the demand for data centers, but data centers as a whole are powering everything that everybody is doing, right? Like listening to this broadcast, ordering food for lunch, trading on the exchange, et cetera. I mean, you need computers for everything nowadays, and that's still continuing. I think, digital transformation is not in the early stages anymore, but we're far from done. And so that is just a secular driver that will continue. From the AI landscape, I'd say, obviously a huge amount of interest and excitement, and I think it caught the imagination of everyone. And I'd say right now what we're seeing is like exciting use cases that are really providing durable value, right? And I think it's still early stages for many of that across the general business landscape, but that's what gets me fundamentally excited. You look at a company like Bristol Myers Squibb, a customer of ours, they're doing drug discovery using NVIDIA GPUs and like being able to increase and accelerate their time to therapeutics. That's fundamentally going to improve like human life, right? And I think that there's so many different aspects that AI can improve based on that.
So run us through some of your biggest customers. Who do you all work with?
Certainly the cloud providers are some of our top customers. We've got over 2,000 different network providers as well. The genesis of the company was really around how do we help the internet scale? And that ended up being, well, how do we help the globe's telecommunications and data flows scale? And so when you think about all of the cloud providers, how do they connect to the end customers? That's through our facilities. And then as we've built that landscape, we've ended up basically becoming the place where enterprises put their most trusted assets. When you think about then when they have some workloads that are in the public cloud, well, they're going to have some that they're going to have ownership and control of themselves. When they put those in our facilities, it lets them glue that infrastructure together and become like one super powerful environment.
And folks, Equinix is a publicly traded company. EQIX is the ticker. It's got a market cap of $81 billion. And if you want some research on it and you're on the Bloomberg terminal, Jeffrey Langbaum is my REIT analyst. He covers EQIX, so you can go to BIGO, and that's where you'll find the research on Equinix. John, talk to us about the global footprint. We know you guys are global here. Where are you seeing growth, stronger growth versus weaker growth?
Yeah, I'd say across the landscape, there's still quite a bit of demand for data center activity. You know, we're particularly excited about some of the emerging markets. Southeast Asia, for instance, is certainly growing quite a bit. But, you know, based off of a lot of the recent surge in AI and kind of the use cases set up for that, just a tremendous amount of growth in the U.S. over the course of the last 2 years.
So, I mean, when we think about your competitors in this broader landscape, there's obviously Digital Realty Trust when we're thinking about publicly traded REITs here in the data center space. And if you look over the past 5 years, we have Equinix shares that have risen 40%, but that's compared to Digital Realty that's risen about 11%. What do you think that you all are doing differently than your competitors?
I think one, it's our focus around really driving diversity of customer and like kind of having an ecosystem that we've built around the value that we're doing. And so that's incredibly important for us. Like for the AI trade, for instance, we're focusing not just on capturing some of these large training footprints, but really how do we make sure we're getting all of these AI players and exposing them to the rest of our customer base? And really, again, that fuel becomes additional growth across our entire portfolio.
Do you develop and build data centers, or do you just buy existing ones?
We develop and build.
Where are you developing and building these days? And if you say Texas or Florida.
Well, we're building all around the world. I think we've got 68 current like major construction projects across.
Really?
Yeah, so it's we're very active.
Wow. How come I've never, well, I don't.
It's a really, yeah, it's a pretty
pay
big
attention
company
to
in this.
REITs.
I mean, yeah, people don't think about REITs. You guys have to come to my patch.
I know.
It's a beautiful space.
So what is your, what are your thoughts for people who are saying that, the tech rally has run too far? Maybe we have CapEx spend that's just, bloated. There's so much spending in this space. Is this a place to be investing right now when we think about AI and in places of that regard?
I think the long-term trend around this is going to be inevitable, right? I think it's certainly we're creating durable value, not just for kind of the planet and all of our customers, but for shareholders. I think the amount of investment in the space and like the numbers are candidly like eye-watering right now, and so but a lot of that I think is just capital accumulation rather than deployment. And compared to a lot of other markets in the real estate side, it's actually a little hard to kind of overbuild just because there's so many natural like limiters in terms of the way we want to scale, from utility power availability to supply chain to kind of just the amount of trades you need to be able to build and operate these facilities. And so I think that helps kind of provide more rationality than in some real estate markets where you can throw up a shell pretty easily. You can kind of just like convert and overbuild. In this case, it's a very long development cycle, and so I think you'll see kind of some self-metering there.
John, thanks very much for joining us. Really appreciate you coming in. John Lynn, he's the Chief Business Officer of Equinix, joining us live here in our Bloomberg Interactive Broker Studio. Again, another company walking into my door here in my studio I had no idea existed. It happens every day.
Now you know.
$80 billion in market cap. And of course, I missed it. But a big real estate investment trust. And I know our BI analyst, Jeff Langbaum, he's all over. He's got research on this company as well. Looking at the markets, you got the S&P 500 up about 12 points, the Dow up 5 points, NASDAQ up 43. It's better than where we were earlier this morning. We were off about half of 1%, so a pickup there. Yields, 10-year Treasury up a couple of basis points here at 4.37%. So we'll keep an eye on that. Lots going on out there in the market. Coming up, we're going to talk more markets, and we'll get some more sense of what's happening out there with some of the economic data we got tomorrow. Inflation, core PCE data. It's what the Fed pays attention to. That means we're going to pay attention to it. Well, more coming up. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, Norma Linda sitting in for Alex Steele. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So if you want to see the video thing, we're over there. Just search Bloomberg Podcast Live. We're talking about the consumer. It first jumped out at me just a couple of weeks ago. We saw the airlines cut their forecast, lower bookings. We had some of the cruise guys do the same thing. Kohl's cut its outlook, citing a weaker consumer. So I said, we got to get Michael Halen in here because he covers all the restaurants. And talk about discretional spending, man.
We love food.
I'm a big restaurant dude. All my kids are gone, so no more cooking at home. Michael Halen joins us, senior restaurant and food service analyst for Bloomberg Intelligence, joining us, God forbid, in our Bloomberg Interactive Broker Studio in New York City. It does happen on occasion. Mike, what are you seeing out there with the restaurant companies that you've covered for so many years? What are you seeing out there in terms of the business and the consumer?
Yeah, people have been running around with their hair on fire over this consumer sentiment data. We read it every month and it's become kind of politicized. And, to be honest, it's not at the top of our list when we're looking at consumer health, right? Restaurant space is unique. We were in a restaurant recession last year.
Higher prices?
Yeah, higher prices really kind of, the low-income consumer kind of pushed back against higher prices, right? QSR has been raising their prices since 2020. The rest of the restaurant industry has been raising prices since 2021. So last year was kind of that restaurant recession. This year, we see, higher income consumers with a better balance sheet, right? S&P's up, it's down 7% since the peak, but it's up 10% versus last year. Crypto's up significantly. Home prices are still rising, right? And so, you know, for that reason, we think that this is going to be a better year, and we still think so. In the data that we've seen and from a lot of the CEOs that we've spoken to, the weakness in February was broad-based. And to me, that's less concerning. I would be more concerned if they said, listen, low-income consumer pulled back even harder. The middle-income consumer started to pull back harder. That would be more concerning to me. Broad-based tells me that, well, it was really cold. We got snow all over the country, including Sarasota, right? and New Orleans. It was the coldest January in 13 years or so, right? And the flu was really bad. So for me, it really seems that people were just sick of the weather and sitting on the couch waiting for things to open up. We have some weekly data for early March, and data got better.
So what data are you looking at when it comes to consumer health? I know you said there's some that you don't really pay as much attention to.
Yeah, for the restaurant stuff, we use black box intelligence. We get very good industry level and sub-segment level same-store sales traffic and check data. When I'm looking at the consumer, you know, it's kind of dated right now because it comes out quarterly, but I'm looking very closely at credit card balances. And so credit card balances, credit card delinquencies, auto loan delinquencies, they're still rising, but at a much slower pace than they were early last year. So it's a rate of change improvement. We're also looking at CPI declining, real incomes rising, and savings rates rising, right? And so to me, those are all good things for the low-income consumer, right? So yeah, we're not so concerned about that consumer sentiment data.
How about tariffs? How's that impact the average restaurant if they're buying food and that type of stuff?
Yeah, listen, if you're a mom and pop shop and you're importing Italian or Japanese items, stuff like that, it could hurt, right? But for most of our chains, they're sourcing a very large majority of their products in the United States. You know, Chipotle was one everyone was worried about. They're saying it's going to be like 30 basis points impact to their food.
So the block prices aren't going to go crazy?
Yeah, it's going to be like 30 basis points for the avocado prices, right? And for years, they've been, expanding beyond Mexico in terms of sourcing. One of the companies that we cover that has probably the most exposure overseas is Darden. They said they actually import about 20% of their items. Part of that is they have an Italian chain, right? But also it's just cheaper for them. And so they're working on sourcing domestically and in other places to try to ease some of that pain. So even though it's a 20% number, it can be much lower than that. So the restaurants aren't going to be impacted that harshly.
How are consumers adjusting to the price increases? Are people just saying, hey, I want to go out, I want to eat, so I'm just going to pay more even still? Or are they a bit more resistant? If so, which groups?
It's a K-shaped recovery, right? And so chains like Chili's, I mean, they just posted a 30% comp in the United States over a 5% comp. We've never seen that before for a chain that's been around as long. But they're bringing in younger consumers, wealthier consumers that are willing to spend, right? And so the top slant of the K, people with money, they're doing just fine, and they're still spending at restaurants, right? It's the people on the bottom slant of the K. It's these chains that are catering to low-income consumers, right, that are getting that pushback. Either they're going to restaurants less frequently, they're doing more shopping at the grocery store, and when they do go to the restaurants, oftentimes they're ordering off the menu, or they're ordering less drinks, appetizers, desserts, and stuff like that.
Hey, Mike, how about labor, real quick, 30 seconds? Bus boys, dishwashers, migrant labor. Migrant labor's cut off here. Is that going to be a problem for some of these restaurants?
Well, it's a concern for the restaurant industry in general. Most of our companies are compliant.
They are, okay.
Right, and so they're not really too worried about it.
Okay, interesting stuff. So what I learned from Mike, it's not just the restaurant business. Reading his research, you recognize that you've got casual dining, you've got quick service dining, then you got fine dining, then you got family dining. You got to break it up. And it's different stuff. I don't know.
So niche.
I don't know. But anyway, read Mike's research. You get everything you need to know about the restaurant industry. Michael Halen covers the restaurants for us. We appreciate that coming into our studio. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence beginning in moments. S&P 500 up 17 points. The Dow up 6. The NASDAQ up 72. Hey, we'll take that. It was negative earlier this morning. This is Bloomberg Good Morning.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Oliver Crook, Bloomberg Europe correspondent on the Ukraine summit in Paris. Any headway there? And then we're going to check in with head of Bloomberg's Explain and Games, Joel Weber. Discusses Bloomberg.com's new quiz, Pointed. It launches today, actually. How cool is that? Terry Spaeth, founder and CIO at Zuma Wealth, to discuss her outlook for the markets. And then we're going to check in with Herman Chan, Bloomberg Intelligence Senior Analyst. He covers all the regional banks. We usually only talk to Herman when some of the regional banks are blowing up here, but he's got some other stuff to talk about here. So we'll talk to Herman Chan. He's the expert on the regional banks in the U.S. for Bloomberg Intelligence. Right now, let's kick it all off with Charlie Pellet.
Hi, thank you very much. And here's what's going on, Paul Sweeney and Nora. We have got the Dow, the S&P, NASDAQ, all pushing higher. I tell you, the Dow's been fluctuating between gains and losses, but right now we're looking at a 19-point advance on the S&P, up today by 0.3%. Dow Industrials up 28 for the Dow, a gain of 0.1%. NASDAQ up 81. The NASDAQ Composite Index gaining 0.5%. 10-year 4.38%. The 2-year 4.00%. Gold up $37 the ounce, 3,056 on gold, up 1.2%. West Texas Intermediate crude up 0.3%, 69.84 a barrel. Bitcoin just about flat on the day, down less than 0.1%, 87,240 on Bitcoin. President Trump signing a proclamation to implement a 25% tariff on auto imports and pledging harsher punishment on the EU and Canada if they join forces against the U.S., expanding a trade war and triggering threats of retaliation. So given all of the uncertainty over tariffs and markets, how's an investor supposed to plan, and what do you start to tell clients? That question this morning for Adam Coons, Chief Investment Officer at Winthrop Capital Management, who was a guest right here on Bloomberg Intelligence.
I think we all know that Wall Street obviously likes nothing less than uncertainty. You can get bad news, and if it's expected, it doesn't really do much. But uncertainty will drive, this higher volatility, higher risk premiums. But like I said, we see this kind of as a 2025 story. Weather this storm, and fundamentally there really isn't a lot that's changed. So that's really, as boring as that is, that's the story we're sticking to.
Adam Coons sticking to the story with Winthrop right here on Bloomberg Intelligence. Automakers lower, GM down 6.7%, Ford lower now by 2.4%, Stellantis down 1.6%. Stay with Bloomberg for the very latest on auto tariffs and in general any developments out of Washington. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Norma Linda sitting in for Alex Steele today. I'm Paul Sweeney. We are live in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast Live. That's where you'll find us. As Charlie was just reporting, kind of a mix down the screen, a little bit of a lift to the broader indexes. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Isabel Lee. Isabel, what are you looking at?
Automakers. Share in U.S. automakers are down after President Donald Trump hit auto imports with a 25% tariff starting next week. Peers in Europe are also declining. And we have analysts saying Ford and General Motors are set to see the biggest impact. Stellantis and Tesla, they say, are in a better position. And you see that today. Ford is edging lower by 2%. General Motors also edging lower by nearly 7%. Stellantis is actually just 2% edging down, but Tesla is up around 7%. So why is Tesla edging higher? Because Tesla has large factories in California and Texas. So they churn out all the cars that it sells in the U.S. So it insulates Tesla to a larger degree. But still, I feel like this sector has been whiplashed by all these tariffs. And I mean, it's really imagine if you buy a car, it'll be tens and thousands more expensive. I mean,
That's why I bought one last Saturday.
yeah, this is why I take the subway.
A Honda CRV apparently, but I
Yeah,
also
hybrid.
saw. Okay, look at you for the future.
Boy, isn't that interesting how this policy benefits
Yes.
Mr. Musk? Okay.
Yeah, but
There you go.
UBS also said that they believe that Tesla and Rivian could fare better. To your point, Isabel, as 100% of their production is here in the United States.
And rental cars are edging higher. Like Hertz, for instance, it's, let me see.
Oh, yeah, I got to rent a car.
Yeah.
Okay.
What else are you keeping an eye on outside of autos?
I was trying to. GameStop. So this is interesting because yesterday it was a different thing and today it's different news, but we have shares edging down by 7% today. And it was down by as much as 12%. That's the biggest intraday drop since September 11. So we have GameStop announcing that it intends to offer $1.3 billion in aggregate principal amount convertible senior notes due in 2030.
Nice.
That's a big mouthful. We have Wedbush analyst Michael Patcher saying he expects the offering to, quote, fall flat. So he finds it difficult to understand why any investor would pay more than twice the cash for the value of GameStop to potentially convert it into Bitcoin. So it's like a convoluted trade.
Yep.
And-
but they're playing on the momentum of the stock. I mean,
Probably.
it's a
And
neat stock.
yesterday, remember, GameStop's board approved the plan to add Bitcoin as a treasury reserve asset. And yesterday, shares were edging higher because some investors were cheering the move. So lots of whiplash there on GameStop also.
I'm curious if is this still sort of a meme stock? Is this still retail trader territory? I guess we got to ask Bailey Lipschultz next time
Bailey's
he's here.
the guy. He's the guy.
He's our
the
guy
meme
for
stock
that.
guy. All right, 23andMe, what's happening there?
Shares are jumping as much as 147%. Now it pared back some of those gains, but it's still up a whopping 85%. So basically, the company was given permission to sell their customers' medical and ancestry data. So this is considered the most valuable asset in their insolvency case, and now they're the bankrupt genetic testing firm. And we have a bankruptcy judge setting the deadline of May 7 for definitive offers. So the sale of sensitive data has sparked anxieties. All over my LinkedIn, I see people saying, delete your 23andMe
Right.
account, etc.
Yeah.
I mean, imagine you do
Yeah.
this test and you feel like your data is going to be safe, and now it's not. But it's
Yeah.
good news
Right.
for the company. I mean, shares are really soaring.
Okay.
What's down 71%
Yep.
this year?
It's crazy. It's been all over
My
the place.
goodness.
Yeah, so we'll keep an eye on that. Isabel, thank you so much. We appreciate that. Isabel Lee, cross-asset reporter for Bloomberg News. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. Let's turn our attention to geopolitics. Ukraine-Russia peace process beginning to take hold a little bit. What roles different countries and different regions of the world are playing remains to be unseen. Today, we had a group of European leaders meeting in Paris. Let's get the latest reporting on that. Oliver Crook, Bloomberg Europe correspondent. Oliver, who met in Paris today, and what was the discussion today?
Yeah, it's hard to keep track of all these sort of different summits because it feels like every week we have a summit of different kind of EU-weighted leaders and not really clear kind of what the organization is. This is, we should say, a meeting of what is the so-called Coalition of the Willing. This is a sort of group that has been assembled by Emmanuel Macron and Keir Starmer to basically give sort of security guarantees, but also the sort of enduring support for Ukraine, particularly in the face of a Trump administration in the United States that has kind of walked away from the sort of collective process in terms of negotiations and talking with the Europeans and really ice the Europeans out. So this is really the effort of the Europeans to kind of come up with their own proposals, their own ideas, and go forward with basically what they can provide to Ukraine in the future, but also potentially to Donald Trump, right? What is the menu of options that the Europeans themselves can furnish in order to get a seat at the table and have their voice heard at the table? That is actually the big question. That is something that basically they have failed to do so far. I mean, I just left the press conference with Emmanuel Macron, who was basically making this point, reiterating this point, that basically there's a lot of things when you think about kind of the security guarantees and the security of Europe that are now out of the Europeans' hands. And this is their collective effort of trying to basically take control of those things ahead of what is going to be a very sort of difficult few months for the Europeans.
I mean, how is the United States fitting into these conversations right now during the summit?
Well, what's interesting is we understand that Emmanuel Macron spoke with Trump sort of last night. We didn't get a whole lot of detail on that sort of call. So they seem to be in sort of regular contact. But the impression that I get when I speak to a number of these European leaders, and I've interviewed a few of them over the last couple of weeks, is that they're kind of in the dark in terms of what the U.S.'s approach is going to be. They know, broadly speaking, what the U.S.'s goals are. We know that Donald Trump basically wants the war in Ukraine to end. He seems to be a bit more sort of willing to bend towards Russia in order to get that. The question is, how far is he willing willing to sort of bend. And for the Europeans, again, they have just failed to break through into these negotiations, into these conversations, and they're trying to get a sort of read from the United States in terms of what they want from the Europeans. One of the things that they're kind of guessing, as far as I can tell, is that they basically are trying to assemble these sort of reassurance troops, right? This is the idea that there could be a brigade or a sort of brigade of potentially thousands of European troops that could go into Ukraine after an eventual peace settlement in order to be basically a deterrent force to the Russians and basically a part of the security guarantees. But as far as I can tell, the Americans have not explicitly asked for this. And this is something that, again, the Europeans are trying to do on their own initiative, but could very easily be rejected by the United States, depending on how these negotiations go at the top level with Donald Trump and Vladimir Putin.
Does anyone in Europe have a strong line of contact or communication with Vladimir Putin, or is it really this Ukraine situation is likely to be a bilateral discussion between Presidents Trump and Putin?
Well, listen, there are a few European leaders that have some sort of contact. And the main one is going to be Viktor Orban in Hungary, who basically stands in opposition to everything that the EU is trying to do in terms of its actions against Russia. So he's not really so much a sort of go-between between the Russians and the Europeans. You know, they're not really seeing eye to eye, Viktor Orban, with the rest of the Europeans. I mean, Emmanuel Macron kind of tried early on to have this sort of access point with Putin. It didn't really go anywhere. But at the end of the day, the problem is not necessarily the access to Putin. Well, I mean, it is the problem of the access to Putin, but it's really access to Trump. And really, Trump is not a sort of multilateral thinker. He's saying, basically, this is going to be the U.S. policy. If you don't like it, then we're walking away. And basically, everybody's got to fall in line. That has been his approach, not just with Ukraine, but also with the Europeans more broadly.
What's the energy been like at the summit? Is there real progress being made?
Listen, I think that what for all of the journalists collecting outside, when you're sort of sitting out there and you're talking to each other, you say, like, listen, what are we actually trying to get out of here? What concrete steps are we going to get from these leaders? And it's very difficult to get a read on that. And at the end of the day, we didn't get anything massively concrete. I think that sort of strategically, when you step back at what this sort of meeting is, this is kind of the beginnings of discussions for the Europeans of a NATO without the United States in it, right? This is talking about architecture for European defense in the eventuality, not necessarily that the US steps away, but that basically to prove to the United States that Europe can stand on its own 2 feet. For that to happen, there's going to be a lot of meetings where things don't happen because there's a lot of consensus building that needs to happen between these nations. When you think about potentially deploying troops to Ukraine, that is not something that these 31 nations at all agree upon. There are a few of them that are willing to step forward and do that. But again, these are all of the sort of discussions that need to be thrashed out over the next weeks and probably the next months ahead of this NATO meeting, which is going to be absolutely key in June. We're expecting Donald Trump to come. And, you know, in some ways, this is potentially sort of an audition for NATO to kind of prove its relevance to the United States and say, hey, listen, we are actually bringing something to the table.
Oliver, thanks so much for joining us. Oliver Crook, European correspondent, Bloomberg News, joining us from Paris on some of these meetings taking place amongst European leaders as they think about how to respond to any peace between Russia and Ukraine. I don't know about you, but I crush the trivia games. Like, you get them on like every Friday, like from the New York Times, or even on the Bloomberg terminal.
I was gonna say, you play them on your computer or on your phone.
Phone.
Okay.
I crush it because maybe it's because I'm in the news business.
Exactly.
And I consume this stuff
We're good at these
all
things.
day, every day. Head of Bloomberg Explains and Games, Joel Weber, joins us here in our studio. Bloomberg's.com's news quiz called Pointed is launching today. Joel, tell us about that.
Excited to be here.
Yay.
Thanks for having me. So yeah, we love news quizzes. We know our readers love news quizzes.
Yep.
And we came up with a twist of one, and we're calling it Pointed, a twist on one called Pointed. And as you'll discover when it publishes tonight at 6 p.m. in New York, there's this little clever twist, which we're going to, I'll tease you about it.
Thank you.
It's not just about what you know, it's about how confident you are in your answers.
Okay.
So maybe I'll be more precise and say there's some wagering in there.
Okay.
So you have to put some points down on the board.
Okay.
And not only are you wagering points, but then you can also use leverages, which feels like the very
and that's what I mean. Everybody with the DraftKings and all this stuff, people are so adept at that now.
Let's amplify your confidence. Catch is you can lose points in this game if you get it wrong, and if you bet big and leverage that, you might blow yourself up in the process too.
So can we find this daily, or
we're going to do it every week?
Okay, great.
It's going to publish on Thursday nights in the U.S. It will be part of our Bloomberg Weekend kind of package, and I'm really excited about it in part because we brought in a trivia master to write the questions.
Wow.
So there's little breadcrumbs kind of sprinkled through there that are meant to be these little clues and indicators, but we found it to be quite hard so far. So consider the gauntlet thrown down. If you find that a question seems maybe too hard, you could hedge is one of the options, which reduces your exposure. So a lot of thought went into this, really trying to make it be as distinct in Bloomberg as possible. And at the very end of the performance of your round, you get a graphic that you can share out that shows your performance and how you compare with a bunch of other smart people who will no doubt be competing with you.
Now, this is in addition to the Quiz Go.
I was going to say, on the terminal.
So that's a terminal one, and we spoke with them really closely, and we're big collaborators with them, love them. We wanted to have something that was a little bit more outward-facing and accessible at Bloomberg.com/pointed, and that will be where it will be every week. So we coexist. One is much more of a terminal product. The other is, part of what we're doing with Bloomberg.com.
So for Bloomberg.com, if we're going to go on to Pointed, do you have to be a Bloomberg.com subscriber, or does everybody have access?
It's free to everybody, but there's a couple bells and whistles that you'll have to register through the site, and then you'll get a glimpse of historical performance over time as one of the things that we'll unlock, as well as how you stack up with everybody. Like if you want to see those little nuggets, you're gonna have
our
to
favorite.
log in. But for Bloomberg customers, obviously that's free. You can do it, and we'll also have it on the terminal as well.
Our Bloomberg.com people are just killing it.
We're trying, and this is one where I can't wait to see how you both score.
Oh,
and see
maybe we might be able to see.
Weekly competition.
might ask that we do a little head-to-head one of these days, and we'll see how well you perform.
Oh, I'm excited.
All right, Joel, thank you so much for joining us.
Thanks
Joel
for having
Weber, he's head of Bloomberg Explains and Games, joining us here in our Bloomberg Interactive Broker Studio. And Pointed, the quiz comes up on Bloomberg.com Thursday. Today goes live at 6 p.m. Wall Street time. So Bloomberg.com/pointed, and that'll get you there. So, and again, I don't know. I'll go up against anybody.
You're ready to go.
Yeah, I feel pretty confident. So, but we'll see how it goes. Looking at the markets here, we've turned a little bit of green out there. Charlie will get to it, but S&P up a little bit. But again, we started the day really in the red. People trying to digest that 25% auto tariff and kind of what that means, not just for the auto companies, but maybe for the broader economy. Because you get those parts from just everywhere. It goes into a car, 2,000 parts going into a car.
And people were expecting this, but I think this magnitude is what's really throwing people off. So either people had their estimates in ahead of time, or people are now scrambling to figure out what that means for autos.
Yeah, and and I think the next date, I guess, or one of the important dates for this whole tariff discussion, which seems to be one of the issues front and center for this market broadly defined, has been April 2nd. We'll get those reciprocal tariffs, and I guess a lot of folks in the market are saying, who's going to be subject to these tariffs, to what degree,
all the details,
maybe for how long, that type of discussion. So again, if you weren't adept at this whole tariff thing, I suspect you are now, or getting there, because that is certainly a policy of choice for this administration, and we'll have complete coverage of that as it develops going forward. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks pushing higher in this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Right now, we are looking at the Dow Jones Industrial Average holding on to a gain of 5 points. Little change, but higher nonetheless. The S&P up 14, up by about 0.2%. NASDAQ up 48 now, up by 0.3%. The Dow, by the way, just turning negative again, down now by 3 points. The 10-year, 4.37%. The 2-year, 4.00%. Spot gold surging $35 the ounce, now at $3,055, up 1.2%. West Texas Intermediate crude up 0.3%. And Bitcoin showing an advance now of 0.1%, 87,409 on Bitcoin. Bottom line here, stocks erased earlier losses, so several mega caps rebounded, and data showed faster than estimated economic growth. That is tempering concerns about a widening trade war after President Trump pushed ahead with tariffs on automakers. Walmart de Mexico, the local unit of the U.S. retail giant, plans to invest $6 billion this year in its Mexico operations to add more locations. The expansion will be creating 5,000 jobs. Walmart shares are up today by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. We have Norma Linda sitting in for Alex Steele today. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. Go check us out over there. I'm not hearing, we were talking so much just recently about American exceptionalism, the economy doing much better, the U.S. economy doing much better than the rest of the world, namely Europe, maybe even China as well. Not hearing that so much these days. Now I'm hearing about concerns about the economy, concerns about the consumer. Meanwhile, Germany says they're upping their infrastructure and military defenses. People are talking about re-inflating the European economy. Things have changed in a couple of months, that's for sure. And that's certainly been reflected in the financial markets here as we try to suss through all this data and policy coming out of Washington, D.C. Some folks have to do this stuff for a living, like Terry Spath, founder and CIO of Zuma Wealth, joining us from Malibu, California. Hey, Terry, how's your worldview kind of changed, your investment view changed, if at all, over the last 2.5, 3 months?
Well, good morning, Paul and Nora. It's always fun to be on your show. I feel like you take the hard-hitting financial media and just make it a lot more fun. So thank you for having me on this morning in a market that hasn't been a whole lot of fun because, as you hit on, that U.S. exceptionalism bubble, which characterized every theme we heard at the end of 2024, certainly burst. And while the U.S. stock market it's clearly in a downtrend, we don't expect a recession here in the U.S. We don't expect significant further drawdowns in the U.S. stock market. We think this uncertainty is clearly annoying the markets, and maybe the administration will impose tariffs, maybe they won't. We saw they did yesterday. But investors want to see the White House choose one and really stick with one to get rid of some of that uncertainty. So this S&P 500 drawdown in the averages that we've seen is not unusual in any given year. It's uncomfortable, but we're not alarmed. We're still very focused on some of the good things that we're seeing in this economy. So, Paul, that's what we're focused on, is some of the good data. The hard data is good, the soft data is bad. And so we continue to be a little bit constructive, but are also diversifying into some of those other markets that you highlighted, in particular in Europe and Japan.
So, Terry, you said you all don't necessarily expect a recession, but you did point at the fact that there's still a lot of uncertainty. We ended 2024 up more than 20% in terms of U.S. equities. Do you think that the rally in U.S. stocks still has more room to run, or are we kind of hitting a wall here?
Well, we've clearly run into a wall right here. But again, we're not alarmed when we see kind of a 10% drawdown in the S&P 500. We don't like it. We don't like riding through it. But some of the things that we're focused on, Nora, is first, the soft data looks terrible. Consumer confidence is not good, and that's not good. But actions speak louder than words, and we're seeing strong hard data. Housing starts are still good. Building permits are still strong, a lot more. And those are all better than expected. So the action is holding up better than how people feel, if that makes sense. But there's other areas that we're looking at as well. The high yield corporate bond market, the spreads for that over investment grade bonds have not widened very much this year. That's a positive sign for what the bond market is seeing going forward in the market this year. The VIX is still a manageable level. So what we're looking is, what do we do in this choppy market? And we've pared back US stocks, but we're also looking at Europe. We're also looking at some alternative investments like gold. But to get to the final answer on your question for the US market this year, we do think that we'll end up higher this year than we started. So we think that we're going to see a recovery at some point in 2025.
Well, of course, the latest discussion has been tariffs, and especially today with the 25% tariff on autos. How are you all viewing tariffs and what that means for investment strategies, especially since we hear a lot of people who are paring their expectations for earnings estimates?
Well, I mean, the simple sort of textbook answer to that is a tariff is a tax on goods. And so that makes things more expensive. I think the longer term view, if we're to get a little bit less myopic, is that does that shift how people spend? Does it shift where the jobs are in the US economy? Those are longer term. In the shorter term, everyone is talking about tariffs. People that never even knew what the word tariff, that didn't study economics in college like I did, are asking me about tariffs. And so that's clearly defining of how people are viewing what's going on this year. And I do think that the way to kind of mitigate that choppiness in the near term is to look to places like Germany, for example, where they're increasing spend. It's a relatively cheap market. There's a political shift that's helping that economy. And so to balance out the choppiness that we're seeing here in the US from the tariffs and from the immediate hit and hurt that causes to the US economy, there's other places in the world where we can balance out that risk and hopefully end up with a good portfolio for clients.
So, Terry, you mentioned investing in Europe, maybe upping the allocation there vis-a-vis the US. Is that a trade, or is that something longer term, do you think, the attraction of European markets?
Well, that's really an interesting question that we've been wrestling with. It's been such a terrible place to live for the past 10 years. And I mean Europe and European stocks. It's just underperform, and to the point where no one's even paying attention to it. But that's really shifted this year when you see that relative outperformance. Did it get so cheap in Europe that it's just too cheap to ignore? Are there fundamental changes that are going on? We think there's fundamental changes going on, particularly as I mentioned in Germany. I do think it's a generational shift that we're seeing in how they're willing to spend money in that country. And I do think that combined with cheap valuations could mean that this is more than a trade, that this is something that lives in the portfolio for quite a while. So right now, we're holding on to that for what we think is going to be a medium to longer term allocation.
Terry, thank you so much for joining us. Really appreciate it. Terry Spath. She is a founder and CIO at Zoom Wealth in Malibu, talking about these markets here. One of the big stories on the Bloomberg terminal today, really interesting, talk about the U.S. banking system
Thank you so much for having me.
And how U.S. banks finance their own competition to the tune of $1 trillion. I'm talking about providing some financing to non-financial kind of institutions, think private equity, private credit, that kind of thing. Herman Chan joins us here. He's Bloomberg Intelligence. He covers all the banks. Herman, what are the banks, the U.S. banks, doing in terms of, lending to maybe some non-traditional financial institutions like private equity, like hedge funds? How big of a business is that?
Yeah, it's really interesting because the Federal Reserve has just recently required banks to disclose more on lending to these non-bank financial intermediaries. And what we've seen is that some banks that we cover, like Bank OZK, Western Alliance, that could basically mean over 50% of their commercial loan portfolio is to the shadow banks. So it's an area that is growing, where you see traditional businesses are a bit wary in this current macro environment with still elevated interest rates, a lot of uncertainty with the economy, but lending to non-bank financial institutions is an area of growth.
Mm-hmm. So explain shadow banks. What is that topic?
So it's interesting. The regulators have broken out shadow banks, non-bank financial institutions as institutions like mortgage lenders, private equity, private credit, financial institutions that lend but don't have a depository component to their operations.
So I kind of view these, what do you call them, NDFIs?
Right.
So non-deposit financial institutions, aren't they competitors to the banks themselves? So why am I lending them money?
They are increasingly competitors. What we have noticed is that the participants that are borrowing from these non-bank financial competitors are a bit more riskier, and so they are viewed as more high yield, and these are areas that the traditional banking institutions don't want to lend money to. So a way to get around that is to lend to the sponsors, and that's something that's happening. What's interesting is that the banks themselves will say they're not competing with the private credit operators head to head, but we do see a bit of a hollowing out of the traditional business borrowers, because if you have private equity coming in and leveraging the balance sheets of the companies they borrow, inherently these companies are not going to be good customers for a traditional bank. So a lot of these customers continue to go away.
So I'm hearing that industry watchdogs are worried about the increase in bank loans to these NDFIs.
Mm-hmm.
They're thinking that it can make banks more vulnerable to liquidity or credit shocks.
Mm-hmm.
What have been the developments there?
Yeah, well, it remains to be seen, right? So it's continuing to be a larger and larger portion of the loan portfolio for these banks, but it's still, in the grand scheme of things, a lot of the banks remain very diversified. But we haven't seen a downturn with such a fragmented market where a lot of the lending is going outside of the traditional banking system. So it's something that continues to be monitored and something that we're assessing quarter by quarter.
Do you like this business as an analyst? Do you think it's a good business for some of these banks?
Right now, it's a way to demonstrate some better growth. We just looked at the numbers before joining, and traditional commercial and industrial lending, it's about, in the first quarter, it's about 0.5 percentage point growth. If you look at the lending to non-bank financial institutions, it's up 5.7% in the quarter. So if you have a bit more exposure to that, you can juice your growth, which in this current environment, you're not seeing a lot of activity there. But again, you need to have a very diversified portfolio.
All right, Herman Chen, you're the expert here. We're going to go with you. Herman Chen, senior analyst for U.S. regional banks. We usually talk to Herman when something's blowing up, but we want to talk to him about
going crazy.
when something's going right. Here's a new source of potential loan growth for some of these banks out there. Herman Chen, senior analyst, covers the regional banks for Bloomberg Intelligence, joining us here in our Bloomberg Interactive Broker Studio. S&P 500 for Lisa Abramowitz. It's unched. No change in the S&P 500. How about that? We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We begin with the developing story headline right now on the Bloomberg Professional Service. The U.S. has paused contributions to the World Trade Organization. That, according to Reuters, right now we have got stocks selling off. The Dow, the S&P, NASDAQ all back in the red. Last update, we told you stocks were higher. Right now, big turnaround with the S&P lower by 5, down at 5707, a decline of 0.1%. The Dow also giving up earlier gains, now down 128, down 0.3%, while the NASDAQ Composite Index down 15, drop there of 0.1%. NASDAQ 100 Index down 0.2. Russell 2000 Index of small cap shares also lower today, down 0.3%. 10-year at 4.36%. The 2-year currently yielding 3.99%. Gold up $39 the ounce, up 1.3%, $3,058. West Texas Intermediate crude up 0.1%, $65.75 a barrel. And Bitcoin right now down 0.4%, $86,905 on Bitcoin. The U.S. government has lifted its estimate of U.S. economic growth. And with that story, here's Bloomberg's Vinny Del Giudice. And we'll get to Bloomberg's Vinny Del Giudice just a little later on. Donald Trump's planned tariffs on auto imports will hurt car makers around the world and push up prices for U.S. consumers. Among the many losers, one winner stands out. That is Elon Musk's Tesla. The EV maker has large factories in California and Texas that churn out all the cars it sells in the U.S., insulating it to a greater degree from Trump's new levies on auto imports and key components. Tesla shares today, they are up on a down day now for the rest of the market. Tesla up by just about 4%. Recapping stocks lower, S&P down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Norma Linda sitting in for Alex Steele here today. I'm Paul Sweeney. We're live from the Bloomberg Interactive Broker Studio in New York City. We're streaming live on YouTube as well. I want to bring in one B. Ritholtz, Barry Ritholtz, host of Masters in Business on Bloomberg Radio. He's also got a day job. He's the chairman and chief investment officer at Ritholtz Wealth Management. And he is once again authoring another book, How Not to Invest, the ideas, numbers, and behaviors that destroy wealth and how to avoid them. Barry, thanks so much for joining us here. I'd love to talk to you about this new book, How Not to Invest. What are some of the key takeaways you found?
Well, just 3 little things we have to not do to be better investors. Stop believing in things that are not true, understand basic math, and don't engage in self-destructive behavior. If you can just avoid those 3 tiny little things, you're much better off.
Well, Barry, how do we do that right now? What is your takeaway from what's going on in the market and how investors should be thinking about it?
So, we get this question from clients all the time. All this chaos is very disconcerting. How should we be thinking about this? And, you have to separate the signal from the noise, but you also have to be aware of your own time horizon. So what are we going to end up with tariffs? How significant is it going to be? If you recall, the first time Trump was president, right from the election straight up until inauguration, he was tweeting at companies, he was tweeting at CEOs, and in the beginning it roiled markets, and then eventually everybody kind of, all right, that's just how he is. Is it affecting revenue and profits? No, okay, we can ignore it. Trump 2.0, hey, maybe this is affecting revenue and profits. It certainly seems to be having an impact on, we thought we were getting tax cuts, deregulation, and a business-friendly environment. This doesn't feel so business-friendly. We need some clarity as to, should we do some CapEx spending? Where do we build our next plants? Where do we hire people? The lack of clarity about not the end goals of the president. I'll let the politicians argue about that. But the way it's being implemented, the way it's being communicated, it just seems so random and chaotic and confusing that it's just causing a lot of people to throttle back a bit. We don't see this explicitly in the hard data, but it's pretty clear in the sentiment data, consumer sentiment, expectations about how easy it is to get a job. And then what really concerns me is the most recent CFO survey, where they're basically saying we're going to cut back on our CapEx spending and investing. That sort of soft sentiment data could lead to actual decrease in consumer spending, corporate spending, and an economic contraction. So the advice to clients are, hey, if you're not retiring 5, 10, 15 years, if you don't need this, if you have a newborn baby and you're putting money in a 529 and they're not going to need it till they're 17 and go to college, well, don't worry about it. But if you're retiring over the next 1, 2, 3 years, and you're concerned about all this volatility, and we certainly know about a sequence of returns challenge, it's always bad to start a retirement if the first couple of years are negative, well, then maybe you have to think about having a reduced exposure to equity, or at least a more diversified exposure. So, you know, the MAG 7 or the LAG 7, as we've been calling them, as Callie Cox, my market strategist, likes to call them, that sort of exposure, maybe you want to just be in a much broader index, less concentrated, less subject to all of these ups and downs.
Barry, I know you've spoken about in the past. I know it's in your book. You talk about trying to avoid the unforced errors that investors make all the time. Give us an example of an unforced error that we should really try to avoid.
Sure. So there's a great study that was done with all this anonymized retail investor trading activity. And the clever aspect of the study was, since we're talking about politics, they looked at zip codes by how they voted in a presidential election. And then they looked at those zip codes following the presidential election. And it turns out that if your guy doesn't get elected, well, your zip code sells off equities. They move into cash or bonds. And it doesn't matter if you're a Democrat or a Republican, if you're in a blue state or a red state or any of the zip codes in between, your guy, the political outcome is not what you personally were hoping for. And so you move away from equities. So Republicans did this when Obama was elected, giant stock market rally over the next 8 years. Trump gets elected in 2016, Democrats do it, giant rally over the next 4 years. Biden gets elected in 2020, I think you could see the pattern that's happening here. So just because the president isn't necessarily your first choice, isn't, assuming you're not retiring in the next, 24 to 36 months, that's not a reason to make major changes in your portfolio. You have to think beyond this election. Probably, we're going to be seeing some increased turmoil and some lack of clarity, at least for another year. Maybe things change when there's a midterm election. Historically, the party that holds the White House tends to lose seats in Congress, and this is a razor-thin margin. So perhaps that will pull everybody back to the middle, to the center of the political spectrum. My favorite thing about the Biden administration is that I really didn't have to pay attention to them. They were just doing whatever they did quietly. This president loves attention, loves to make noise, loves to stir things up. That's who he is. That's who the American people elected. Hey, go stir up the pot. And he's doing that. I'm always surprised when people get what they want and then they're kind of surprised. Well, we said stir up the pot, but not this much. Well, right. Yeah, he told you he was going to do tariffs. He told you all these things, and he's doing them.
Barry, always good stuff to check in with you. Barry Ritholtz, host of Masters in Business on Bloomberg Radio. He's also the chairman and chief investment officer of Ritholtz Wealth Management. Also published a book just came out, How Not to Invest: The Ideas, Numbers, and Behaviors That Destroy Wealth and How to Avoid Them. So good stuff out there. Barry Ritholtz getting a few minutes of his time here. The markets were opened up negative, turned a little bit positive, and now we're back into the negative. The S&P's off 10 points. The Dow's off 150 points. That's 0.3%. And the NASDAQ off about 37 points. That's 0.2%. So no real direction here so far in today's morning session of the trading. We'll have more coming up. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Paul Sweeney and Alex Steele on Bloomberg Radio.
All right, the big take story here is a good one. You know we love the big take stories. Why? Because they're really cool topics. They get some really good reporters to kind of staff up these stories. A lot of resources. They deep dive, and they come up with some great stuff. Oftentimes, they have really cool graphics, which makes it easy for people like me to deal with it. And this is one that came right to the top of my list because it's about Wall Street and M&A. Banker dreams of M&A riches are getting dashed in the Trump era. What happened? Bailey Lipschultz joins us, equities reporter for Bloomberg News, as well as Michelle Davis, senior M&A reporter for Bloomberg News, both joining on a Bloomberg Interactive Broker Studio. Michelle, I want to start with you because we see Bailey all the time. But Michelle, M&A, I thought this was going to be animal spirits, deregulatory president, FTC, Department of Justice are going to allow deals go through, pro-growth administration. What happened?
You know, if you look at the data, it's actually not worse than last year. It's better than last year, but it feels horrible because everyone was expecting it to be amazing at Bonanza. And what happened is there's just so much uncertainty with headlines coming out every day about will there be tariffs, won't there be tariffs, what's going to happen to the economy. If you're a CEO planning on betting the farm on some big deal, it's really hard to figure out how that's going to impact, how these policies are going to impact your company and whether you should make these long-term bets when you don't even know what the world's going to look like tomorrow, much less a year from now.
Mm-hmm. And with all that uncertainty, how is that impacting the IPO market for you, Bailey?
Well, we are, to Michelle's point, we are up better than we were last year. We have about $10.5 billion raised quarter to date. So that's a step up really going back until 2022. But to Michelle's point, there's so much uncertainty. So right now we have CoreWeave getting ready to price tonight.
Mm-hmm.
If you're meeting with investors and talking up, 2 or 3 years forward looking and expectations and pointing to similar comps, well, if your comps are down 10% in the last week, strictly because there's so much uncertainty and investors are going back risk off, it makes pricing those deals more difficult. And very much like when you're trying to find a seller for a company, if you're trying to take your company public and a week ago you thought you were worth $30 billion and now you're worth back closer to 20 or 23, it gets harder to pull the trigger.
So what do we know about CoreWeave?
CoreWeave.
It's a Jersey company, by the way.
It is in
New
Livingston.
Jersey. Yes.
I go to the shop right in Livingston, New Jersey. That's my neck of the woods. This is a company that essentially it's a cloud computing provider, basically rents GPUs, big partnership with NVIDIA. They were on the road. The expectations about a month ago was to sell about $4 billion worth of stock. Now penciling in $1.5 billion. Looking at a step back in terms of valuation pretty sharply. NVIDIA going to shore up the book for that at about $250 million. But there's just so much uncertainty. And this is kind of a company that's going public and willing to go public right before Liberation Day or April 2nd, however you want to view it. And it's untimely. And when you talk to investors, you're going back out on the risk spectrum. You have AI uncertainty. You have Joe Tsai coming out saying that maybe there's too much capacity and people are getting jittery.
Interesting. I see you quoted Tom Miles in the story. I know Tom Miles. He was a kid when I knew him, literally a kid.
Wow.
Now he is global co-head of M&A at Morgan Stanley. So another successful Miles, and there's like a million Miles people out there. Michelle, what are the Tom Miles of the world? What are they saying? These bankers who really have their finger on the pulse of the M&A landscape. What are they saying about kind of their expectations?
Deal makers are always going to be optimistic. Deals beget deals. And so what I've been hearing a lot of is, it's slow right now, but there's a lot in the works and it's just taking longer. And, maybe things are on pause, but in the back half of the year, the expectation is that there will be, more of this pickup. Last week or 2 weeks ago, we saw Google announce a $32 billion acquisition of Wiz. I mean, that's a really big deal in a sector that everyone had expected to still be in the regulatory crosshairs. So to see Google feel comfortable announcing something like that means, there's still appetite to do some of these deals. People are going to be looking at that as kind of a test case to see how it's received. And if it goes well, if it's approved, then we could see the floodgates open.
And that's where it gets interesting too, though, with a lot of these IPO candidates, Michelle, are dual tracks. So when you're looking at the pipeline, you're talking to lawyers and bankers, the question is, what multiple do you want to go out in an IPO and what multiple would you be comfortable getting bought at? I'm interested, just with your reporting, how are those conversations playing out? And are people leaning into, sales strategics or private equity?
Well, Wiz was one of those dual tracks where they ended up ultimately selling. Maybe if they'd held out, they would have been able to IPO at a higher valuation, but the market just isn't clearly there for IPOs at this moment. And the lack of the IPO market is also what's holding up a lot of the PE deals, because that's the the obvious exit for them. And so a lot of these processes, 2025 was hailed as the year PE was going to come back, but someone was telling me an anecdote the other day about how they brought a sell side to market, a private equity portfolio company, really great asset. They expected a lot of interest. They went out to like 50 parties, only one bid came in. So it's really hard right now because there's no clear exit, so it doesn't provide the demand.
So, I mean, you did say that it's better than last year, but still not where we want it to be, especially given the fact that expectations were so high. What are, like, in a few 30 seconds or less, what are the lingering hurdles that people are calling out?
Tariffs, where are they implemented? How do they impact companies? Interest rates, consumer, inflation.
Yep, that's kind of what we're hearing from pretty much everybody in the market, whether you're a portfolio manager, whether you're an executive company. Or
insert it anywhere.
Yeah, insert it anywhere. So anyway, great story. The big take story, check it out. Bailey Lipschultz, Michelle Davis, they are reporters for Bloomberg News, joining us here in our Bloomberg Interactive Broker Studio. You can read Bailey and Michelle's story and more from Bloomberg Big Take on the Bloomberg Terminal and at Bloomberg.com/Big Take. Nora, thank you so much for sitting in today.
Thank you for having me.
Tom Keene, takes a day off. All the chairs on the ship.
Everything gets shuffled.
Everything gets shuffled, but we make it happen. So here, as we finish out the morning session here, S&P off 10 points, the Dow off 142, the Nasdaq off 42. That's 0.25%. We'll keep an eye on that. Coming up, Balance of Power with Joe Matthew from Washington, D.C. with all the latest. He is coming up just after this global news update. We'll have more. This is Bloomberg. Good morning.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. There's word Elise Stefanik's nomination to be the U.S. ambassador to the United Nations could be facing new trouble. CBS's Jennifer Jacobs has exclusive information from the White House.
Discussions are happening this morning about what to do. It's pretty intense pressure. She has been, I think, reluctant to withdraw.
The pick has been stalled in the Senate. Some Republicans say Stefanik is more valuable in her role as a congresswoman from New York, given the slim GOP majority in the House. 10,000 new federal job cuts hitting the nation's health system today, as we hear from CBS's Alexander Tin.
Health and Human Services Secretary Robert F. Kennedy Jr. has announced the details of a sweeping restructuring of the nation's health agencies, which will consolidate several divisions and result in a reduction to the department's workforce from 82,000 full-time employees down to just 62,000. The department says their cuts will not impact Medicare and Medicaid services or directly impact the FDA's drug device reviewers and inspectors.
A formal call today for an investigation into the Signal chat leak that gave a reporter access to U.S. military attack plans. CBS's Aaron Navarro at the White House.
Yesterday, President Trump was asked if he supports the Inspector General looking into the Signal issue, which we just saw this morning is something that congressional leaders of both parties have called him to do. Trump did not oppose that. And this morning, White House Press Secretary Caroline Leavitt did call it, quote, a mistake, and said that National Security Advisor Mike Waltz has taken responsibility while still looking to move past this story.
Well, the Trump administration today touts an arrest.
U.S. Attorney General Pam Bondi announced the arrest of a man considered a top gang leader.
Early this morning, one of the top leaders of MS-13 was apprehended. He was the leader for the East Coast, one of the top 3 in the entire country.
The unidentified 24-year-old man was arrested in Manassas, Virginia, not far from Washington, D.C. Bondi says he was in the country illegally. Jim Crisula, CBS News.
6 people died when a tourist sub sank off Egypt. Dozens of others rescued. In Wall, New Jersey, 4 children were injured in a school bus crash, one seriously. Some bars and restaurants in St. Louis will boycott Anheuser-Busch products after the hometown company said it's ending a more than 30-year sponsorship of St. Louis Pride Fest. Colin Healy owns a bar.
At the end of the day, beer should be for everybody, and it's apparent that Anheuser-Busch is sending a message that theirs isn't.
Wall Street, the Dow is down 131 points. This is CBS News. We know what sharks look like. Now we have a better idea of the sounds they make.
All of those documentaries showing sharks gliding ominously and quietly through the water have been missing one thing: the sounds they actually make. A new study in the journal Royal Society Open Science reveals the first documented case of sharks making noise. Researchers who approached small rig sharks off New Zealand heard clicking noises produced when the fish forcefully snapped their spiky flat teeth. Until now, sharks were believed to be silent because they don't have swim bladders, which contain gas and produce sound. Deborah Rodriguez, CBS News.
14 games are on the Major League Baseball schedule to open the season today. The defending World Series champion Los Angeles Dodgers are odds-on favorites to win it all again this season. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Liberation Day. That's how we get through opening day. Welcome to the fastest show in politics. As President Trump beats the drum on auto tariffs, moving stocks, spooking car makers that assemble vehicles in other countries, including American automakers. They take effect next week on, yes, what the president is calling Liberation Day. We're going to get into it ahead with Bloomberg's John Doe on this opening day in America. Congressional Republicans suddenly singing off the same sheet music here. We'll talk reconciliation coming up with Bloomberg's Mike Dorning from our politics team, and thousands protest outside of Boston after a Tufts University doctoral student was taken by masked, plainclothes police officers for supporting Hamas. We're going to talk the optics with our political panel today. Bloomberg Politics contributor Jeannie Shanzano is with us alongside Chapin Fay at Lighthouse Public Affairs. So let's get rolling. We'll start, as always, on Wall Street with Charlie Pellet in New York. Charlie, update on the markets.
Right now we are rolling lower, Joe Matthew, with the Dow, the S&P, NASDAQ giving up earlier gains. We are in the red right now. Little changed, perhaps the key takeaway at midday on the S&P, down 3 right now, down less than 0.1%, but nonetheless in the red with the Dow down 79 now, down 0.2%. NASDAQ Composite Index down 17 for NASDAQ, a drop right now of just about 0.1%. 10-year 4.37% with the 2-year 4.00%. Spot gold up $33 the ounce at $3,052. Gain there of 1.1%. And West Texas Intermediate crude up 0.2%, $69.81 for a barrel of WTI. Stocks fluctuating as the U.S. pushes ahead with tariffs on automakers. GM lower now by 7.2%. Ford shares, they're tumbling 2.8%. Stellantis now lower by just about 1.3%. 2.9%. Well, certainly traders are concerned about the impact of tariffs on inflation and the broader economy. Hugh Johnson is the chairman of Hugh Johnson Economics. He has spent decades on Wall Street. He was the guest this morning on Bloomberg Surveillance.
I don't like to be skeptical. I'm for lower regulations. I'm for lower taxes. I'm for a lot of the things that they talk about, but we've been down this road before, and it's very difficult to implement. Believe me, I've spent a lot of time in Washington. It's very difficult. Great ideas, but difficult to execute.
Hugh Johnson of Hugh Johnson Economics. 23andMe holding shares are surging now. The ticker ME up by 57% after a judge ruled this morning that the genetic testing company can try to sell information about customer data amid its bankruptcy. Again, 23andMe shares are up by 57%. Recapping, stocks lower, S&P down 1 now. Little change, down less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Balance of Power continues, the Thursday edition. Once again, your host, here he is, Joe Matthew.
You said it, Charlie Pellet. Thank you so much, Charlie, and great to see you. We'll have another update on stocks coming up a bit later on this hour as Charlie from World Headquarters in New York keeps us trained on the markets while we cover politics here in Washington, D.C. Thanks for joining us on Bloomberg Radio, on the satellite radio channel 121 and on YouTube. Dial us up right now, Bloomberg Business News Live. It's a very simple search. You'll see our live stream as soon as you do that on opening day. Yes, indeed. This works out really well, actually. We get off the air here, right on the early edition, 2 p.m. Eastern Time. Washington Nationals kick off the 20th anniversary season, 4:05 p.m. Eastern Time. So if you want to meet producer James, get down to the Salt Line Happy Hour at some point before then. For those of you listening in Boston today, 92.9, you're looking at Texas, of course. The home opener at Fenway is April 4th. First bullpen beer is on me. That's straight from the source there, producer James. And I'll tell you what, it's starting to feel like spring a little bit around here. We've got the Kite Festival, peak cherry blossoms, all happening with 80 degrees in the forecast for this weekend. Kind of feels nice just to take a second away from the politics and acknowledge where we are right now. You won't regret it, James. They're all going to come and meet you. Remember, the headline was baseball bats to caskets. When we started talking about aluminum and steel tariffs, great story by Sean Donnan earlier this month, as we connect the dots on opening day and Liberation Day. Now less than a week off. That's April 2nd next week. That's when the tariffs will reach full bloom. Even though Donald Trump pulled us into the Oval Office for a major announcement, he said yesterday, on auto tariffs, but those don't kick in until next week as well. Here's the latest from President Trump.
This is the beginning of Liberation Day in America. We're going to charge countries for doing business in our country and taking our jobs, taking our wealth. What we're going to be doing is a 25% tariff on all cars that are not made in the United States.
25%, April 2nd. Pretty good news for Tesla. Really interesting chart today from Ward's Automotive Barclays. It showed up in Axios with the share of U.S. sold vehicles that are actually assembled in the U.S. This may not seem obvious to you because if you're at Ford or GM, we've talked about this before. You're not actually assembling all your cars here. You might be a U.S. automaker. But the president is talking about companies, even if they're from overseas, who build the cars here. So if you're Tesla, you got 100%. They do them all here. Elon Musk is not worried about this decision. I'm sure that just worked out that way. Same for Rivian, by the way. Now, the next company on the list is Ford at 78%. I don't see GM here until after Honda, Stellantis, Subaru, Nissan. GM is at 52%. If you're driving a Volkswagen, if you like that Volvo, you're going to pay a lot more money. Volvo's at 13%, Volkswagen at 21%. So it gives us a sense of how this might play for some companies based here in the U.S. and others based in Europe that could stand to benefit or be punished by all of this. This whole story has been keeping Joe Doe up at night, and you're seeing him on TV and radio every day here at Bloomberg for a reason. Imagine being Bloomberg's metals and mining reporter at a time like this. A true expert. We talked to Joe on the late edition yesterday. Wanted to pull him back in now that we have a little bit more idea of what's going on. Joe, it's great to see you, and I really appreciate the work that you've been doing here. We're seeking context. The market's confused. We've got a lot of chaos. But to start with the actual news, I'm looking for news here, Joe. Nothing actually changed yesterday in this announcement from Donald Trump, right?
Not yet. That's right. I mean, as you mentioned, April 2nd is when everything starts. The collection of the tariffs begins on April 3rd, and that's specific to the auto tariffs. I think the real thing that was interesting when you dug into the executive order was, there had been questions in the market like, well, what about this USMCA material, right? As you recall, we signed USMCA back in 2018, 2019, as part of an agreement that Donald Trump led to rework NAFTA. And part of that was reworking rules of origin, right? And that was like melted and poured for steel and aluminum, and then parts making for automobiles. Well, what we found out in the EO is that basically any parts that are in an automobile that are not U.S. made after May 3rd could also be included in tariffs. So like the examples that we have been talking about is, a GM automobile where half of the material is produced in the United States, the other half is produced outside of the United States. The EO says the half that is produced outside the United States would be tariffed. And then it gets really messy. Some interesting reporting that our White House team had out last night was, according to some officials, they're still going to work out what about the parts that go across the border multiple times. And I think that's a huge question.
With the president saying last night they would be very carefully policing all of these parts. You imagine opening the hood and seeing made in the USA on actual components. Here, Joe, we've got a breaker. I just need to mention the U.S. said to seek control of all investment in Ukraine resources. This actually bumps up against Joe's area of reporting here. The U.S. pushing for a partnership deal with Ukraine that would give it control over major infrastructure and mineral investments, potentially gaining a veto over other allies' roles. Joe, we've talked so much about, and I don't mean to just pull this out on you here, but this headline just went red on the terminal. That minerals deal that was said to unlock the path to peace in Ukraine is still not signed. We've talked to the Ukrainian ambassador to the U.S. Just a couple of days ago and didn't seem to have much clarity on when this would get done. What would this mean for our access to rare earth minerals?
Yeah, I mean, it's a complex one, right? I mean, you make a good point. The to be sure here is, well, let's make sure that there's a deal actually signed, and then we can start figuring out what that actually means in the marketplace. I think the questions by people in the critical mineral space and people that are also in the steel space and the aluminum space who do know the Ukraine region, right, in terms of business, are saying, okay, well, great, but there's still a lot that's undeveloped. There are a lot of questions over ownership and how all of this works. And I think even with an agreement, because not too long ago we thought we had an agreement until we didn't, there were questions as to how it would all play out. And I think there are just a number of players on the outside asking themselves, well, I need to see the details and how that actually works. And then, of course, there's the security questions. I know that the security question was a big deal between Ukraine and the United States, but the investors themselves, right, who would presumably be the ones putting money into whatever this critical minerals deal would be, also need assurances that in 3 years, there won't suddenly be war on the turf of the places where they're trying to build out mines and process different minerals.
Yeah, it's because a lot of this is in the Donbass. Of course, Joe, you're an expert on this. If you're starting from scratch, how long would it take some U.S. firm to roll in there and begin mining these critical minerals? How long would it be before you're processing them?
Yeah, I don't know. I think that's such it's such a difficult, maybe. I mean, it's such a difficult question to ask because again, the security question is serious. There's also what are these deposits we're talking about? Are these already identified serious deposits, or is this, let's also put in exploration teams to go and find the best deposits across the country? And once you find those, you get the core samples, you prove to investors that they're good core samples, then you get the money and the funding to say, okay, great, we're actually going to start building out a mine site. That could take another 10 years. And then there's the processing facilities that have to be ready for when those materials come out of the ground. Those facilities may take 2-3 years to build as well. So the timeline could be 10, 15, 20 years. Although there are people who say, listen, we could expedite all this and do it in a much quicker time frame.
Sure.
It's very complex.
Just absolutely great context. You know what I like? I like talking to people who know what they are talking about, experts in their field, and that's Joe Doe. You've been great, Joe. We've learned a lot from you over the course of the past couple of days. Next week is like your Christmas morning. I can't imagine what you're bracing for here. Bloomberg Metals and Mining reporter ahead of Liberation Day on this opening day in America. Happy opening day, Joe. We're going to pull in Mike Dorning coming up. We've got to talk about what's happening on Capitol Hill ahead. Is this real? Republicans getting along from the House and the Senate, a plan on reconciliation. We'll zero in on Trump tax cuts coming up next, right here on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index back in the green right now. Little changed, up 0.1%, but holding on to an advance of 6 points. The S&P at 57.18. The Dow, though, does remain lower, down 38 right now. Dow Industrials down 0.1%, while the NASDAQ Composite Index is up 31. For NASDAQ, that is a gain right now of just about 0.2%. 10-year at 4.37%, the 2-year 4.08%. 0.00%. Gold up $32 the ounce, up 1.1%, $3,051 right now on gold. West Texas Intermediate crude up 0.3%, $69.83 on WTI, and Bitcoin now down 0.1%. Little change, 87,208 on Bitcoin. Stocks are fluctuating as the U.S. pushes ahead with tariffs on automakers, reinforcing concern about a widening trade war. Meanwhile, Walmart de Mexico, that is the local unit of the American retail giant, plans to invest $6 billion this year in its Mexico operations to add more locations. That expansion will create 5,500 jobs. Walmart now up by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Charlie Pellet, thank you so much. Welcome to the Thursday edition of Balance of Power. You made it to Little Friday. We're cooking with gas here on Bloomberg Radio, on the satellite radio, channel 121, and on YouTube with our view on Capitol Hill following the meeting of the minds at the White House. Remember, you saw John Thune, Speaker Mike Johnson, the heads of the tax writing committees make tracks for a very important meeting with Scott Bessent, Kevin Hassett, and others to figure out how in the world they're going to thread the needle on this reconciliation plan that we've been talking about since last year. They do have the rest of the year technically to work this out, although they'd still need to manage the debt ceiling. And it looks like things are going so well that we're advancing the matter here with reporting that John Thune is about to take the lead on one big, beautiful bill. That was the House preference at one point. Senate wanted to cut it up and do this in different ways. And now we see the headline here from Punchbowl. This is interesting. Jake Sherman reporting the White House is considering pulling Elise Stefanik's nomination to be ambassador to the United Nations. You heard this mentioned at the top of the hour in our CBS News report. Elise Stefanik, this was supposed to be a done deal, right? And they, of course, knew how thin the majority would be before this story broke. The Trump administration growing concern about the narrow margins in the House, according to reporting by Punchbowl. So what's changed? Mike Dorning joins us now from our politics team here in Washington. It's great to see you, sir.
Great to be here.
The timeline on this vote is pretty ambitious. They want to get this done by Memorial Day. John Thune's talking about bringing something to the floor as early as next week. Did Donald Trump bang everybody's heads together? How did this
I think
progress?
It always helps when you've got a new party taking over, new presidency. You have the most power early on. Mm-hmm. And what they're doing here is they're adding in this debt limit item that sort of gives them a nice artificial deadline that they really have to get it done by August, because at sometime during August, and they always take a vacation in August. I don't think they'd stay in. Yeah. Sometime while they're on vacation, like suddenly the country wouldn't be able to pay its bills. Mm-hmm. So by adding the debt ceiling into this tax budget deal, that then moves up the deadline from the end of the year to August, and it gets them to concentrate on it before they have the inevitable challenges. Maybe tariffs causes inflation or something that might weaken the Republicans.
Yeah. Wow. And of course, we got the X date, or a range for an X date, from the CBO yesterday. That's why you're referring to August. That's when we would actually bump into the ceiling here. What's the Elise Stefanik news tell us, if anything, more than just a more nervous posture about this incredibly thin majority?
Yeah, it shows the White House is getting nervous. There's no change in the math. Right. The math is the same as it was before, but they are starting to get nervous about their holdover Republicans. If this is true, now we haven't independently confirmed what Punchbowl and CBS are reporting, but it suggests a case of nerves in the White House. Mm-hmm. Remember, it had looked like, they basically last time around, when there was dissent in the House, Republicans might have been a thin majority, but Trump called them up and they said, yes, sir. But I think they're worried that people might not always say, yes, sir.
Mm-hmm. That's how he told the story.
And one potential source of this worry might be they're worried about what the impact of the tariffs will be in the short term. Remember, one of the big sources of discontent going into the election was inflation. And whatever long-term confidence Trump may have that this is the right move to raise tariffs, hoping it will bolster American manufacturing, there may be worries that when you put a bunch of taxes on imports, that's going to raise inflation for the short term at least.
Spending time with Mike Dorning as we consider the idea of an investigation or an audit into this whole Signal chat room situation that has the White House politically on the ropes here for the moment. It's interesting as we connect the dots on all these, that's Mike Waltz's seat next week that's up for grabs in Florida. That might have Republicans a little bit worried about the majority here. But we got the latest update here from Caroline Leavitt, the White House press secretary, talking to reporters in the driveway earlier today. Listen.
Well, we have never denied that this was a mistake, and the National Security Advisor took responsibility for that. And we have said we are making changes. We are looking into the matter to ensure it can never happen again.
The question is, will there be a congressional answer to this? Democrats like Elizabeth Warren are calling for the defense secretary to step down. Supposedly, others are going for Mike Waltz's scalp here. They want some accountability, but it needs to be rooted in an investigation. When you have a Republican majority, does that happen? Roger Wicker, the chair of the Armed Services Committee, seems to be open to it.
Yeah, no, and he sent a letter today sort of making that case. It is something that is worrisome to, the defense hawks in the Republican Party, and I think they don't want to give up sort of the idea that you have to protect attack plans. In many ways, it's actually worse to leak an attack plan than a war plan. Although in this case, it turned out okay. There was no disaster or anything. It's just a sort of a sloppiness, and I think they probably want to make sure that they get the message that you gotta really abide by the security rules now.
Sure. You're no stranger to this part of the world. People know you on this program as a guy who covers politics in Washington, but you were embedded with combat units for a number of tours in the Middle East.
Yes.
And this, really hits home with members of the military who are seeing something like this unfold, essentially in a public forum. Granted, it started on Signal, but it ended up in the Atlantic, Mike, and you know the stakes here as a reporter covering a war zone. Does the Atlantic deserve credit for not revealing the name of a CIA officer, for not putting forth those plans until the White House said they were not classified?
And I think most news organizations in the U.S., they're not going to, willy-nilly publish a CIA officer's name, nor are they likely to, even if it came to most any major news organization, they're not going to say, oh my gosh, here's the attack plans. Let's publish them before the attack. And the Atlantic even withheld them initially after the attack, even though the kind of risk to troops would have been gone by then. So that's a good thing about most mainstream journalists. You're not going to deliberately endanger lives, and it's kind of a moral duty we all have. The risk with the Signal app is that someone's phone could have been compromised. These are all people who foreign intelligence agencies probably target. And it's the kind of risk that if you're there on the ground, you kind of don't want people, down the line taking. And it could have a chilling effect on sort of lower level agents in the intelligence community's willingness to share up the line if they were worried about their sources or methods or attack plans getting compromised. Nothing like this, because obviously the Secretary of Defense would always have the final say on a specific attack.
In your experience, though, as a national security reporter, as a combat reporter, how common is this type of leaking coming from high levels of the national security apparatus at the White House?
In my experience, it's very uncommon for something like an attack plan to come out in advance.
I mean, if you think there's one, it's like, when you're dealing with mice, when there's one, there are probably more, right?
Yeah, no, you need to be careful with this stuff. Although the actual classified system, I'm told, is burdensome to use. I obviously never was privy to that. But you know, the only times I ever had attack plans was when I was going to be with troops on the attack.
Need to know.
And they would need me to know what we were doing. And obviously I had a very strong self-interest in not revealing that, not to mention a moral duty.
Well, that's a really interesting perspective from, you know, being an actual battlefield reporter, putting your Washington hat back on. You've covered a couple of scandals. They're calling this Signal Gate now. Is somebody going to get fired? How does this end?
Normally, this would be the sort of thing that would be a ferocious scandal. But, you know, it's a different kind of politics at the moment. You know, that this is something where usually an administration will be very vulnerable on, but you have to have someone to drive that scandal. And this administration has been very good about, if there's something, you know, really eye-catching going on, coming up with something else that's eye-catching and sort of distracting people. And on the Republican side, I think they're serious about wanting some at least lessons to be learned here, but there aren't, you know, members of Congress on the Republican side that are really trying to prosecute the case. And this is an advantage of the Republicans controlling both the House and the Senate, because Democrats can yell in the media, but they can't launch an investigation using that subpoena power that the House and the Senate have. And if you launch that investigation, even if the other side is, you know, trying to stop you, you have this train of new revelations that come out in the hearings and the investigation, and you make people stand in front of the cameras and, you know, sputter and, you know, try to explain and stuff. But if you don't control either the House or the Senate, you can't do that.
Pretty remarkable timing to see Tulsi Gabbard in that hearing this week, along with John Ratcliffe from the CIA, previously scheduled. Of course, they did obviously have to answer to some questions, but they didn't have a lot of information at the time.
But think about it compared to the Benghazi hearings, where they're just like day in, day out for a year or two, like banging away.
So don't
on
hold
things.
your breath for the hearing, it sounds like.
Yeah, because the opposition party doesn't control either chamber of Congress.
Did you get brought back to the old days when you saw Donald Trump call a news conference in the middle of this yesterday?
Yeah, that was like very Trumpian.
No news. Interesting. Mike, great to see you. Mike Dorning, Bloomberg's Capital Influence Deputy Team Leader and a voice of reason here inside the nation's capital. I'm Joe Matthew. Great to have you with us here on the Thursday edition. We'll assemble our panel next. Jeannie Shanzano, Chapin Fay, tackling the optics surrounding the administration, coming up right here on the fastest show in politics. This is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading lower. Right now, those stocks have been churning as trade war fears offset solid economic data. Right now, though, back in the red with the Dow, the S&P, NASDAQ all trading lower. We'll throw in the Russell 2000 index of small cap shares as well, down now by 0.3%. But to keep it all in context, S&P lower by 4, down 0.1%. The Dow giving up earlier gains, down 95 now, down 0.2. NASDAQ Composite Index down 0.1%. The 10-year 4.37%, with the 2-year 4.00%. Spot gold up $31 the ounce, up 1%, $3,050. West Texas Intermediate crude flat on the day, 69.64 a barrel. And Bitcoin right now, little change, down 0.3%, just above $87,000. Health and Human Services Secretary Robert F. Kennedy Jr. has announced sweeping cuts to the department he leads. It is the latest step by the Trump administration to dramatically shrink the size of the government's workforce and responsibilities. Kennedy plans to cut 10,000 employees. Meanwhile, jobless claims continue to show little change, hovering just above the historic low. And with more on that story, here's Bloomberg's Vinny Del Giudice.
We have yet to see the full impact of federal job cuts in the jobless claims data. New applications rose by just 1,000 to 224,000. However, the total number of Americans collecting unemployment is elevated versus a couple of years ago. That suggests it's taking longer for many people to find new jobs. Bloomberg Economics says it could be slow going for ex-civil servants seeking new jobs as the White House continues to wield the axe. Vinny Del Giudice, Bloomberg Radio.
MSG Networks and its lenders have gotten a week-long extension to negotiate on more than $800 million of debt that has been due since October. Sphere Entertainment is the parent of MSG Networks. That stock down now by 0.6%. Recapping a move lower for the U.S. equity market. S&P now little change, down 1 point. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you so much. Watching Wall Street for us on the Little Friday edition of Balance of Power here on Bloomberg Radio. And on YouTube, where you can find us by searching Bloomberg Business News Live. It's great to have you along here as we prepare to assemble our panel. Thousands of people showed up to protest last evening in Somerville, Mass. If you're with us on 92.9 in Boston, this is a big local story here, and it's frankly become a big national story. If you're with us on YouTube, get a load of this. This is the scene right now on a street in Somerville, Mass, where a Tufts University student, Rumisa Ozturk of Turkey, was approached by plainclothes, masked police officers and promptly arrested. If I could play the audio, you'd hear her screaming at this point. They take her backpack off, put it on the ground, handcuff her, get her in a car, and drive her away. Widely circulated online here, this video, according to Ozturk's lawyer, is actually the property of the Department of Homeland Security. This is a 30-year-old from Turkey, Fulbright scholar, PhD in child study and human development on an F1 student visa at Tufts University. I guess we can hear it now. As you hear her try to talk her way, I guess, out of this, not sure who these people are. They do eventually identify themselves. They say, we are police officers, but they're not wearing uniforms. If we can start that, by the way, back from the beginning, you'll hear her reaction when she first sees these police officers approach her here. We just got an update. This is from the Boston Globe. Ozturk, who was detained by ICE agents, has already been moved to Louisiana. She had been moved to Louisiana by the time a judge ordered her kept in Massachusetts. The offense here, supporting Hamas. DHS and ICE investigations, this is according to an emailed statement from the Department of Homeland Security, found Ozturk engaged in activities in support of Hamas without sharing evidence of the claim or responding to questions about the video. Now, we're isolating this case here because we want to talk about optics, or as the great political producer Adam Belmar used to call polyoptics, a couple of clicks up on the satellite radio dial at POTUS. Polyoptics. When you consider something like this rolling on TVs across the country, on phones and computer screens, coupled with some of the other stories that we've been hearing. We've been talking about tariffs a lot here. A breakdown, for instance, in the Social Security Administration. Nobody's answering the phone. The website is crashing. Add the Signal chat room flap. And you start to create a composite here, an optical composite that is in itself a political character, a political issue. And that's where we start now with our political panel. Jeannie Shanzano is here, Bloomberg Politics contributor, and of course, senior democracy fellow at the Center for the Study of the Presidency and Congress. She's our Democratic analyst alongside Republican strategist Chapin Fay, founder, Lighthouse Public Affairs. Now, of course, Jeannie, you're an educator, you're a political science professor at Iona University, and what's happening on college campuses like this is not an isolated incident, is something that has the attention and has brought much outrage from Democrats. If you could see the statements from the mass delegation following this protest last night in Somerville, what is the optical residue? What's the impact of this politically?
Yeah, I mean, the Ring camera footage that you're showing is utterly chilling, and you just played it. You can hear it. It's all over the internet. We have to take a step back and, of course, say that we do not know, and this is part of the problem, if she was indeed or is being charged with aiding and abetting Hamas. That would be illegal, and that could get her detained and thrown out of the country. The problem here is that all people know is that she co-authored, she's a PhD candidate, and she co-authored an editorial in the student newspaper last March, which did not mention Hamas. It took on the administration at the university, and it was calling for them to divest from their connections with Israel. And it was talking about her concern about the Palestinian people that had been killed. And so the concern is that they are taking people up off the street and throwing them in jail without due process because of their political views. So that is the concern. And that's why we're seeing, these 1,000+ people out in Powder House Square who are calling for her to at least be brought before a judge and charges against her be made explicit.
The Mass Attorney General, Andrea Campbell, said, quote, "It looked like a kidnapping," unquote. Senator Ed Markey, of course, Democrat from Mass, quote, "Trump sent masked law enforcement officers to arrest Rumeysa Ozturk, a Tufts University grad student with legal status, without a criminal charge," unquote. Chapin Fay, what's your thought on this? Is the impact corrosive, or is this, in fact, going to help Donald Trump politically because he's doing what he said he was going to do?
I'll tell you what's corrosive. Speaking of kidnapping, there's still an American in captivity in Gaza. They have the remains of other Americans that they refuse to release. Hamas is a terrorist organization, and if you are here on a student visa, you are a guest in this country. If you are supporting Hamas, a terrorist organization, and making your fellow students feel unsafe on campus, you got to go. That's plain and simple. And, we talk about, outrage from Democrats. Donald Trump sneezes and you get outrage from Democrats. So I think we have to go down a little layer here, right? There will be due process for this woman. They will have to show some evidence of what they're alleging, right? And that will play out. But if you are a guest in this country and you are supporting terrorist organizations and calling for death to America or whatever else all these Hamas supporters are doing, you should absolutely be sent back home.
Well, you just said a couple of important things, though, Chapin. If, in fact, there is due process, that changes the story. That's one of the points of criticism here. This is somebody who so far has not been charged. But are we in a world in which a student op-ed results in a visa being canceled?
I don't know, right? I don't know. Like Jeannie said, we don't know what the evidence is or if there's evidence there. And of course, if there's no evidence and she's just a student who wrote an editorial, then she should maybe be able to stay. But the United States government in America gets to pick and choose who gets access to this country. This is the whole point of what's going on. And you're seeing some real world implications happen. And, it's not pleasant, right? But it's also not pleasant that American Jewish students are getting harassed. It's like Nazi Germany. The left likes to call Republicans Nazis, but we're not the ones who are preventing Jewish students from entering buildings, taking over administrations in a violent manner, and then asking Jewish students for papers. This is all preposterous. If there's any shred of evidence that she has any connection to Hamas, I mean, you're seeing here in New York, right? The Columbia group that has been doing these protests and have been taking over buildings was reactivated after being dormant moments before October 7th. I mean, that needs to be investigated. This is absolutely preposterous. It's outrageous. And if you are actively calling for death to Americans and you are not a citizen and you are here as a guest, you got to go.
I completely appreciate the spirit of what you're saying here, Chapin. The fact is, though, we wanted to know what would happen when this stuff started happening. Forget mass deportations for a minute. In this case, targeted student protesters on campuses, just like people wondered what will be the impact of family separations if that starts to happen again. Jeannie, seeing sometimes changes perceptions. Does seeing this video change the way you're looking at this?
It doesn't change the way I am looking at it, but certainly it can change people's views, and nobody knows that better than Donald Trump. I mean, he went on Meet the Press right when he was elected, and he said that. He told them that this is a concern. But let's just take a step back and let's just all agree that this particular woman has been accused of nothing yet that we know. There is no evidence she intimidated anybody, let alone a Jewish student. There is no evidence that she did anything to support Hamas. All we know is she was picked up off the street, and she was a co-author of an op-ed in a student newspaper last year, which talked about the need to think about the Palestinians being killed, and also asking her own university to divest from Israel. That is free speech. That is not unconstitutional. Now, obviously, if there is evidence that she is colluding with or materially supporting Hamas or any other terrorist organization, that would be a different story. But the concern of the people protesting today is that she has not been produced or charged yet. She needs to be, that's what the judge called for, and I'm sure she will be, but she was taken very quickly out of the state to Louisiana. And so all of this is concerning when it's looked at in total. These, the concerns that you're hearing out there about kidnapping and otherwise. This young woman is a Fulbright scholar, a PhD candidate, and we need to be very, very careful how we treat people coming into this country. And so I do think there is a chilling effect, even in these cases where you would prove this stuff in the end. In this case, nothing has been proved.
The op-ed we're talking about was in the Tufts Daily last March. She identified herself as a graduate student for Palestine. They called for Tufts administrators to acknowledge the Palestinian genocide and disclose its investments, to Jeannie's point, and divest from companies with direct or indirect ties to Israel. The op-ed makes no mention of Hamas. So getting back to your point, Chapin, if there in fact is some evidence here, at some point the administration will need to make this public, no?
Of course, and I would have liked to agree. I am personally a First Amendment absolutist. However, let's take an even farther step back. Should we be giving visas and student visas and guest visas to people who advocate for organizations that have Americans currently in captivity? I don't think so.
So this comes back to the actual attainment of the visa. This person shouldn't have been allowed to come here to study, is what you're saying.
Well, I'm not making that judgment, but I think that's an argument and a discussion that needs to be had at a higher level, right? I mean, it is a privilege, not a right, to immigrate to this country. And I'm not anti-immigrant. We all come from immigrants. It makes this country amazing, right? That's the whole point of America. But open borders doesn't work, right? There are students who have left Columbia and these colleges because they are unsafe. And if you ascribe any other ethnicity or national origin other than Jewish or Israeli, we would be having a very different conversation about people who have been put in jail for making other students unsafe. But we're not. We're having a conversation about the right of someone to protest on behalf of a terrorist organization.
Got less than a minute left here, Jeannie. University officials say they're in contact with authorities. They hope Rumeysa is provided the opportunity to avail herself of her due process rights. Is there a legal path for the school, or you just have to watch and see what happens?
Yeah, the university said they were not privy to any of this information, and so they seem to be sort of maintaining a watchful eye. I think, again, on behalf of this student, we must say we do not have evidence yet that she was protesting in favor of Hamas. even if she was, that may be considered political speech, because what's illegal is material support, not speech. But so far, and you said this, Joe, the op-ed which I read did not mention Hamas, nor do I have any evidence, nor has the government produced some, that she was protesting in favor of Hamas.
All right, Jeannie and Chapin are back with us with a lot more in hour 2. Stay right here on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Opening day brings new worries about Liberation Day. Welcome to the fastest show in politics as President Trump pushes 25% tariffs on autos assembled in other countries. That includes autos assembled by American automakers. I'm Joe Matthew, alongside Kaylee Lyons in Washington. Thanks for being with us here on the Thursday edition of Balance of Power on Bloomberg TV and radio. Kaylee, these will presumably take effect on what the president likes to call Liberation Day. That'd be next week. Happy opening day, by the way.
Oh, well, same to you. Go baseball. As we consider President Trump made this announcement yesterday. But yes, the tariffs won't actually take effect until next week. Part of Liberation Day, which is April 2nd, and he said they'll actually start collecting these levies on April 3rd. So it was a little bit of front-running the actual reality here, I suppose. But in part, that may have to do with the other part of the news cycle the White House is currently trying to get its arms around. And that, of course, would be the ongoing fallout from the Signal scandal.
Yeah, indeed. But of course, the markets are focused on a daily basis here on tariffs. This is not helping shares of auto companies, not even U.S. automakers, Kaylee, because if you look at the GMs, the Stellantises, even the Fords of the world, they assemble a lot of their cars in other countries. Meanwhile, Tesla, 100% made in the USA.
At least for the ones that are sold here, benefit to Elon Musk. The president was asked about that yesterday, said Elon Musk didn't ask that favor of him, but still interesting nonetheless. So we're going to get into all of this and how the tariffs that we could see in addition next week will layer on top of it with Jared Bernstein, formerly of the White House Council of Economic Advisors during the Biden administration, in just a few minutes. But we begin with a check on the markets, including those automakers that Joe was just talking about. Charlie Pellet has a look at the trading. Hey, Charlie.
Thank you very much. Happy Thursday. Dow, S&P, NASDAQ, all in the red right now. And yes, Bloomberg Television and Radio, your definitive source for the very latest on what's happening with tariffs. Got to keep it locked in for all the latest developments, especially right here on Balance of Power. Right to the numbers here. We are looking at a down day, tariff Thursday, with the S&P down 22 right now, drop there of 0.4%. Dow Industrials down 230. That is a drop of 0.5%. NASDAQ down 78, a decline of 0.4%. A broad sell-off here with the Russell 2000 index of small cap shares down 0.6%. The 10-year at 4.36%, the 2-year 3.99%. Spot gold now up $30 the ounce, looking at a 1% advance for the precious metal at $3,049. West Texas Intermediate crude flat on the day, $69.64 a barrel. Stocks lower after the U.S. pushed ahead with tariffs on automakers, reinforcing concern about a widening trade war. Auto stocks hard hit today. They are lower. General Motors, case in point, down 7.2%. Ford shares down 3%. And Stellantis, which is the parent of numerous brands, including Ford, Jeep, Fiat, and also Jeep, Chrysler as well. Stellantis down now by 2%. Ferrari, meanwhile, says it plans to raise prices for some of its cars in the U.S. by as much as 10% to deal with President Trump's new auto tariffs. The ticker on that stock, RACE, Ferrari, up now by 1.9%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet with a look at how markets are digesting the news we got out of Washington yesterday. Thank you so much. That more than 7% decline on GM right now. An American auto manufacturer, which, of course, is something that the president says he wants to see thrive, is American auto manufacturing. That, in part, is the reasoning why he made the announcement he did yesterday, when something he long has promised, tariffs on auto imports, were formalized.
This is the beginning of Liberation Day in America. We're going to charge countries for doing business in our country and taking our jobs, taking our wealth. What we're going to be doing is a 25% tariff on all cars that are not made in the United States.
Let's talk a little bit more about what this means with Bloomberg's Detroit bureau chief, David Welch. David, it's great to have you with us today on Bloomberg TV and radio. The way this works here, we're not just talking about foreign automakers. These are, in many cases, cars made by U.S. automakers that are assembled in other places. We saw data from Ward's Automotive and Barclays showing for Ford, that's 78% made in the U.S. Stellantis, 57%, GM, 52%. So we would presumably be tariffing the percentage of the vehicle that's assembled somewhere else. Is that right?
That's right. And that's why GM's one of the hardest hit by this as it's proposed, or as it's going to be levied right now. GM makes a lot of vehicles here, but they also make very, very important models like Chevrolet Silverado, GMC Sierra pickup trucks in Canada and Mexico. Their cheapest vehicle, their entry-level Chevy Trax SUV, made in Korea, that would be hit with a 25% tariff. On the Mexican and Canadian vehicles, Those are USMCA compliant. That's the trade deal between Canada, Mexico, and the United States. They will be they will have tariffs levied on the non-U.S. content of those trucks. So let's just say a Silverado pickup was, and I'm just making this up, but if it was half U.S.-made parts, the other half of the value of that truck would be hit with the tariffs, and that can still be a substantial amount of money that's added to the cost of this vehicle when it comes across the border. And then whether consumers pay it or GM eats it or somewhere in the middle remains to be seen. But it's a situation where all the automakers are kind of scrambling to figure out how they're going to manage this. Toyota, half of the vehicles they sell in the U.S. are imported, some from Canada, but a lot from Japan. They're going to really have to struggle to kind of to deal with this if it's going to be long term.
Well, David, I want to expand more on what you were just saying about the question of who ultimately eats these higher costs. How confident are automakers right now in their pricing power, their ability to pass on higher input costs when we have signs of a softening consumer, at least softening consumer sentiment, and still relatively high interest rates?
You do, and you also have relatively high vehicle costs already. We had record new car prices about 2 years ago. They've come down a bit, but these are still historically expensive new vehicles out there. The average price of a new vehicle is not far from $50,000. 10 years ago it was in the 30s. So, there are expensive vehicles out there with high interest rates. That means high monthly payments. Consumers have been pushing back. You did start to see some activity with rebates and other deals, and you're seeing some of that now, but still big price tags in the showroom. So there's not a lot of places to bury these tariff costs. You will see some negotiating between car companies and their suppliers, maybe getting the suppliers to try to eat some of this cost, but their margins aren't very good. So, end of the day, the car companies themselves are either going to have to eat this, or they may decide not to make certain vehicles to sell in the United States if it's that bad and if the tariffs last a long time. I don't want to say anyone's doing that yet, but the tariffs would have to be a long-term thing before that happened. But these are sort of the options of decisions that car companies would have to look at.
Yeah, you're in a world where Honda, Subaru, and Nissan are assembling a greater share of their vehicles in the U.S. than General Motors itself. So this then becomes a question, if I'm hearing you right, about how long these tariffs stay in place. How long can an automaker wait around to find out?
Yeah, look, that's a big question. I think they will eat these tariffs for months, maybe a year or longer. It's just, it also depends on the conversations they're having with the Trump administration, and they're engaged on a daily basis trying to figure out where this is going. And the big question is, okay, if Trump's first term is any guide, do we just need to see the other countries he's negotiating with budge on some of the tariffs they have on the U.S.? And at the same time, General Motors, Stellantis, Toyota say they're going to move a vehicle that's made overseas or in Mexico to a factory in the U.S.? Or do they open a new plant in the U.S.? Do they make a concession in that way where they're going to invest more here? We've seen Trump already talking up the fact that Apple is going to invest more in the United States. He talked up a $21 billion Hyundai investment that they announced a couple days ago. He likes to see these things. He likes to talk about them. So the concessions may be on two fronts. The countries, Mexico, Canada, the EU, who he's negotiating with, and then the companies here who he wants to see bring jobs and investment back. That may be the way that gets companies out of a long-term tariff structure that they find very difficult to operate in.
All right, David Welch, thank you so much. Bloomberg's Detroit bureau chief, helping us walk through the impact these tariffs could have on auto companies. But by extension, there also is a question as to how exactly these levies may help or hurt auto workers. And it was the impact on auto workers that the White House press secretary Caroline Leavitt was touting from the White House earlier today.
I would just like to emphasize these auto tariffs yesterday are a big deal for auto workers in the industry. And you saw the United Auto Workers Union, Sean Fain, who wasn't the greatest fan of the president on the campaign trail, came out this morning and applauded the president for this move, saying it's a great thing for auto workers who have been sold out by unfair trade practices.
Let's see if Jared Bernstein agrees, former director of the White House Council of Economic Advisors. during the Biden administration. Back with us on Balance of Power on Bloomberg TV and radio. Jared, good to see you. As always, obviously, during your tenure at the White House, we talked with you frequently about issues surrounding labor, including the UAW strike when it was ongoing. Is there an argument to be made here that those workers stand to benefit from the levies that were just announced?
I don't think so. And I've heard Ms. Levitt argue that tariffs actually will make consumer goods cheaper, not more expensive. So I think some of this analysis is kind of upside down. In fact, it's widely agreed upon that tariffs are an import tax and that at least some share, and I think most research suggests the lion's share, is passed on to consumers in the form of higher prices. We have auto analysts out this morning suggesting that these new tariffs on autos, these sweeping tariffs on all auto imports and auto parts, will raise the price, the average price of a car between $5,000 and $10,000. That's real money for American consumers, and in that regard, I think Liberation Day is when American consumers are liberated from paying lower costs on imports, and I'm not sure they're going to like that.
It's good to see you, Jared. Welcome back. If this is Liberation Day, as the president is calling it, is he suggesting that at some point this tariff battle will result in no tariffs, a zeroing out of trade relationships? Is that not an admirable goal?
I do think that would be an admirable goal, but I'm not sure why you have to start a trade war to get there. That's kind of like it's saying an admirable goal is to make myself feel better by not banging my head against the wall. That's true, but probably a good idea not to start that in the first place. Look, all of this comes down to an idea that Dean Baker and I explored in an op-ed in the Wall Street Journal today, where you ask yourself, even the administration, by the way, contrary to the spokesperson you played, even the administration says, pain first, gain later. So really, I think their best argument is that these tariffs will eventually reindustrialize America. And I think that argument is just patently wrong. There's no evidence to support it, lots of evidence pushing the other way. Happy to take anybody through that argument, but I don't see pain first, gain later. I see pain first, pain later.
Well, so let's get into that a little bit more, because in that op-ed you mentioned in the Journal today, you say that even if U.S. manufactured exports increased enough to close the trade deficit, which you say is an extremely unlikely event, and if employment grew proportionally, our manufacturing workforce share would climb only from 8% to 9%, which obviously is not super dramatic. Jared, if this is not the means through which to have that manufacturing economy revival, what actually can juice it?
Yeah, really important question, Kaylee. So first of all, that calculation is based on zeroing out the trade deficit. That hasn't happened since the mid-1970s. We can talk about whether that's something that policy should try to do. I happen to believe that there are times when the trade deficit is a clear drag on growth, and particularly on some of our manufacturing communities. So some of this impetus or motivation makes sense, which takes us to the second part of your question. We had even more success than I expected when it came to what was called our industrial policy in the Biden administration. We saw a doubling of factory construction on U.S. soil based much more on carrots than sticks. Tariffs, just these kind of broad-based tariffs, I actually think targeted tariffs can have a role, but these broad-based tariffs have never been shown to lower the trade deficit. They've never been shown, even if you do lower the trade deficit, for that to translate into more factory jobs. We had a lot more success tapping an untapped demand or elasticity for people who wanted to build factories in this country in the area of clean energy, electric vehicles, battery production. And when I say people, investors, I don't just mean American investors, I mean foreign investors. We had a surge in foreign direct investment. Now, many of those factories are underway. Those shovels are in the ground, and that's still ongoing. But that has proven already to be a lot more successful than the tariff strategy.
People spent the 4 years, many economists spent the 4 years of your time in the White House with Joe Biden, Jared, predicting a recession. And getting back to the no pain, no gain situation here, in your op-ed, you write, they failed to do so, continue to double down on their unpopular agenda, we may find ourselves testing Howard Lutnick's assertion that a recession will be worth it. So when does the recession begin?
Well, this is Howard Lutnick, the Commerce Secretary, saying, yeah, the policies that we're implementing, possibly could be recessionary, but it will be worth it because of the gains on the other side. And as I explained earlier, and as we go through in some detail in the piece, that's just a wrong argument with no historical backing, no theoretical backing. Every reason to believe pain now, pain later on that. As far as a recession is concerned, one thing going for the Trump team right now is that they inherited a strong economy, and at least as far as the hard data are concerned, it's still a very solid economy. I mean, I was looking at the UI claims this morning, and they're not even flashing yellow. And I think if you're not seeing layoffs in the labor market, then you're not really looking at recessionary conditions. Now, I also noticed that Goldman Sachs marked down their first quarter GDP estimate for this year, so the quarter that we that ends at the end of this month, to 1%. Now that's down from something like well north of 2 for Q4, and so that kind of a deceleration that really could be problematic in terms of the labor market. But at least as far as the hard data is concerned right now, the economy is still solid.
Well, so when we consider the domestic economy and how it will compare internationally, obviously the impact of tariffs, Jared, will not just be felt in the United States, but in comparison to countries that will have to be grappling with this, like Europe, for example, which in many places seems to be abandoning austerity entirely, getting ready to spend on defense and stimulate. The U.S. currently is trying to really rein in federal spending. No such stimulus appears to be on the horizon. How could that ultimately make the U.S. impact be felt more acutely than even the impact on other countries that the president is currently trying to influence?
Well, first of all, the trade isolation, the American fortress will go it alone, I think is really antithetical to growth in the near term and in the long term. And I think if the president and his team were talking about a regional trade bloc, maybe North America, I think that maybe we could have a better conversation. But clearly, their actions and threats against Mexico and Canada suggest they're not even thinking in terms of regional trade blocs. And I think this is damaging for growth. And again, this is coming from a person who is well aware of the costs of persistent trade deficits and unfair trade on communities that have been left behind. In terms of fiscal pressure, I think we probably will see some fiscal worsening of the outlook from the tax cuts. And I suppose you could look at that and say, well, maybe there'll be some positive fiscal impulse there, some more spending. That's really a function of whether they're just extending existing tax cuts, which comes with no new fiscal impulse. That's just status quo in terms of its macroeconomic impacts, or whether they're adding new tax cuts. Now, if they add new tax cuts, which they have talked about, that could juice the economy a bit more, but of course it worsens the fiscal outlook even more, and I don't know how markets are going to love that so much.
He is former chair of the White House Council of Economic Advisors. Now he's a free man. Jared Bernstein. It's great to see you back, Jared, on Bloomberg TV and radio. Alongside Kaylee Lines, I'm Joe Matthew. We'll assemble our political panel coming up next on Balance of Power here on Bloomberg.
It's 1:21 on Wall Street. We do check markets all day long here at Bloomberg. We begin with a headline from the Bloomberg Professional Service, and Deutsche Bank says Raja Akram will be joining the bank and succeeding James von Moltke as CFO after a transition period. Stocks lower across the board. Stocks are falling as the U.S. pushes ahead with tariffs on automakers. Auto stocks are trading lower. Right now, the S&P down 12 at 56.99. A decline now of 0.2%. We've got the Dow down 140, down 0.3%. NASDAQ lower by 47, a decline there of 0.3%. 10-year at 4.37% with a 2-year 4.00%. Gold now up $31 the ounce, higher by 1%. Gold at $30.50 right now, 3,050. West Texas Intermediate crude is advancing by 0.2%, 69.77 a barrel. Bitcoin down 0.4%, 86,895, just falling below 87,000. Jefferies says Advanced Micro Devices is falling behind NVIDIA in its technological capabilities, and Jefferies says that could continue to pressure the stock. AMD down by 3.8%, NVIDIA right now down by 1.6%. And we're keeping an eye on GameStop shares. They are plunging. GameStop right now after earnings down 23%. The video game retailer also announced it intends to offer $1.3 billion aggregate principal amount convertible senior notes due in 2030. A Wedbush analyst says he expects that offering to, quote, fall flat. Again, we got GameStop down now by 23.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. I'm Kaylee Lyons alongside Joe Matthew in Washington. Thanks for joining us on Bloomberg Television and radio. And if you've been watching or listening to this show, basically any given day at any time since the election in November to now, you've probably heard us reference, at least in passing, the fact that the House majority is really narrow. We knew it was going to be after Election Day when it became clear the Republicans were going to hang on to control, and we knew it was going to get narrower still when President Trump pulled 3 members of the House to join his cabinet. One of them, Matt Gaetz, of course, didn't ultimately join, having taken himself out of contention for Attorney General, but he still resigned his position. Mike Waltz, the National Security Advisor, former congressman, also resigned. He's facing a great deal of scrutiny right now, which we'll get into in a moment. And then there was Congresswoman Elise Stefanik, who was tapped to be ambassador to the UN. And we've heard President Trump repeatedly joke to Mike Johnson in public, in speeches, saying, I know I took people from you, Mike, and the majority's really thin. Clearly, he was well aware of this. But there are reports today that the White House is getting a little bit more concerned about that narrow majority, to the extent that they are actually thinking about pulling Stefanik's nomination to serve in that role.
That's the thing. She was packing her bags for an important job. Not all that far away, I suspect. But this is kind of an important development, and it makes us think about the election next week in Florida and whether Republicans are justified in their nervousness over this seat potentially flipping. Bloomberg government doesn't see that happening, but this is a much steeper climb for the Republican than anybody anticipated. Certainly, the current news, as you're indicating around Mike Waltz right now, isn't helping. Let's assemble our political panel and get their take on all of this. Bloomberg Politics contributor, Democratic analyst Jeannie Shanzena was with us, political science professor at Iona University. And Chapin Fay is back with us, our Republican strategist, founder of Lighthouse Public Affairs. Great to have you both here. Chapin is our Republican. Are you worried enough about the size of this majority to keep Elise Stefanik in the House?
Yeah, I mean, that's always a concern when you have a slim majority. Keeping an unruly group of hundreds of people with varying disparate views is always trouble herding the cats. I think they're right to worry about it. But this is also there's pros and cons to being a team player, like Congresswoman Stefanik, right? She's a team player, a leader in the party. She will make a tremendous UN ambassador. I think it was a phenomenal pick. But sometimes being a team player means you got to do some things you don't want to do for the party and the team. She is a team player. I'm assuming she'll get something out of it if she agrees to stay. But when the president of your party calls and asks you to do something, it is very hard to say no.
Well, but when we consider the reasons for doing so, the team Chapin speaking about, Jeannie, was well aware of the roster and the way in which the roster would potentially be shrinking if Elise Stefanik were pulled out to play in a different position. That has been true for some time. So if actually the White House decides to take her out of contention, does that pass the sniff test to you that really it is just about the margin?
Yeah, this didn't make sense from the beginning. Not that she's not a good candidate for the job, but rather when you're dealing with this slim sort of margin to pull somebody out of the House. And as you just talked about, they pulled more than one person. But I think it does speak to the fact that the Trump administration realizes now 2 months in that while he has been able to move forward with a big component of his economic policy as it pertains to tariffs, or we're getting close to that point, the other part is stagnated and almost completely dependent on Congress. Those are the taxes. That's the deregulation. That's the unleashing of energy. And tariffs is threatening to increase inflation. And of course, that's very painful if it happens. And so I think they are really waking up to the fact that this is more and more critical that they pass this reconciliation bill. So even if they think they've got it, it doesn't make an ounce of sense politically to take a sure yes vote out of the House, especially in a state where the governor is blue and she has been told to slow walk any special election that would go forward after that. So I think it makes sense to keep her where she is for now if you really need to pass this reconciliation bill.
Of course, we've got two specials next week in Florida. Two specials we'll be watching on Tuesday. Chapin, and there is talk that Democrats think they can flip a seat here. Republicans in the state think Senator Randy Fine will be all right. But is that why we're having this conversation? Because of what's up in Florida?
It certainly is playing a role. I think you're seeing the Democratic candidate running a little bit stronger than probably anyone anticipated. So they are, I think the Republicans are ultimately be safe, but this is the calculation, right? And they're watching this, and per Jeannie's point, right? A lot of the Trump agenda hinges on congressional support. I mean, almost all of DOGE, right? If they're going to implement any of these recommendations stuff that's going to come next year, they need a willing Congress. And you've seen some Republicans like to, have a little independent streak, right? So you can't always guarantee on 100% in your caucus. So all of this makes sense to me. It's the right thing to worry about. It's unfortunate for Congresswoman Stefanik, having her sights set on the ambassador's role, but getting the president's agenda passed is the most important thing for Republicans in the Beltway, for sure.
Well, so when we consider that agenda, Chapin, and the budget reconciliation package that is expected to house basically the entirety of it, is there added fuel to the fire for Republicans now that we have a sense of an X date that, at least according to the Congressional Budget Office, could come as early as August, and that's if receipts don't come in low this tax season? Does that actually make this easier because they know they're up against that deadline to lift the ceiling?
I think so. I mean, all of the, all of these factors that we're talking about play a role, right? And, a lot of times particularly in politics, right, the perfect storm is brewing, right? So all the pieces have to fall in place. It's a very complicated thing, right? President Trump's agenda is unprecedented or controversial, or whatever word you want to say. It's going to be harder than typical to get things done and passed. So deadlines are helpful. Special elections are helpful. The Democrats trying to do everything they can to change the rules up in the North Country to prevent a Republican from replacing Congressman Stefanik. Like, all of these things matter, right? The Florida elections, what you just mentioned about the budget process, everything matters a little bit. But again, the driving force here, the driving notion is paramount, is getting the president's agenda done, right? So that's what the congressional leaders, at least, are focused on, hyper-focused on.
Agency heads trying to implement the Trump agenda as well. One of them is RFK Jr. Here's something that he was talking about: massive job cuts coming to the agency, Health and Human Services. Listen to the secretary.
Our department is filled for the most part with competent, conscientious public servants, and yet the agency has been inefficient as a whole. We're keenly focused on paring away excess administrators while increasing the number of scientists and frontline health providers so that we can do a better job for the American people.
Jeannie, we've seen a lot of firings at a lot of agencies. We've seen some of those reversed in court. Thousands of probationary workers fired, brought back to the agencies, and it's unclear how many have actually accepted these offers to return to a job they were fired from. Is the secretary on the right track here? Does this make Health and Human Services more efficient, more effective?
This, I have to say, we have to take a wait and see attitude. You know, first of all, we are going to see the birth of AHA, you know, Make America Healthy Again. And this has been a long-standing commitment of Robert Kennedy Jr. and also the president. And so that is part of this as they combine some of these divisions. There is nothing wrong with consolidation. There is nothing wrong with efficiency. The big concern here is, and we heard it in the hearings when he was up there in front of Congress and Bill Cassidy asked him, can you both do that and preserve these critically important things that you do for the American people as it pertains to their health? Can you still deliver on these core health functions? And if he can, great. But if he can't, there is going to be hell to pay, because this is a huge agency, and this kind of cutting, you know, 10,000 people, this kind of consolidation, it is big. It is a massive, massive bureaucracy. And do they still deliver for the American people is going to be the question after he's finished with this.
Well, and do you think he can get finished with it without running into legal challenges, given how we've seen many government layoffs ending up in the courts, Jeannie?
I think that's just a big question. I'm not sure he's going to be able to do it in the way he wants, but I do think there are probably cuts and consolidations to make. But again, it's how. And so far, we have seen him do things that have raised red flags, like hiring a vaccine skeptic, like canceling flu vaccine meetings. Like these kinds of things are things even Republicans in the Senate didn't want him to do. He started to do them. And to your point, Kaylee, he may run into the courts as he tries to make these cuts and consolidations.
Chapin Fay, promises made, promises kept.
That's what I would call it. Listen, change sometimes is painful. And, you know, Trump, like you said, Trump ran on all of this, including with RFK, and now they're trying to do it. And I would add, you know, what they're trying to do and radically transform government is something that the traditional conservative movement has been trying to do for decades, right? The conservative movement has been trying to get rid of the Department of Education for decades. And President Trump seems to be able to have the political capital, juice, and know-how this time around to get it done. Of course, the courts are always an option for the other side, and we've seen them use it to great effect in various ways. So there will certainly be a lot of fights, you know, tying this up. That's why the House Republicans and the president are concerned about the margin, right? This is a battle over the president's agenda. And, you know, both sides are going to use every tactic that they can to get it done. So I do think it will be difficult. I think it's going to be painful. I think they will have a lot of success, but some things are going to be prevented and stopped and overturned.
All right, Chapin Fay and Jeannie Shanzano, our political panel today. Thank you both. We'll have more straight ahead here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are selling off. The Dow, the S&P, NASDAQ, they're all declining right now as the U.S. pushes ahead with tariffs on automakers, reinforcing concern about a widening trade war, a topic we've been covering right here on Balance of Power. We got the S&P now down 20, a drop there of 0.4%. The S&P at 56.91. The Dow down 201 now, down 0.5%. The NASDAQ Composite Index lower by 81, a drop there of 0.5%. 10-year 4.36%, the 2-year 3.99%. Gold up $31 the ounce to $3,050 for the precious metal. A gain right now of 1%. West Texas Intermediate crude oil 69.80 a barrel, up 0.2%. And Bitcoin now down 0.5%, 86,848 on Bitcoin. 23andMe holding shares are surging after a judge ruled that the genetic testing company can try to sell information about customer data amid its bankruptcy. 23andMe shares, they're surging now by 56.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie, thank you so much. Live from New York, Charlie Pellet watching Wall Street for us here as we cover politics in the nation's capital. Thanks for being with us on the Thursday edition of Balance of Power. Kaylee, we were just talking about the potential for Elise Stefanik to either withdraw her name from consideration to be the country's ambassador to the UN or maybe delay that confirmation because of the super thin majority in the House. You know, we're not done with all the confirmations here. In fact, there's an important hearing taking place today. Former Republican SEC Commissioner Paul Atkins having his moment in the sun here in a hearing that veered into a lot of different issues, including conflict of interest. Part of his opening remarks from earlier. Let's listen.
Unclear, overly politicized, complicated, and burdensome regulations are stifling capital formation, while American investors are flooded with disclosures that do the opposite of helping them understand the true risks of an investment. It is time to reset priorities and return common sense to the SEC.
So a lot of the hearing did focus on what he would do at the SEC in terms of the regulatory landscape it could create when it comes to things like crypto, for example. But some of the hearing as well focused on the man himself, Paul Atkins, who after his previous tenure at the SEC that Joe just mentioned, went on to run Potomac Global Partners, a firm based here in Washington that had a lot of Wall Street clients. That's where the conflict of interest concerns come from that we heard about in the hearing today. And watching all of it with us here on Bloomberg TV and radio is Lydia Bayoud, who covers regulation for us here at Bloomberg. So, Lydia, obviously the conflict of interest concerns we heard, for example, the ranking member, Senator Elizabeth Warren, highlighting extensively. Ultimately, though, that isn't expected to tank his nomination.
Not at all. He's got really strong support. And even Warren was by far the most kind of aggressive of the Democrats going after that record. It was touched on by a number of other Democratic lawmakers. But certainly he's got very strong support from Republicans who see him as sort of uniquely well qualified to run the agency, and especially at this time between all that's happening in capital markets and within government.
His personal assets valued at more than $328 million. He owns $6 billion worth of Bitcoin. This is, by the way, between Atkins and his wife. He will be divesting from some of these investments or all of them?
He'll be divesting from the majority of them. In a letter that he sent to Senator Warren today about some of her concerns with his recusals and ethics, he said he was divesting from, I think, at least 150 investments. But now his wife is an heir of the Tamco Roofing family, so they have some kind of family personal wealth. He is keeping a trustee of many of the family trusts. So there are assets that he is keeping, but he said that he's met or exceeded sort of the standard requirements for someone who's going to be in this role.
Well, and of course, those assets are dwarfed in comparison to the assets of, say, Elon Musk, who he was actually asked about in the hearing today. Didn't want to comment on the SEC's actions against Elon Musk, but talked about Doge.
It's true, yeah. He was asked sort of, would you go along with Doge if they come to the agency? And he said, yes, I would, certainly. And he'll be looking at whether or not the SEC is being a good steward of taxpayer money and how kind of like their mission fits in with what's required by Congress.
Great to have you back with us. Lydia, thank you so much, making it clear that he won't have any trouble, it looks like, at this point, Kaylee, being confirmed. Thanks for joining us today on Balance of Power on Bloomberg TV and radio. As we bring you back to the Signal story that we've spent so much time on this week, we heard from Caroline Leavitt, the press secretary at the White House, about this a bit earlier today as this story moves into a fourth day now after The Atlantic actually published actual excerpts from the texted attack plans that the press, or I should say Secretary of Defense, put on Signal. Let's listen to the press secretary.
Well, we have never denied that this was a mistake, and the National Security Advisor took responsibility for that. And we have said we are making changes. We are looking into the matter to ensure it can never happen again.
And this is where we start our conversation, Kaylee, with Denver Riggleman. We've been talking with a lot of different voices on this story, voices of experience. Denver, of course, former Republican congressman, but also is steeped in technology. He's started an AI company, spent a lot of time working as an intelligence official in the United States Air Force, and he's with us now back on Bloomberg TV and radio. I hope I framed your resume properly here, Denver, because you have unique insight into what happened here with regard to whether this was in fact classified information, whether there was some sort of hack or a media hoax, because we're hearing all three in Washington right now. What do you think?
Well, and thanks for having me on. I was listening to the prior segment, and I think some people are rethinking their Senate confirmation votes after what you've seen with this Signal debacle. And, my background, you did couch it pretty well, Joe, and great to be here with Kaylee, too. Here's the thing. I was an Air Force mission planner. And when I say that, I actually deployed on multiple mission ops, was trained on F-15s and F-16s, B-1s, probably mission planned more strikes than everybody on that panel has seen or done in their lifetimes. And for anybody to say that this was a hoax, number one, it's impossible with Signal. Nobody can sneak onto there. It's obvious that Mike Waltz already had Jeff Goldberg in his contacts. Someone probably was talking to him previously, which I pointed out before, right? That he probably was leaking or talking to Jeff Goldberg on some other thing, which is why he's so violently aggressive in pushing these conspiracy theories. But also when you look at what happened on that Signal chat, when you're looking at time over targets, when you're looking at specific type of airframes, when you're looking at a specific mention of the target, all that is at the minimum secret or collateral level. It's ludicrous to say that they weren't actually talking classified on those threads, especially when it was that far out from the strike. If you can imagine somebody else being added that maybe wasn't as ethical as Jeff Goldberg, what our enemies could actually do. Because if you know the airstrike or the platforms, you can infer the weapons platforms that they're actually carrying. So I find it laughable. And anybody who's been in ops, real ops like I have, in the United States Air Force or on the ground, or Marine Corps pilots, Navy pilots, Army pilots, they understand that time over targets, specific payloads or specific aircraft, and the target itself would be classified.
Okay, well, Congressman, help us work through the argument that the administration is making that even if all of that were true, these plans were not compromised, or at the very least not thwarted. This was a successful mission by all accounts, according to their telling, and that's why the president says this actually was no problem at all. What do you think?
I find it interesting that they say it's no problem to have a leak from the SecDef at the highest levels that was only by the good fortune that they had an ethical U.S. citizen that they had included on these talks to somehow say, just because we screwed up so badly that we could put troops in harm's way, and because it didn't, that means it's all hunky-dory. It's so ludicrous from an intelligence background, but also from a military background, but just common sense. Because when you look at what these individuals have pledged to do and how they've supposedly been trained and gotten all the security briefings, they broke so many protocols in this one incident. You wonder how many protocols they've broken in the past. There's something in the military where we say past performance is indicative of future performance. How many other screw-ups have they done or they're going to do? When you have people who have no business being in positions of power, who don't have the expertise, the acumen, right, or the judgment, most of them conspiracy theorists or believers that the election was stolen. When you have people with that bad a judgment that are actually supposed to be holding security clearances, you don't want those individuals actually affecting operations based on their own bad decisions. And I think that's what we have right now is we have fantasy-based policy coming from the administration, but we have individuals that have been confirmed by the Senate, as you guys alluded to earlier, that really shouldn't be there. And I think when you have people who don't have the experience level or the acumen or the ability to plan correctly or can't follow directions or who don't know security, all of that together could be a disaster for the United States. And I think what it indicates is that they actually could be the reason that the United States has a debacle in the future based on their performance today and literally heads should roll.
Well, the thing is, I don't know. It looks like that might not happen here in Denver, and you might suggest otherwise, but the president is standing behind his team, and he's suggested there's nothing to see here. So is there a chance that there'll be a credible investigation led by Congress?
No, not going to happen. No. My guess is there's going to be an executive order allowing Signal tomorrow, to be used for classified operations, right? Or there's going to be some kind of preemptive pardon, for Signal users in the DOD. I mean, it's so ludicrous, and I think it's what's scaring our allies right now. And I think what people are concentrating on, the fact that the Signal, they invited somebody, they were discussing classified information, right on a comms channel that wasn't authorized. But it's also, how do our allies think about how they were being spoken about? There's so many cascading effects here, Joe and Kaylee, that it's hard for people that, have IQ above moron and common sense to grasp how this administration could defend this in any way. But we've seen this in the past. I mean, we've gone from where there's not going to be an investigation on this to reparations for J6, insurrectionists. So, let's not think that this administration is going to all of a sudden change their spots and have any kind of real adult in the room type of decision making when it comes to our troops in the field. And I think that's what it goes back to, is me being a military member. I just want to make sure that our troops in the field, the people flying those missions, our forward air controllers, those on the ground, all those are protected. And right now with this administration, what we saw with this debacle and releasing this information, I don't know if anybody in the military can feel 100% that this administration has the best interest of the military or our national defense in mind.
Well, and talk about the role our allies that you were just referring to play in ensuring the safety of the military, or at least the obtaining of necessary intelligence, because you talked about the way our allies were spoken about, the idea that Europeans are freeloaders and shouldn't be bailed out. It'd be one thing if they were simply offended. It would be another if they decided the U.S. is not trustworthy in terms of receiving and transmitting classified information and intelligence they may have otherwise shared with us. What would be lost if allies started holding back some of that material?
Oh, the first thing that's lost, it really is our ability to maneuver and massage events that are happening in a foreign affairs environment. And I think that's what scares the hell out of me, is that we don't have this ability to dictate or to look at our best interests or to be helpful. As sort of, we've listen, people might say, hey, Den, we don't know if it's a fantasy or reality, but we've looked at ourselves as sort of the moral do-gooders, the people that could come in, right, and give some of these security assurances to our allies. If our allies don't believe that, what happens next, right? And I think what they're seeing too is there's no truth in fact baseline to any of the decision making. It seems to be knee-jerk and based on fantasy, especially when you're looking at Ukraine. When I'm talking about air ops, Amy McGrath, Marine F-18 pilot, we're doing a new show, called Truth in the Barrel that's coming out, and we're talking about this exactly. The question you just asked, right, is how does all this actually affect our European allies, but how does this also affect Ukraine? Right, specifically. So how do we affect Ukraine now, Joe and Kaylee? What is our position? J.D. Vance already made it clear when he was there before, right, that they don't even think Ukraine can be in NATO. I mean, it's just ludicrous to give up all of that sort of negotiating clout. So I think what you have is that the EU needs to look at going their own way. And I think you're seeing some of those positions when you're looking at Poland saying, hey, you know what, maybe we need to have our own nuclear program. Or you're looking at South Korea saying, hey, maybe we need our own nuclear program now. All the security assurance, nuclear assurances, all the weapons, all of our contractors, all of those decades and decades of building trust is broken immediately. And how do we get that trust back? So there's multiple cascading effects for the decision-making and the hyperbole that's coming out of the administration.
Denver, we've only got a minute left. President Trump had said repeatedly that the platforms that are used now to share classified information are cumbersome. They're not efficient. They're not effective. That's why they had to reach for Signal. I just wonder, if from your technical background, never mind your political one, is it time for a new platform? Is there a classified friendly Signal, a government friendly platform that they need to start working on?
Listen, and I can't use all of the classified chats, but as back even in the middle of the 2000s, we had a secure chat called Jabber. You have secure chat all over the place, right? You don't need to absolutely go to Signal. You have encrypted phones. You have all that also. Are there things in the military that are absolutely bureaucratic and ridiculous? Yes, I was there. Gosh, I know Joe and Kaylee better than most, right? Yes, but don't break the law or be stupid because you think something else needs to be used. Try to do better. And I think that's what it comes down to with military ethics and integrity. Use what you have, and if you have to change something in the future, then work towards it then.
All right, we'll leave it on that note. Former Republican Congressman Denver Riggleman, also former Air Force intelligence. Thank you for joining us on this early edition of Balance of Power today. And Joe, we'll be back for more later on.
That's right. Keep your emojis handy. We'll meet you back here 5 p.m. Eastern Time on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on TV, radio, YouTube, and Bloomberg Originals. This is Bloomberg Business Week Daily for this Thursday, March 27th. And yeah, we've got stocks bouncing around again.
Yeah, the S&P 500 down 0.4%. We earlier saw a turnaround, Carol, with everything in the green, but that's not the case. We'll see what happens over the next 2 hours. The NASDAQ down about 0.5 percentage point right now.
Yeah, once again, really putting stocks under pressure. Concerns about a widening trade war. We sound a little bit like a broken record. And this is all happening despite some upbeat news on the U.S. economy. And so for the next 60 minutes, we're going to look at different aspects of the U.S. market and the health of the U.S. market, also the health of the U.S. economy, including the latest on U.S. tariffs. Headlines continue to come and cross the Bloomberg, and really what might be the cost of the so-called Liberation Day.
Also a highly anticipated and hot IPO. The question is, how hot and how highly anticipated? Because it's cutting the offering. M&A also, where are you? I thought this was supposed to be the year of M&A.
Exactly, right? Those are two great reads on kind of the health of the U.S. markets. Plus, when will the housing market show some more signs of life? We're going to talk with someone who has a front seat to it all.
And in sign of perhaps the times, the re-Hooterization of Hooters. It's one of the most read stories on the Bloomberg terminal.
All right, a lot coming your way, folks, in the next hour. Let's get a check, though, on the trade. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. We have got the Dow, the S&P, NASDAQ all declining right now. A lot of red on the screen right here. We got the S&P down 20, 2691 where we stand. That is a drop there of just about 0.4%. Your Dow Jones Industrial Average is trading lower as well, down 201 right now. The Dow down 0.5%. NASDAQ Composite Index down 77, drop there of 0.4%. Broad-based selling with the Russell 2000 Index of small cap shares down now by 0.6%. The 10-year 4.36%, the 2-year 3.98%, gold up $34 the ounce, up 1.1%, and West Texas Intermediate crude up 0.2%, 69.76 a barrel. Bitcoin down 0.5%, 86,890 on Bitcoin. Stocks lower after the U.S. pushed ahead with tariffs on automakers, reinforcing concern about a widening trade war. An outweighing data this morning that showed faster than estimated growth in the U.S. economy. Auto stocks lower right now across the board. GM particularly hard hit, down 7.2%. Ford down 3.3%. And Stellantis, that is the parent of Jeep and Chrysler, among many other brands, Stellantis down now by 1.8%. So again, recapping, U.S. stocks are trading lower right now with the S&P down by about 0.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, you're up to date on the U.S. trade on this Thursday. Let's get to the latest on trade, certainly those trade tariffs that we keep seeing coming from the White House. The latest U.S. trade salvo continuing to be dissected today. President Trump signing a proclamation that happened Wednesday at the White House to implement a tariff on auto imports and pledged harsher punishment on the EU and Canada if they join forces against the United States, expanding a trade war and really triggering some threats of retaliation.
What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%. This is going to lead to the construction of a lot of plants, in this case, auto plants, and you're going to see numbers like you haven't seen.
All right, that, of course, was President Trump yesterday at the White House. With more, let's head there and to Bloomberg News senior reporter Jennifer Delowy, who is at the White House at this hour. Jen, lay it all out for our Bloomberg audience, how the tariffs roll out, what's the latest, and are there any exemptions?
Right. So the way these are constructed under the proclamation that the president signed yesterday, they will initially hit fully assembled vehicles, and that will start essentially on April 3rd. The tariffs will be collected starting at 12:01 a.m. that morning. They will eventually, as soon as May 3rd or by May 3rd, start covering imported parts as well. So, your engines, your transmissions, your auto components. The idea being there is that, White House trade advisors, the president, believe that the U.S., is doing a lot of assembly of foreign-made components in its auto plants and not enough a generation of those high-value parts themselves. So the idea of extending to parts is a bid to reshore more of the entire value chain. And importantly, while there is a bit of a temporary safety net for USMCA compliant trade from Canada and Mexico, it is only a very temporary reprieve after the U.S. government decides how to assess the U.S. components of imported cars from those countries, it will essentially assess the levy on everything that is foreign about them, even though obviously Canada and Mexico are part of a trade deal that was negotiated in the first Trump term.
Right. Then the president who's the president now, made a really big deal about that USMCA back during the first term. We've seen the president already, though, Jen, roll back tariffs that have been announced, especially with regard to our neighbors closest to us. Is there any chance that over the next month, these could not be implemented or they could be rolled back?
With this president, I think there's always a chance. We have clearly seen his willingness to negotiate tariffs, especially with Canada and Mexico. To be sure, the president yesterday in the Oval Office said emphatically that these are permanent. These will last his entire term. Even so, we now know that, it's been reported that there was a call between Commerce Secretary Howard Lutnick and Ontario's premier. And after that, the Globe and Mail reported that the province now expects the U.S. to lessen the impact on Canada. So there's certainly a lot of effort by countries and companies that are being affected by these or expect to be affected to get some kind of exemption or a dial down.
So what else is coming next week in the way of tariffs? It's really hard. Tim and I laugh. I know Bloomberg has done a great job of trying to keep
We have the Trump tariff tracker. I have it pulled up. It's a Bloomberg.com story.
Right.
Google it. You'll get right to it. It's really perfect.
But to say that, it is really great. But it's like stuff still kind of is coming and maybe more stuff is coming. So tell us what we should expect for, next week.
I mean, next week is very, very big on the tariff front. The president has been talking about April 2nd for weeks as being what he calls Liberation Day for America. He has promised reciprocal, apologies. He has promised these reciprocal tariffs that will essentially reflect the levies that other countries impose on the U.S., both in terms of direct tariffs, but also things like a value-added tax or even, regulations that act to deter the import of U.S. goods into their countries. So the idea is that those would be set to reflect kind of what, as he puts it, what they charge us, we'll charge them. Yesterday, he did signal some, willingness to be maybe more lenient. He actually said, these will be more lenient than people are expecting. So we'll see. We'll stay tuned. He also indicated that they would hit all countries right away, as opposed to just focusing on what he has considered the worst offenders, the folks he calls the Dirty 15. We're also, by the way, expecting sectoral tariffs. He has threatened those on pharmaceutical imports, on imports of lumber, and on imports of semiconductors and chips. It isn't clear how those and when those will all be rolled out, but yesterday the president indicated that lumber is likely next week.
Well, perhaps to throw another, another variable in here, China and TikTok, and the way that there could be a rollback in tariffs or partly as a result of a negotiation strategy with TikTok. President Trump said he would consider lowering tariff rates imposed on China to secure Beijing's support for that sale of TikTok's U.S. operations to an American company. What do we know about that? How would that work? Is this just a negotiating strategy?
I think Trump clearly has shown that he sees tariffs as not just an economic tool and not just a tool of U.S. geopolitical might, but really, an opportunity to exact concessions from other countries. And on China, of course, the U.S. government is trying to, shepherd a deal that would allow for the sale of TikTok to a U.S. company. That deadline under a law that Trump extended, the deadline for, hits April 5th. Yesterday, he said, look, I'm willing to, maybe I'd be willing to shave some of their levies a little bit, shave the tariffs on China if they agree to the deal, because there is some kind of China approval component here. How that actually works, we'd have to see. But I think it's quite clear, there are concessions he wants from China on an array of fronts, including drug trade, and TikTok may be something he's willing to negotiate on.
Is it just kind of always live? In other words, there could be more, there could be less. That's kind of the environment, at least right now, that we're in.
It's very fluid. I mean, even yesterday, there was a lot of fluidity around the scope of the auto tariffs before it was signed. We didn't know if it was going to be parts. We didn't know if it was going to be fully assembled vehicles. And, even after these things are put in place, they can be changed many, many times over. Fluid, unpredictable. That's where we are.
Fast moving river. That's what it feels like. All right, Jen, thank you as always. We know you are super busy as well. Bloomberg News senior reporter Jennifer DeLoe joining us certainly from the White House. All right, latest on tariffs. Now we want to kind of get to, so what does this mean potentially for the U.S. economy?
This on a day when we got another read on the U.S. economy for the final quarter of 2024. For more, let's go to Bloomberg Economics U.S. economist Stuart Paul. He joins us here in the Bloomberg Business Week studio. A lot of places to start. We could start with fourth quarter GDP, weekly jobless, core PCE. We got an important inflation print tomorrow, the one that the Fed really cares about. Does any of this matter when we continue to see a president change his mind on tariffs or impose more tariffs and really appear not to be done with that process?
GDP doesn't matter as much. The unemployment insurance claims don't matter as much. I do think that the core inflation and spending items do matter a lot. So tomorrow we're going to get the February core PCE inflation report, the Fed's preferred measure of prices. We're expecting to see 0.35% month-on-month core inflation. That's about double the pace the Fed needs to run to get back to its 2% inflation target. And we're also going to see a major surge in spending, in part on the back of autos, which auto sales were terrible in January, major rebound in February. Why does it matter? Folks are looking out in the world and they're expecting to see tariffs hit and they're pulling forward their buying plans. So in anticipation of future prices tomorrow, they're spending more today, which actually generates the inflation that they're expecting to see tomorrow, separate and apart from the cost push effects of higher tariffs.
Right.
So yeah, if you're the Fed, if you're consumers, if you're looking at the broad macro data, things like inflation and spending still do matter, separate and apart from what's going on in the West.
You were telling me you're going to go buy 6 cars this weekend.
Yeah.
So then you get them before
maybe
the
even a
tariffs
baker's
are imposed,
dozen
right?
or something.
Yeah,
right?
Saturday's going to be beautiful. A great day to walk the lot.
Well, I've been thinking about this. Like, how do you as economists and who look at the U.S. economy, what's the rule of thumb when it comes to tariffs go up this much? This is what happens to the U.S. economy, or this is what happens to inflation. How do you play that out?
So we have a broad array of models. We use a whole host of different methodologies, but what it really comes down to is looking at the size of the market that's being tariffed, the size of the industry that's being tariffed, the effective tariff rate, how much our effective tariff rate across all imported goods moves, and then we map that to GDP growth and to inflation. So if we look at what happened with autos yesterday, our effective tariff rate is going to go up about 2 percentage points. Not huge. We're still going to be running at an effective tariff rate of just about 5%. Not a big deal. What it does do is take about 2 percentage points, 0.2 percentage points off a full year of growth, and it boosts core inflation by about 0.1 percentage points. If we think about reciprocal tariffs,
right,
and what it could mean in the extreme, if we're looking at value-added taxes, if we're looking at non-tariff measures, and we're matching tariff rates with our top 15 trading partners, that's an effective tariff rate of about 35%, not 5%, 35%, which will shave off about 4 percentage points from growth over about 3 years. So when you start mapping into the aggregate, it could get to be some pretty big numbers.
So how do you map that against this idea that the president has, which is if we impose these tariffs, we will see a return of manufacturing back to the United States. We will see more economic activity in the United States as a result. Do you map that out?
We do. The hit that consumers take and the consequences for consumption tends to matter more than the investment implications of trying to reshore additional manufacturing, getting people back to work. This is part of the problem with tariffs in general, is that some of the benefits, like investments, some of the benefits to auto producers, for example, are very concentrated, but the costs are actually very diffuse, and when they start racking up across the entire economy, they get to be some pretty big numbers.
One of the things I keep thinking about, Stuart, is that as we look to bring more manufacturing back to the United States, and I keep kind of asking, do we want to be a manufacturer of shirts? Not that there's anything wrong with being a manufacturer of shirts, but what is better for an economy, a developed economy? Is it better to be a service-led economy, high-tech? Like, what is it that's better from an economic standpoint?
For a developed country, being a services-oriented economy and being a consumption-oriented economy is really what matters. And when that's the case, you want to have low imported goods costs, right? You want costs to be relatively low. But there are 4 different factors, I think at least, that are in play when thinking about what could be motivating tariff policy, right? You have typical vintage Trumpism going back to the 80s where He's just looking at the trade balance and wants to win. You have Vance Midwesternism, I'm calling it, which is he looks out to the Midwest, sees the Rust Belt totally hollowed out, and says, cheap imported goods are not the American dream. We need to bring hope and revitalize our manufacturing base to give people jobs. You also have defensive onshoring of major pharmaceuticals, for example, medical supplies, and that's a reason to onshore. And then finally, you have this negotiating tactic, this sort of monopsonist, we're the big market that everybody wants to sell into so we could extract rents from other folks. When all of those motivations are in play, we're still going to see tariff policy flying around. We're still going to see these proposals separate and apart from any sort of actual growth that we could generate. That's a secondary effect.
In your view as an economist, does this America First agenda when it comes to manufacturing in the U.S., does that work? Will it work?
In terms of generating growth?
Yes.
Fundamentally, no. Because if we think about the things so Carol, as you mentioned, do we really want to be manufacturing shirts? Not that there's anything wrong with that. It's a low value good. It's not going to do very much. The benefit to us of the additional manufacturing jobs in low value goods like shirts probably isn't there.
Right.
If you want to do some America First defensive onshoring of things like semiconductors, the amount of revenue that you generate per job created, or let's flip the ratio and say how many jobs are created per $1 million of revenue generated, you actually employ relatively few people. So we're not going to end up rebuilding a manufacturing industry that captures a large share of our labor force. It's just not going to happen.
Just 20 seconds, because that's like the question, I feel like, because we talk about the gaps that are here in the economy of the haves and have-nots. So what is it from an economist's perspective really helps the U.S. economy benefit more in our society? And just really quickly.
Productivity growth. It's all productivity growth, not reversing the deindustrialization of the past century. It's productivity growth. It's capitalizing on new ideas and innovations, and that's why the U.S. has outperformed everybody else. It's mostly because of Silicon Valley and the development of modern finance in the U.S.
Killer stuff. So appreciate it. Stuart Paul. Yeah, that was like a masterclass. Folks, you missed it, download it.
Check out his research at Bloomberg Economics. Read all of the team's research. Great. They know what they're doing. Hey, we got some breaking news out of Washington.
Yeah, let's get to it. There was expectations that New York Representative Elise Stefanik, that her nomination was going to be withdrawn, that nomination to be the U.S. ambassador to the United Nations. We're hearing that indeed she will stay in the U.S. Congress. So just a quick headline, but monitoring some more developments out of the United States, I should say the United States Capitol.
Yeah, we're seeing a post on True Social from President Trump. It's long. I'm going to read some of it. I have asked Elise, one of my biggest allies, to remain in Congress to help me deliver historic tax cuts, great jobs, record economic growth, a secure border, energy dominance, peace through strength, and much more. With a very tight majority, I don't want to take a chance on anyone else running for Elise's seat. The people love Elise, and with her, we have nothing to worry about on Election Day.
All right, folks, we're going to stay with the health of the United States, the markets, the economy, two key indicators when it comes to U.S. markets, both a bit of a bummer. That's next on Bloomberg Business Week Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ very much in the red. Right now, we have got the S&P falling 6 to 57.05, a drop now of 0.1%. Stocks lower after the U.S. pushed ahead with tariffs on automakers, reinforcing concern about a widening trade war. The 10-year, 4.36%. The 2-year, 3.99%. Again, the S&P down by 0.1%. Gold up $34 the ounce. Spot gold $3,057. That is a gain of 1.1%. West Texas Intermediate crude up 0.4%. WTI 69.94 a barrel, and Bitcoin a little change, down just under 0.2%. Bitcoin right now 87,132. Jefferies says Advanced Micro Devices is falling further behind NVIDIA in its technological capabilities, and that could continue to pressure the stock. Jefferies analysts say NVIDIA's chips have a significant performance advantage over AMD, and this gap is expected to widen with NVIDIA's upcoming product cycles. NVIDIA shares today down 1.3%. Advanced Micro Devices lower by 3.3%. Again, recapping equities lower. S&P down 6 points, down 0.1%. The Dow down 0.2%. And NASDAQ right now is moving lower by 0.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, when we think about the health of the U.S. financial market and the business environment here in the U.S. overall, we often consider two things: the market for new stock offerings and also M&A activity. Both areas are among two stories on the Bloomberg that are among our most read. We're going to get to both in this next segment. To do that, we have with us Ryan Gould, who is Bloomberg News U.S. IPO and Deals reporter, along with Bloomberg News equities reporter Bailey Lipschultz. Both are here in studio. Where to begin? I want to start with CoreWeave, Ryan. So let's go there, because this is certainly one of the most highly anticipated IPOs, probably one of the largest this year, and yet all of a sudden they have kind of pared back their offering in a big way, including the price too.
Yeah, I'm thinking back to when I was here last Wednesday.
Not so long ago.
Yeah, I mean, I think we were sort of talking about CoreWeave being a sort of bellwether for the sort of IPO market writ large for the rest of 2025. And yet, fast forward a week, and we're now looking at one of what was meant to be one of the biggest tech IPO offerings of the year, being quite substantially, dramatically scaled back. So, you'll remember we were talking at one point about CoreWeave getting a valuation of up to $40 billion. Now, with the revised terms that have come out today that we reported on this morning, they're now looking at a valuation on a fully diluted basis that's sort of around $23 billion. Bearing in mind, that's sort of roughly the mark of their last public round. So pretty dramatic.
What happened here, Bailey Lipschultz? This was supposed to be the hot one.
This was supposed to be the hot one.
Is it the market that you cover day in and day out? The volatility, or what?
People point to a number of things. So face value, NVIDIA, an investor in the company and one of their biggest customers, is down 4.7% this week. So that's a mark to the negative. The NASDAQ 100's back down more than 10% from the peak from last month. So you have a risk-off mentality. You have people questioning and kind of poking holes in the investment thesis of what does the moat look like for this company if they're renting capacity? What does the debt load look like? About $12 billion in debt. For a company that needs to sell debt and sell equity to expand in this market, where we're seeing people punishing not only AI names that were in favor before, but also are punishing companies that are high cash burners, it's a tough needle to thread. And the big question was, why would you go out before tariffs come into effect next week? And we're seeing a lot of these factors play out in real time. And that's why it went from $4 billion to $2.7 billion to now really 1.5.
It's wild to me, Ryan, that you could see just within the volatility of a week's time, such a dramatic pullback in valuation. Like fundamentally, not much has changed. We knew about tariffs last week. We knew that that NVIDIA was having a tough time. We knew that the NASDAQ 100 was in correction or close to correction. Like, it's a very short period of time without a huge event to change a valuation.
I think this kind of gets to the heart of the IPO process in a way, because I think before you get on the road, i.e. before you set a price range and actually start marketing the shares, in a kind of a formalized way, as we've seen in the course of the past few days, I think, people come up with very different ways to sort of justify orders and valuation and all these kinds of things. And it strikes me, because we've seen this with Venture Global last year, I guess we'll come on to that,
This is the LNG
Yeah,
company.
I mean, it's a very good example as to some of the dynamics.
It was a very hot IPO, and there's been a big pullback in the stock since.
And you know, they just to recap it, like they were looking at sort of $110 billion valuation, ended up really being cut by like 40%.
Yeah, it's massive. Could this be pulled?
I think it's still fluid and it's still on track to price the rest of the day. I mean, our understanding is, as of right now, that is not something that is likely. But I think, you know, just given where it's at.
All right. So IPOs, the deal makers, the bankers, like they want this stuff to happen. The bankers also, Bailey, want M&A activity to happen. And again, Tim and I have been laughing. We just had a guest, wasn't it this year, that we were just like, this was supposed to be the year that M&A finally came back.
It was supposed to be. And this was supposed to be the 2 quarters that really we saw the red tape being cut and companies going out and making these massive takeovers, or companies wanting to finally get companies out of the door through public offerings. The big thing that we've been seeing, and when we talk to lawyers, bankers, even companies, is it's hard to have a board meeting on Tuesday and think about taking over a company when your world can be flipped upside down by a tariff threat, reciprocal tariffs, and there's so much uncertainty. So when you think about it, if you're investing in stocks as a portfolio manager, you can at least get out of companies for an incremental loss. If you're buying a company, you're making a long-term bet that you understand the fundamentals and what that business looks like 3 months, 6 months, 9 months, 3 years from now. And that's not the case in the current backdrop.
Okay, but money is still flowing, guys. Like, let's not, you know, if somebody were watching right now, they might say to themselves, wait a second, I just read the story today that OpenAI is close to finalizing a $40 billion SoftBank-led funding round. So there's that. And then Wiz last week, Bailey, that was a big deal. $32 billion, Google buying Wiz. There's some M&A.
Big deals are happening. Katie Roof put out a story about the number of private takeovers, greater than $1 billion being on one of the strongest quarters to start in quite some time. It's not what people expected, A, and B, there's so much private capital that OpenAI getting that kind of a deal with a SoftBank, there's a capacity to write that check. When you come back to CoreWeave, hedge funds, strategics have been able to write big checks privately because all you need is 5 people to say that valuation makes sense. If you're doing a takeover or if you're taking a company public, that's getting remarked every second. And that's where the scrutiny comes in.
Yeah, especially with the headlines kind of fast and furious and can change, you know, every hour or every day and so on and so forth. So Ryan, the reception that CoreWeave ultimately gets when it goes public, how will that ultimately impact future listings that we might see from the year? If it doesn't go out well, should we expect an even bigger cooling?
I think it's, you know, I could sort of lay out 2 avenues kind of, because with CoreWeave, if you're thinking about it from a sort of tech IPO perspective, I think this was meant to be the biggest of the years, I say. And so anyone looking on and looking at something like this with the massive tailwinds behind AI and AI infrastructure and data centers, et cetera, not go well, you would probably have hairs on the back of your neck. Looking at this, thinking, is this probably a good time for us to be looking at another quarter, another 2 quarters of a delay? I mean, when you actually think of the names in the pipeline, you've got things like Klarna, you know, also meant to be a sizable offering. You've got Chime.
Klarna's a 20-year-old company, or more than 20 years old at this point. Like, it's been waiting IPO for a long time.
Yeah, I mean, you know, there's Chime, there's StubHub, which, you know, flipped public last week, and you know, these are big, high-profile deals. So you can count your money, you can bet your money and say that the banks, like some of which are also on the CoreWeave trade, are wondering what to do.
Is CoreWeave an exception in that it's such an AI pure play that, you know, can you separate CoreWeave out from some of the other IPOs because it is such a, you know, we've seen so many headlines about rethinking the AI spend that maybe this is in a kind of a special case?
I think you definitely can. I mean, look at Joe Tsai of Alibaba saying, you know, that there's a massive bubble in AI and, you know, sort of it could start to outstrip demand and all this kind of stuff. So I think, yes, you can. I think there was a smart note we put in the story from D.A. Davidson that Bailey pointed out around sort of, you know, it being sort of a highly levered way for certain companies like Microsoft or NVIDIA to sort of redirect some of their spend.
Right.
But yeah, I think you can't really compare CoreWeave to a StubHub. They're very different markets. They're very different structures. And frankly, they're meant for different purposes. It's probably a different kind of investor who's investing in StubHub versus CoreWeave.
So Bailey, if you think about the environment, what would have to change for the floodgates to open up?
Clarity in one way or another. I was talking to multiple bankers this morning away from the deal, and they were just kind of pounding the table saying, if you want to IPO or if you want to take over a company, you're right now dealing with uncertainty and risk that is ever changing. Does April 2nd become May 2nd? Does May 2nd become June 2nd? So if you can't allocate capital as an investor confidently in the public markets, the bar gets much higher allocating it in the private markets.
I'm curious too. Do any of the bankers, Bailey, think that this might be M&A might be a second half of the year story? And I think about how many have said this is President Trump is doing kind of a reversal. His first term, he cut taxes, and then we saw tariffs. This time around, he's doing tariffs, so that maybe we'll see taxes being cut and regulations being eased, kind of maybe later on, so that things look rosier in the second half. Anybody kind of hopeful, or they're not willing to bet on that yet? It sounds like.
Carol, I'm going to say something that Ryan knows all too well. We are a quarter or 2 quarters away from IPOs, floodgates being open, and deal flow spiking every quarter for the last 2 years.
It's always around the corner.
So bankers are paid optimists.
Yeah.
I agree. You're making good points. And I think that if that fundamentally plays out, that at least gives boardrooms some form of comfort. But
well, are they ready to go? Like, pull the trigger on deals? Like, they have things where they've kind of almost gotten to that point?
I think so.
And they're ready to...
Yeah, and I mean, we hear a lot on the desk around sort of, there are lots of companies, big blue chip companies, drawing up their dream lists again or refreshing their dream lists of acquisitions. And I'm not talking sort of, $5 billion deals. I'm talking like $30 to $50 billion deals in certain cases. The idea now that, again, with Wiz having happened last week, I want to be careful with my words, but the idea that it would just be so out of the ordinary to see something like a $50 billion M&A hit tomorrow, just amid all of the other noise, because it's not just the market's noise, it's the regulation noise as well.
Yeah.
Well, to that end, Ryan, we know that the president in recent weeks has said that he doesn't necessarily care about the stock market the way that I think many people who saw what he did in his first administration thought. I think there's certainly some debate there. Is there any indication in your view that folks in Washington are concerned about deal activity not happening under this president's first few months?
I think, again, back to the clarity point, I think it's a case of let's get the tariffs let's see what form of tariffs are implemented. Yeah. Let's see what kind of noise that creates. And then let's sort of map out what's possible. Because if you're Google Wiz, so you're Google, you announce this deal that is almost certainly going to attract DOJ or FTC attention. I mean, who else is looking on and thinking, okay, we have one of the similar size. How much money are we prepared to spend to actually litigate this and get this through? I think that's a live dynamic conversation right now.
And to briefly make that about IPOs, I was talking to some prominent lawyers yesterday about processes and speaking to regulators, and they said we're getting more gun shy because when we pick up the phone to call the SEC, we're less confident that someone's A, answering, and B, what their response is going to be relative to what we heard a day ago, a week ago, or a month ago. And that's impacting how people are thinking about deals as well as IPOs, just because if you don't know what regulators are going to tell you, you can't go to your clients and advise them with a well-informed view.
Right. You need clarity. You need things to settle down. It needs to be consistent. Guys, thank you so much. Really terrific to talk to you both. Ryan Gould, Bloomberg News U.S. IPO and Deals reporter, and Bloomberg News Equities reporter Bailey Lipschultz, both here in studio.
Hey, coming up next, we got a great program continuing. We're going to more on the health of the U.S. macro picture from a company that understands housing from the ground up, literally. That's next on Business Week Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. As we have been reporting, President Trump is withdrawing Representative Elise Stefanik's nomination to serve as the U.S. ambassador to the UN due to Republicans' narrow hold on the House. Now, the president wants to keep Stefanik in the House to preserve a consistently loyal Trump vote, as replacing her would have taken several months and potentially left the seat vacant into the summer. Stocks are lower across the board. Stocks falling after the U.S. pushed ahead with tariffs on automakers. The S&P right now down 4 to 57.07. That is a drop of just about 0.1%. Dow Jones Industrial Average lower by 102, down 0.2%. And NASDAQ down 23 for the NASDAQ Composite Index, down by 0.1%. 10-year 4.36%. The 2-year 3.99%. Gold up $37 the ounce, 3,056, up 1.2%. And West Texas Intermediate crude up by 0.4%, 69.91 for a barrel of WTI. Again, U.S. stocks are trading lower. We're keeping an eye on 23andMe holding shares. They are surging after a judge this morning ruled that the genetic testing company can try to sell information about customer data amid its bankruptcy. And right now, 23andMe up by almost 55%. Recapping stocks lower, S&P down 4, down 0.1% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here on Bloomberg Business Week Daily. Well, U.S. mortgage rates in the United States fell for the first time in 3 weeks. Pending sales of U.S. homes rebounded 2% in February. So that beat economists' estimates due to calmer weather and a greater selection of houses. And then you might recall earlier in the week, sales of new homes in the U.S. bouncing back slightly last month. That was kind of after a rocky start to 2025. Home builders benefiting again from better weather, while also leaning on generous sales incentives to stoke demand, Tim.
Despite the rebound, home builders are cautious due to increased home supply, high mortgage rates, prices also, which may limit support for the economy. We got a great voice on this. Back with us is Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got nearly $4.4 billion of land under management and nearly 90,000 acres under management here in the U.S. Walton Global operates in the retail, industrial, and commercial sectors. Katie, welcome back. It's good to see you. Usually you join us from out west. It's good to have you here in New York. Tell us why you're here, who you're talking to, and what the temperature is of the folks that you've been meeting with.
Yeah, so specifically meeting with some of our clients and also just attending a private equity real estate conference, meeting with some of the top national home builders as well, and just getting the sentiment that home builders are still feeling very bullish right now.
Why are they feeling bullish?
People are really settling into that mid 6% mortgage rate. And
settling into mid 6%.
Wow.
Didn't think I'd hear you say that.
Could be worse.
Yeah, it could be worse. It has been worse, but
and it could get worse.
So why else?
There's also a land grab going on in most major markets because land is scarce and home purchasers are still out there looking to buy homes, and people are really starting to come off of the sidelines, so they want to be prepared to be able to control the land to be able to build the homes.
What makes home builders ultimately build?
It's a volume game. So the public home builders, they want to hit their numbers while protecting their margins. And as you mentioned, Carol, earlier, they are offering incentives still to keep those numbers going. And so you can still, buy a brand new house and get a mortgage rate buy down. Sometimes they're offering appliance upgrades, finishing kitchens with higher end granite, offering incentives to keep the volume going.
Because, I was thinking about, we were, getting ready to talk with you. Earlier this year, Bloomberg put out a story, and forgive me, I'm just going to look at some notes here. And they said they were looking into the nation's current housing crisis. This, I think, was in January. And they talk about the lack of home building coming off of the Great Recession more than a decade ago. Home construction never catching back up to the demand of a growing population. Zillow has put out some data, at least earlier this year, that the U.S. has a shortage of about 4.5 million homes. Is that still kind of where we are? And again, I think about what really needs to happen for housing affordability and availability to kind of meet some of the demand that's out there.
Absolutely. I mean, there is a shortage. So depending on how you look at it, it could be, 4 to even 6 million homes short in the country. And so that's another thing that's keeping the builders going, is that the demand is still there. The regulation makes it difficult for them to build, so that's something that the Trump administration can do.
Remind us what that is.
And so that means it's just there's a lot of bureaucracy and red tape when it comes to zoning and land development. So the actual
But that's local.
It is local, but what the Trump administration has talked about doing is incentivizing local jurisdictions to make it easier to build houses faster, and then if they can build them faster, they can ultimately build them cheaper. So they can offer, federal funding and tax incentives to the local governments to bring that down. So, for example, in Portland, there was a developer who got an infill lot, and instead of rezoning it to build higher density, just was able to build 7 homes on one lot. And that's unique to Portland, but it's also an infill place where the land is expensive. And so just being able to offer that type of zoning where you can build more houses on smaller areas would potentially bring down the cost. For example, in Houston, one of the largest home builders is building 500 square foot homes, detached, selling them for $180,000. And then you can do a 2-story version for, around $200,000, which works in Houston because there's really no zoning laws.
And there's demand for that.
Exactly. It's so affordable. People, that want a house, they'll pay for that small of a house. But in most cities, the zoning laws would not allow for that type of development. Houston is just an anomaly. So we need to just make the zoning easier.
What are you hearing from home builders about potential challenges? Labor, given the crackdown on immigration, materials costs, given potentially a shortage, given that there's a lot of demand in Southern California post-fires and rising costs due to tariffs. What are you hearing from them about that stuff?
Yeah, so the last 2 months, we have seen home builder surveys, and they're really not reporting any major changes in labor. So that is something that they're definitely keeping an eye on, but to date, nothing has really been affected. On tariffs, we saw the first Trump administration have 20% tariffs on lumber, and actually lumber prices didn't spike until 2021 under the Biden administration, and then they settled back down into the mid 600s per 1,000 board foot. So home builders, I was just talking to one of the luxury home builders, a national builder here, and they're projecting maybe $5,000 increase in overall home price for labor, but it's not. Wow. They're cautiously watching, but not really expecting home prices to go up for the lumber.
I think, Katie, one of the things that we've talked with you about is that how do we make sure it's not just about building homes, but building homes where we need them. And we've often talked about, this has gone on for decades, of major cities where it's expensive to live, but a lot of people work there, but they can't afford to live there. So how do we solve that problem?
Well, as we've discussed before, the administration has said, well, we're going to give federal lands out for development, which just doesn't work because those are going to be lands that are in the middle of nowhere, not close to job centers. And then just to go through the political bureaucracy of Congress, getting appraisals and the environmentalists, and then the developer ultimately has to be able to make money on that. That's not going to be land that's, in the middle of Alaska or Nevada where there's no infrastructure.
So what do we need to do then?
So again, it goes back to, hopefully rates will come down.
But rates have been lower, and we still don't have enough affordable housing in kind of some major cities where so many people work.
Yes, and so really innovation is what's going to have to come in, and home builders are trying to find innovative ways to build. They're using modular, using structural insulated panels, so building off-site and bringing those materials on to reduce labor cost. But still, it's not going to. There's really no silver bullet.
I want to remind everybody, Walton Global buys land, holds onto it, and then sells it to the big home builders. How's land acquisition going right now?
Yeah, it's great. We're going into tertiary markets for our clients. So places like, we're buying in Panama City, Savannah, Georgia, Augusta, Georgia, Tucson, Wilmington, North Carolina. So not those primary or secondary, going to those next in line where land is still affordable. And that does help bring down the cost.
What's the most interesting trend in housing right now? Like, is the McMansion over? like I'm just those kinds of things.
Yeah, I would just say the amenities. Really, home builders want to be able to build a home where you can have multi-generation, so that entry-level young family coming in, and then you've got the move-up house, and then you've got a place where mom and dad can, don't have to go to an assisted living facility, but they can have a single-level home in the same neighborhood. So they want pickleball courts, they want swimming pools, they want all of the amenities to attract that generation. And from the land side, you need a big enough parcel of land to be able to build a master plan community like that.
All right, master plan communities. Yeah, interesting. Katie, thank you. Thanks for coming back. Katie Hubbard, Executive VP Capital Markets over at Walton Global. Coming up, founders of Hooters, yes, Hooters, They're making a PG-13 pitch. That's next.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody, in a Bloomberg exclusive, our reporters, some deep dive investigating, have found out that a plan is taking shape to put Hooters into bankruptcy and return control of the brand to the Florida businessman who founded it decades ago, which means no more bikinis and more families. It's a great read, and it is, as we said, among our most read on the Bloomberg terminal. Eliza Reynolds-Hannon joins us from our Atlanta bureau. She's Bloomberg News senior credit, distress, debt, and bankruptcy reporter. A great story. People are reading it. Eliza, the chain has definitely had some highs and lows in its corporate history. Where is it today?
Well, today the performance is really disparate because it is a franchise, and a big portion of the Hooters restaurants are owned by the parent company, which is owned by private equity firms, and then sections of the company are operated by various franchisees. And the story we wrote is about how the core group, which is the original founders of Hooters, they're now a sort of a super franchisee, are looking to take over the brand itself and be that parent that tells everyone else how to execute on the brand and institutes their policies.
Okay, so let's talk about how they're planning to execute and what those new policies are going to be. The story starts out with the diverse clientele that Hooters may not necessarily, I want to say be known for, but they don't necessarily have that image in at least popular culture. Who's going now and who do they want to see there?
That's right. Well, this group of original restaurants has always been and has really focused on being friendly to families. And that can mean everything from having coloring books in the restaurant, which is something I've heard from a lot of customers in the process of reporting this, or servers paying extra attention to kids, but they've always historically had a lot more women coming into their restaurants. So they have couples coming in, they have families coming in, and the data we had showed that the Hooters of America owned, private equity owned branch leaned more into competing with the likes of Twin Peaks and the chains that were getting more risque, and in the process lost that diversity of customer, and that shrunk their opportunities for sales.
You know, what's funny is I never thought of Hooters as a family restaurant. So it's interesting
You're
that
not the only one, Carol.
going back to their family roots. I am curious, kind of talk to us about the founders that are leading the charge and looking to make these changes.
Yeah, well, Hooters was launched in 1983 by a group of 6 businessmen in Clearwater, Florida, who seemed, by their telling, sort of started it on a whim, and they're still going with it this many years later. And right now, one of those men who was involved in the original founding has been the CEO ever since the 90s of the 22 core Hooters that are part of the original branch, and he's the one who's engineering this whole charge to bring it back to its roots. Neil Kiefer.
So what has to happen in order for this to be successful? The company's had challenges like many restaurants during the pandemic and following the pandemic, rising costs, rising labor costs, rising food costs, and just a general change in the way that consumers are thinking about this stuff. What do they have to do to pull this off?
Well, on top of all that, one of the trickiest things for them to pull off an actual restructuring, all they really want to do is be able to hand over control to the founder group, which is willing to take on new restaurants and rehab the brand. But there is about $350 million worth of complex structured debt that is on the balance sheet of Hooters, which the current owners and previous owners put there in order to help finance this big expansion under private equity. And that structured debt is not supposed to ever have to make it into bankruptcy court because it's supposed to be heavily securitized by cash flows and other revenue. So right now they're really digging in on how to possibly address restructuring ABS in bankruptcy, which is rarely done.
Yeah, it feels like a big list of things that might be against them. I mean, I know they want to bring back the Hooter shorts, fresh ingredients, greeting women first at the door. I love the details in your story. I mean, it all sounds great, but as you mentioned, this complicated debt. And then I feel like it's a restaurant space that has changed and evolved a lot since they first started out. And in some ways, maybe there's too many restaurants out there. Do industry observers think that they have a good shot of this company kind of coming back in a kind of going back to its roots and then staying around?
Well, what industry observers say and what some of the advisors and sources that we've talked to who are looking at the deal right now is that it's really going to come down to analyzing restaurant by restaurant which one is in a reasonable location in terms of demographics and establishment of the brand in that place. So what they're relying on so heavily is the decades of name recognition, and they really need to choose wisely about where to lean into that and where to keep their restaurants open.
How was the food?
Okay, so the food is pretty good. And what's really important and that Neil Kiefer and these other founders take a lot of pride in, and I felt I could tell the difference, is that they use real butter in the wings that they fry and put buffalo sauce on. So it's crispy, it's not the margarine that makes things sometimes taste a little soggy, and that's one of the things that customers of the other Hooters have complained about over the years.
Which makes you only want to say, like, what was the not real butter, or the unreal butter that they were using? Maybe I don't want to know. Eliza, great reporting, really fun read. And as we said, among our most read on the Bloomberg, Eliza Ronalds-Hanna, senior credit, distress, debt, and bankruptcy reporter here at Bloomberg News, joining us from our Atlanta bureau. For those watching on television, the close is coming your way in just a moment. Tim and I, though, continuing on Bloomberg Business Week Daily, right here on Bloomberg Radio.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. President Trump has spoken to the new Canadian Prime Minister, Mark Carney, in what could be their first conversation. Carney has called Trump's tariffs a very direct attack. Mexico said today it wants preferential treatment from Trump. Adrienne Bard reports.
Speaking on a video from Washington, D.C., Mexico's economy minister said autos made in Mexico with a high percentage of U.S. parts will get a discount on President Trump's tariffs. Unlike Canada and China, Mexico hasn't yet announced retaliatory tariffs on U.S. goods and has had teams in Washington trying to cut a better deal.
Mexico is home to many foreign-owned car plants. Secretary of State Marco Rubio says 300 lunatics have been stripped of U.S. visas for university activism.
We gave you a visa to come and study and get a degree, not to become a social activist that tears up our university campuses.
The White House has asked Elise Stefanik to pull her nomination for UN ambassador. Trump says he's asked her to remain in Congress because of the Republicans' tight majority. Democratic Senator Chris Coons.
I think at the end of the day, it just reflects that the agenda that Republicans are trying to move through the House at the behest of Elon Musk and Donald Trump does not have the votes right now. So they're doing everything they can to hang on to one more.
The top Republican and Democrat on the Senate Armed Services Committee have requested an investigation into Trump security officials using the Signal app to discuss the military strikes in Yemen. CBS's Nicole Killian on Capitol Hill.
The Senate Armed Services Committee Chair Roger Wicker did send that letter along with his Democratic counterpart, Senator Jack Reed, to the Department of Defense IG asking for an expedited review of this Signal situation.
At a European summit on Ukraine, President Zelensky stressed again the importance of security guarantees from the U.S. before any ceasefire deal with Russia. Here through an interpreter.
If today Putin guarantees to Trump, guarantees something, and you believe this, Mr. President Trump, then after you, he may break what he has been telling you, even if you believe in something.
The French president said today France and Britain will forge ahead with plans to deploy troops in Ukraine to defend the peace deal, but he admitted many other nations will not take part. Wildfires continue burning in the Carolinas. In Pickens County, South Carolina, Sheriff Tommy Blankenship.
There are men and women right now as we speak that are on top of that mountain, and they are risking their lives to protect the property of the citizens of this area.
One of the fires, he says, was started by 4 teenagers who are now under arrest. This is CBS News. There's a date for CBS Mornings co-host Gayle King and 5 other women to fly to space. Here's Michael Wallace.
The 11-minute Blue Origin flight will take off April 14th at 9:30 a.m. Eastern. Former passenger William Shatner told Gayle to embrace the moment.
The G-forces that are going to be on you, you're going to feel like, I'm going to die, but you're not going to die, Gayle.
You are scaring the beef out of me right now.
The all-women crew will include pop star Katy Perry, former NASA rocket scientist Aisha Bowe, civil rights activist Amanda Wynn, film producer Carrie Ann Flynn, and journalist Lauren Sanchez, the fiancée of Blue Origin founder Jeff Bezos. Michael Wallace, CBS News.
Eli Lilly is offering patients telehealth providers for Alzheimer's care. The company's website connects patients to specialists and conditions the company also sells drugs for. This would allow neurologists to diagnose patients virtually, arrange for brain scans, and direct them to infusion centers for treatment. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are just about 55 minutes away from the closing bell on this Thursday. Carol Masser, Tim Stenovec, live here on Bloomberg Business Week Daily. And stocks bouncing around here, but we are pretty much red across the board. But if you look a little bit deeper into the S&P 500, almost an even split in terms of names that are higher versus lower.
Yeah, off our worst levels of the day, off our best levels of the day, but certainly solidly in the red, down 0.2% on the S&P 500. Charlie Pellet's going to have more in just a minute. Hey, stocks that are lower today include GM and Ford, and also auto parts companies, thanks to the president's new 25% tariffs. What you need to know from our man in Detroit.
I'm looking forward to that in a big way. And speaking of Washington, the CEO of Goodwill Industries will be joining us as Elon Musk takes a chainsaw to government-funded programs. What is the impact he is feeling as a result?
Also, there is a new book out that chronicles the rise of Indians in America. It's called Indian Genius. The author of that book stops by in just a few. I was going to say a few minutes, but no. She's on next hour, so stay tuned to the 4 o'clock hour for that.
It's a nice deep tease. All right, hey everybody, let's get to the trade on this Thursday, and let's get an update. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. Stocks lower across the board. Is it too early to start talking about the countdown to the end of the first quarter? The end of a quarter that is all set to be the worst for the S&P 500 since 2023. Stocks lower right now, falling again. Stocks down after the U.S. pushed ahead with tariffs on automakers, reinforcing concern about a widening trade war. The S&P 500 index right now is down 0.1%, lower by 7. We've got the Dow down 105, Dow Industrials down 0.2%, Nasdaq lower by 33. For Nasdaq, the composite index down 0.2%. The 10-year yield at 4.36%, the 2-year 3.99%. Spot gold up $36 the ounce to $3,056, up 1.2%. West Texas Intermediate crude 69.90 a barrel, up 0.4. And Bitcoin, little change, down under 0.1%, 87,209. Monica DeCenso is head of global investment opportunities at JP Morgan Chase. She says trade policy remains the primary source of investor uncertainty, making her job tougher than ever.
You just hear all this noise and just doesn't feel like Liberation Day is going to be Clarity Day. And so I think a week from now, we're still going to have a lot of questions. There will still be uncertainty. There will still be volatility. And so the most important thing for many people I work with is just diversify, have a plan, and get ready for more bumps.
Monica DeCenso of JP Morgan Chase. So we mentioned the automakers, and yes, our man in Detroit, Keith Naughton's going to have a whole lot more on the automakers in just a moment. But right now, we got GM down almost 7%, Ford down 3.6%, Stellantis lower by 1.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie. Really do appreciate it. That's Carol Masser. I'm Tim Stenovec. It is Bloomberg Business Week Daily. I like to go, Carol, to the most function on the S&P 500 or on any index and see what the most actively traded companies are. NVIDIA is usually up there. Tesla's usually up there. Today, you got Ford and GM up there, and shares are moving lower for these companies. Late yesterday, President Trump signed a proclamation to implement a 25% tariff on auto imports and pledged harsher punishment on the EU and Canada if they join forces against the U.S., expanding a trade war and triggering threats of retaliation. So that is why we're seeing shares in most U.S. automakers fall today. Auto companies in Europe also fell.
Yeah, we have definitely seen a lot of movement here. Mercedes and BMW falling in Europe. And we're just kind of looking at this whole auto sector. A lot of movement and a lot to get to with our own Keith Naughton, Bloomberg News auto reporter. He joins us from Detroit. Hey, Keith, good to have you here. As we were reading in this morning, looking at everything, what we were expecting to come, what did come, and just watching the movement within the auto sector, some up, some down, we knew we wanted to touch base with you. How are you looking at these tariffs and the impact it could have on certainly the U.S. companies? Let's start there.
Well, these tariffs are tough, and they're going to have wide-ranging impact because they will add costs to just about every car. Because, you know, Carol, even if you build a car in the United States, if you import, you know, key components like engines or transmissions, well, those will be tariffed as they come in. So, for example, Ford builds its F-150 trucks in America, which is great, but it builds engines for them in Canada. So those engines will get tariffed 25% when they come across the border.
This is supposed to benefit American car companies, Keith. It's supposed to benefit Americans who work for companies that are based in the U.S. Explain the supply chain here, because I don't think people understand that a Ford F-150 that's made here has so many international parts.
Right. I mean, particularly here in North America with the free trade agreement that we've had for 3 decades, there's just this interlinked web of automakers and suppliers. And for example, the inverse is true with Chevrolet, with the Equinox, a very popular SUV. That's made in Mexico, but its engines are made in the United States. So the engines will be tariff-free, but not the car itself. So, you know, it isn't, I think the simplistic view is that imports are just foreign brands. That is not the case. General Motors imports 400,000 vehicles from South Korea every year. So this is going to hit Detroit. It's going to hurt Detroit. It's not just going to hit the international automakers.
And, you know, we like to, you know, remind everybody, right? These global supply chains, again, it's just not something you can change in a minute, right? I mean, they have been established over years and thoughtful. And to make those changes, Keith, it's not something that we're going to be able to do very quickly.
No, well, to build an auto assembly plant, you know, from scratch in the United States costs close to $4 billion, and it takes 3 or 4 years. So those jobs, if that were to happen in the best case scenario, wouldn't even materialize until after the end of President Trump's term.
Does it happen? Is this the type of thing that a company would actually invest in? Or since it's such a big CapEx expense, you know, they're not going to do it?
Well, Tim, I think you are seeing companies already start to do it. Hyundai this week announced a plan to expand in America, spending $21 billion. They plan to double their U.S. Capacity to 1.2 million vehicles, which they need to do because right now they're importing about 1 million from Korea. And Honda also changed plans on building a hybrid down in Mexico. They're going to build it in Indiana instead. But the thing is, as I talk to the analysts, if you move jobs from Mexico or Korea, these are low cost production bases. So it's not going to be a one-for-one trade. As one analyst told me, what this will do is not drive up jobs in America. It'll drive up robot sales because automakers are going to automate.
Interesting. Hey, listen, what about the European car makers? We mentioned we saw Mercedes and BMW under pressure. Ferrari has already come out and says it plans to raise U.S. prices up to 10% after tariffs hit. How do we kind of factor that in? Does this become less of an attractive market for these guys? Do they need the U.S. market in terms of their bottom lines? Give us some perspective on that.
They definitely need the U.S. market. It's been the most profitable market in the world, particularly for the high-end makers. This has been a very good market. But overcoming a 25% cost increase is hard even at that end of the market. So they're going to have to get creative. They are going to have to build more in the United States. They're going to have to build more components in the United States. But, you know, all of this seems volatile, let's say, because the president has changed his mind on so many occasions. And I think there's still some hope here in Detroit that these won't actually stick.
Okay, we'll see. It looks like investors thinking, at least today, they're going to stick. It's not just these big automakers that are moving lower. That's not the only movement we're seeing. We're seeing auto parts get hit really hard today. Carol mentioned the European companies as well. But there are a couple U.S. companies that I wanted to get your thoughts on. One is Tesla, shares higher by 2%. And then Rivian shares are up by 8.7% right now. Ostensibly, it's because Tesla has this factory in Fremont, and I think they build cars in Austin, Texas, too. So those are already American-made. Rivian's got Normal, Illinois. Are these companies in a good position right now? Are they in a better position?
They are in a better position because they do make all their cars in the United States. Elon Musk tweeted out overnight that they will still be hurt by the tariffs because they have international components in their vehicles that will be tariffed. But you start with the fact that electric vehicles just have fewer components to begin with. They don't have a transmission, so there are fewer things that could get tariffed in their cars, and Tesla and Rivian build all their cars in the United States that they sell in the United States. Tesla has overseas car factories in China and in Germany, but those are for those markets. Here in the United States, they build everything here that they sell.
Time will tell, right, Keith, ultimately how this plays out. I mean, bottom line, car makers around the world, foreign car makers, they want access to the U.S. market, correct?
Absolutely. It is, as I said, it's where you can make the most money. Toyota and Honda sell more vehicles in the United States than they do in Japan.
Yeah, it's a lot. Roll into this kind of what's going on more globally in terms of EV, production. You think about what's going on in China. I mean, will tariffs, I don't know, somehow ultimately, if they stick, I don't know, does the U.S. market ultimately get hurt, and especially the EV market?
Yeah, I mean, it's another huge headwind, a 25% cost increase. I mean, that's unheard of. And we already have an affordability crisis in this country. So the 25% cost increase could literally kill off some of those entry-level models. EVs, as we know, are already too expensive to begin with. That's why mainstream car buyers aren't buying them. 25% cost increase, then all of a sudden they're just completely out of reach. So yeah, it's very hard to, absorb a 25% cost increase. And that's what the industry is struggling with right now. That's why you see the stocks dropping.
How stressed is it for the U.S. automakers right now? I'm just curious what you're hearing from executives at these companies. Are they just shaking their head, just kind of waiting to see? How would you describe it?
They're very stressed. And Bill Ford, the executive chair of Ford Motor Company, who's great-grandson of Henry, he was in Washington this week, appealing for relief. Mary Barra, the CEO of General Motors, was also, on the phone with Washington trying to get some relief. I'm not sure they're very happy with what they got.
Yeah, no, exactly. Hey, we're so glad we once again could check in with you. A lot going on in this sector and so many different moving parts when it comes, certainly, no pun intended, when it comes to the global auto market. Keith Naughton, thank you so much. Bloomberg News auto reporter joining us from Detroit. Coming up next, what policies out of D.C. are doing for affordable housing. A little bit more on that this hour.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the S&P and NASDAQ now back in the green. The Dow does remain lower. It has been a volatile session, choppy trading, swinging between gains and losses. But right now, 39 minutes to go. We got the S&P up 7. That is a gain right now of just about 0.1%. The Dow, though, as I mentioned, remains lower. The Dow down 10 right now. A drop there of just under 0.1%. NASDAQ Composite Index up by about 0.1%. 10-year yield at 4.37% with a 2-year 4.00%. Gold up $37 the ounce, $3,056 on the precious metal, up right now by about 1.2%. West Texas Intermediate crude up 0.3%, $69.88 a barrel, and Bitcoin now up by 0.1%, 87,400 on Bitcoin. Next up for Wall Street, a key report on inflation in the form of the PCE price index, personal consumption expenditures data, the Fed's preferred measure of underlying inflation. Tracy McMillian is head of global asset allocation at Wells Fargo Bank.
Tomorrow we're going to be watching, the PCE data, not just for inflation, but also for consumer spending to see if there's any indication that consumers are also pausing. They've said they are in the confidence numbers, but we'd like to see some hard data behind that.
And speaking of consumer spending, after the close of trading today, we will be hearing from Lululemon Athletica. Baseball news, opening day. Yankees just getting underway in the Bronx against the Brewers. We'll keep you updated right here on Bloomberg. Again, recapping the Dow, the S&P, all higher. Dow just turning positive, up less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in our Bloomberg Interactive Brokers studio. We'll move by the Trump administration to block a $1.4 billion program for green building retrofits has left hundreds of in-progress affordable housing projects in limbo. Renovations for aging affordable housing projects across the U.S. have been halted as developers seek answers or alternatives. Now, the Green and Resilient Retrofit Program is one of a number of federal energy efficiency initiatives that Elon Musk's Department of Government Efficiency, DOGE, is looking to zero out, to the frustration of affordable housing developers across the country.
Austin Walker is undoubtedly watching what happens out of Washington closely. He's founder, CEO, managing principal at A. Walker & Company. It's a New York-based private equity fund manager, and it works with local firms in real estate management and development. He joins us here in the Bloomberg Interactive Brokers studio. Austin, welcome. I want to get to what's happening in Washington in a minute, but first I just want to get an understanding of what exactly your firm does, because I think a lot of people would hear private equity and affordable housing and say, wait a second, these two things don't necessarily go hand in hand.
Yeah, absolutely. Right. Affordable housing is, developed and, maintained and preserved through many different forms, whether it's manufactured housing, single family rentals, tax credit development. There's, firms like us that really find unique opportunities to deploy flexible capital to really develop and preserve these housing opportunities across the entire landscape of affordable housing.
Which part of the landscape do you play in?
All parts of it. All parts of it.
So even housing that is regulated by the government?
Yes.
How do you make money in that?
A lot of it is fee generation. It's working through a lot of programming, working with local municipalities to program these opportunities, right? It's part and parcel construction management, pricing, and working with a number of different grants and set of programs. But it's largely driven really locally in terms of incentives and other programs available to basically, engineer a capital stack to create returns.
How much of your business or investment is in that area specifically?
I would say probably 20 to 30%
Okay.
is allocated to that area.
Is there any concern in terms of what's going on in the government that some of that gets cut back?
Yes, we got some favorable news. Last week was not so favorable. You saw the administration pass executive orders cutting CDFI funds, which are largely based on grants made through that to fund community development finance institutions, which are a large cohort of financial liquidity to the affordable housing space, and that in the form of loans, grants, other equity-like subsidies. But they passed a continuing resolution, which is again fully funding HUD, which is the largest provider of affordable housing through housing choice vouchers, Section 8 based project-based Section 8 contracts, supporting rents and affordable rents.
Have you already been affected by changes out of Washington in this administration?
Absolutely. I mean, we've had transactions that had to get repriced and stalled because, either our financing, opportunities, our lenders were either CDFI lenders, and programs are dramatically changing. If you were going in with a CDFI on pricing at an 8% fixed rate loan, and now you have to be, going midway through a transaction at hard money to close a transaction because you have deposits down that are hard, you could be facing a 400 basis points increase in your cost of capital. These are real-time changes that are affecting the economics of the
So is that making you pivot in terms of different, parts of your business, maybe spending more time elsewhere?
Yeah, I think for us, one of the things, we were born out of largely a market rate development shop that focused mostly on workforce housing and attainable housing. So that's really just housing at large, but more so C and B class housing, existing housing stock, which, at the end of the day, most of these policies, whether it's tariffs, immigration, other things, are going to affect the supply-demand imbalances, which are already extreme due to low housing starts. Especially coming out of the GFC. COVID, interest rates were so low, you finally got a little bit of a pop in development pipeline, but that's largely stalled due to the whipsaw in interest rates coming back up. So we look at that being a sustained problem, just given that tariffs are going to increase lumber prices, other inputs for construction, so construction costs going up. Immigration is going to affect labor supply and labor wage rates. These are already under extreme price pressures affecting the industry. And so we see a very big problem with deliveries, but that's actually good for existing housing, right? Because the demand is largely unchanged. And so, we probably are going to see inflationary pressure on rents as well, exacerbating the affordable housing problem. So it's quite complicated, and what's going on right now across the sector.
Katie Hubbard from Walton Global was just sitting in your seat about an hour ago, and she is in the city for meetings with her customers, who are the large developers of the land that her company sells to them, so the big home builders. She said they're not yet seeing increased costs due to materials. She says they're not seeing issues when it comes to labor. Why are they telling her that they're not seeing that, but you're seeing that?
So you have to think about it, I guess, from a larger industry perspective. Her end buyers, largely publicly traded companies, Pulte, the likes, right? They are not only mandated by their boards to use legal labor versus the private sector, which is able to tap into non-legal immigrants for labor. There's a big divergence between those, and they're such at large scale. They largely wholesale, bulk purchase, and warehouse their materials, whether it's overseas. Otherwise, they can navigate a large shift where you have tariffs on Canadian lumber versus bringing in cabinets from China at bulk, and they basically forward lock their pipelines, and they're able to price that out. They're not feeling it yet, but if this is a sustained, protracted tariff war that is more global in scope, it can make it very, very challenging.
But same thing with labor. I'm assuming those, who are, I guess, U.S. citizens or what, or they're going to have a certain labor pool, and I'm assuming those workers too are going to want their contracts with the big publicly held.
Yeah, absolutely, because there's certainty, but I think there's another element to it. Rental developers versus for sale developers. A lot of the Pulte Homes, Toll Brothers, the larger publics, they're home builders, they're for sale product. So they're not necessarily, worried so much about the input. They can largely, it's such a supply constrained market from a for sale, there's no inventory. So new deliveries are largely going to be able to bear the price inflation that's going to come out of increased cost of construction on a for sale product. But at the end of the day, financing, everything else as far as, multifamily rental product is largely driven by the confluence of interest rates and what you can charge at a nominal price per rent, plus inflating expenses across insurance and other things. So it's largely a cash flow problem. Inflation is going to really impact housing development because you're solving to a cash flow that at some point you can't inflate out of. So those starts get halted.
Hey, what do you see the federal government doing as far as making land available for building? That was a big part of the Trump administration's campaign. Especially J.D. Vance took that on and talked about federal land.
Yeah.
What do you see them doing?
It's interesting. I think it's something certainly that they've been exploring. It is absolutely a big need, but I think the biggest issue that's going to come out of it is what are the local economies around federally owned land that are actually going to support the economic drivers that are needed to sustain.
There's a lot of federal land out west,
yes.
But are there the
but where are you going to
industries to support people moving to that part of the country.
Yeah, I think that's the biggest problem, solver. I mean, the issue that's going to come up with federally owned land is how scalable is that for the capital markets.
Where are the projects that you are involved in? Where are they mostly located?
Yeah, so we largely identify opportunities in municipalities that are accretive to being whether it's pilot payment in lieu of taxes, tax abatements, other programs where you're getting property tax offsets in exchange for housing affordability on the rental side. So capping your rents on a certain percentage of our rentals. So we're in Los Angeles. Mayor Bass passed ED1. We just got a site approved there for vertical construction. We have acquisition preservation deal that we did in outside of Chicago, and that was a great transaction. Where we worked with Fannie Mae on that that loan, and got a 25% tax abatement on that for a very small set aside for rents. But it's largely a workforce housing area serving an amazing school district. But we're also in Florida, Houston, Atlanta, and we have projects that really are across the affordability spectrum. So
we hear a lot about how difficult it is to build in California.
Yeah.
Is that your experience?
Yes.
Is the California project that much more difficult than the other projects?
Absolutely. And we have another one in Long Island that we're looking at. Very similar. There's not a lot of parcels for development, and then the environmental red tape, the other local regulatory red tape, heavy politics in terms of permitting. Getting through that process takes an extremely well capitalized developer who has very, very localized expertise in working through the building departments to navigate that process. Even on a largely ministerial approval process such as ED1, it still was very, very difficult and largely contested project to get through.
Austin, just to wrap up, who are the people that you're housing? I think there's maybe not an understanding of, who all accesses, when we talk about access, affordable housing, like who are they?
Yeah, I mean they're everyday individuals. It's the folks serving you coffee. It's your waiters, your bus drivers, your teachers, firefighters, everyday folks, right? That are really going to feel the effects of when a carton of eggs is $13 and a gallon of milk is $8. These are people that are really making it paycheck to paycheck. That's largely the cohort that we serve, and that's why these programs are really, really necessary, because what creates housing affordability in terms of the extreme lack of supply is local zoning. Until there is a federal sweeping ability, which is likely not going to happen in terms of zoning approvals for multifamily rezoning in commercial districts and everything, it's going to be really challenging to deliver the type of supply to actually naturally bring rents down. You have a small, test case in Austin, Texas, where they basically got rid of the permitting and zoning red tape. They delivered 55,000 units and rents came down by 25%. And they will absolutely absorb those units because there's an extreme need. Yes. That's a test case where you could, but doing that on a national level is going to be very, very difficult.
Super interesting. Thank you so much. Glad you stopped by. Austin Walker, founder, CEO, managing principal at A. Walker & Company, joining us here on Business Week.
Up next, we drive to the close with Katie Nixon over at Northern Trust. That's next on Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. Choppy session, but lower right now. We got 20 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all in the red. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shai. That is right. U.S. stocks choppy from the start today with the Dow currently down 83 points. S&Ps are down 5, while NASDAQ is lower by 0.2%. The U.S. 10-year yield is at 4.37%. Gold is up 1.2%. Oil is in the green. And Bitcoin, that's trading little changed. Among the main 11 S&P sectors, leaders were consumer discretionary and consumer staples. Energy was under pressure. And leaders to the upside in the Dow, Verizon and Visa, while Goldman Sachs and 3M led to the downside. Regarding IPOs, CNBC reported that NVIDIA will anchor the CoreWeave deal at $40 a share. And wrapping things up, Lululemon reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type SQUA on your Bloomberg terminal. And just updating you from Yankee Stadium, Yankees leading 1-0 in the second inning after a leadoff home run from Austin Wells. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we're just about 18 minutes away from the closing bell on this Thursday. Bouncing around here, Charlie and Bill Maloney just, of course, breaking down the trade for you. Just a reminder, just down about 2 points on the S&P 500. Call it flat on the day. Dow Jones Industrial Average, a decline of 67 points, good for a decline of about 0.2%. Same percentage decline, Tim, when it comes to the NASDAQ 100, down about 43 points. But again, off our highs and lows of the session.
Yeah, I mean, the S&P 500 right now is not even down 0.1%.
I know, flat.
Yeah, it's like searching for direction, despite the fact that tariffs, I think, caught some companies off guard.
Yeah, it's kind of interesting, right?
Yeah, it's like, didn't this get telegraphed yesterday? I think the point that Jennifer Deloe made earlier was there was a lot of confusion about whether or not it would include auto parts companies, and it does. So you see those companies getting hit pretty hard.
Yeah, and then there's more to come next week. So I don't know. We've got an inflation print tomorrow. Let's see what Katie Nixon has to say about all of it. She's Chief Investment Officer at Northern Trust Wealth Management, joining us from Chicago. Katie, nice to check in with you. This environment, it's an interesting one, and sometimes markets react, sometimes they don't, but they seem to move around a fair amount. How do you describe kind of where we are and what's top of mind for investors and maybe your clients?
Right, Carol. Well, thank you so much for having me. And I guess I would just echo the sentiment that's been sort of persistent through your coverage, and that is just this period of uncertainty. I don't think investors really know which way to turn right now. The market today is a really interesting example where you sort of look at the averages, look at the bond and the stock markets, and you say, not much going on, but beneath the surface, there certainly is a lot of churn. So I think investors are looking for a guiding light here. They're looking for some certainty. And I guess what we're telling our clients is we may be waiting a bit longer if we're looking for that period of calm or more certainty. I think we're going to be living with more volatility and a lot more news and noise, frankly, that's going to impact markets for the foreseeable future.
What is the foreseeable future? How much longer? I'm getting a little tired. I'm getting a little tired.
I know. Well, I mean, we're all looking forward to Liberation Day, of course, but we're getting some pre-news here that's certainly market moving, and I'm not sure we're going to get the clarity that we probably need on April 2nd. And by that, I mean, I think it'll still be a work in process. I think we've learned through the last several weeks and months, frankly, that, news evolves over time, things can change. So it's very hard to have a lot of confidence in what you hear is eventually going to be what turns into persistent policy that won't change over time. So I think this is a time for investors to really sit back and recognize the one important thing, which is we're buying companies, right? We're not buying politics. We're not buying even economies. We're buying companies, and companies have showed remarkably through time the ability to navigate and to be resilient in the face of a lot of uncertainty. So although it's hard when you're reading the news and you're hearing about these things on a regular basis, it's hard to remind yourself, but it's important to remind yourself that at the end of the day, it's all about fundamentals, how companies are able to navigate this period of uncertainty, what the picture looks like on the other side. We don't necessarily know when we're going to get there, but we know we'll get there. And at that point, as an investor, what you really want to focus on is just the stability of the fundamentals.
Right. But the stability of the fundamentals can be whipsawed based on the headlines that come out of Washington. And so if we don't see things settle down sometime soon, you know, does that once again make it hard to invest on the fundamentals?
You know, it does to a certain extent, Carol, but I think, again, once companies know the rules of the road, they'll be able to navigate more resiliently. Right now, I think nobody knows what the rules of the road are going to be. Again, I use the word persistently because we might hear some news that could change, you know, in a week or two. So I think we will be in this period of fog for a bit here. And I think we're actually going to hear more about that from companies as they start to talk about their first quarter earnings results. We're going to hear more about how they're thinking about the navigation process here as they are also facing this period of uncertainty.
Yeah, no, it's interesting. I feel like we just wrapped up earnings, right? They we're kind of just a few at the tail end, but I feel like we're already looking forward to earnings because we want to hear what the C-suite has to say about this environment. What are they doing or what are they not doing as a result of the volatility or the uncertainty going forward? In the meantime, so an investor comes to you and says, I've got a portfolio or I've got some money I want to put to work. What do you do with it today?
Well, again, there are always opportunities in markets. And what I would say is what we're seeing now is kind of a washout of sentiment. You know, we see bearishness, you know, in the AAII survey staying, you know, pretty bearish for an extended period of time, which is quite unusual and typically precedes decent periods of return for investors. So what we would say to any investor that comes to us today, or frankly to our clients, get your strategic asset allocation in line and get yourself invested, recognizing that we're going to have a period of volatility, but also recognizing that as a long-term investor, this is not a bad time to be putting money to work in the market. But we would say, in addition to that, Carol, is start to think more globally. I think in the past several years, most investors have had this tremendous home country bias here in the U.S., and they've been right. The U.S. has roundly outperformed everything, and it's really been on the backs of U.S. large cap growth and in particular tech. We're telling our clients, and we would tell a new client, to start from a place of diversification. You want to have opportunities all across the world, and you also want to have opportunities away from just that super large cap U.S. tech focused exposure, and look at other areas of the U.S. market. Look at value stocks, for example, as an interesting place to get some diversification right now.
So, okay, U.S. and value, where do you view, I mean, look, nobody knows what's going to happen, but geographically, where do you see the outperformance this year?
Well, short-term, you know, prognostications are incredibly difficult, but what I will say is we're more confident in the performance of non-U.S. markets today than we were 4 or 5 months ago. And that confidence comes from the combination of monetary and fiscal stimulus that we see coming really to the fore overseas. Clearly, you guys have covered Europe really well. We see, you know, a really extraordinary amount of fiscal stimulus being injected into an economy and, more importantly, into a market that tends to be very sensitive to that. Right? Defense spending, infrastructure spending.
So Katie, forgive me, just got about 30 seconds left. So do you want to commit a fair amount of money into Europe or not necessarily? Would you still stay with the U.S.? And just quickly, if you could.
No, you do, Carol. Absolutely. You want to be as diversified as the global market is and get your fair share of what could be some outsized returns over the near term as investors start to reposition their portfolios towards that opportunity.
All right, going to leave it there. Hey, Katie, thank you so much. Katie Nixon, Chief Investment Officer at Northern Trust Wealth Management, joining us from Chicago on this Thursday. Folks, we're about 11 minutes away from the closing bell on this Thursday afternoon. Still down just about a point on the S&P 500. So again, continuing to really be unchanged on the day, although we've had some movement throughout the day. NASDAQ 100 down about 0.25 percentage point, down about 47 points. Stick around. We're heading over to our TV colleagues in just a moment, counting you down to the close.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, just about 7 minutes away from the closing bell on this Thursday. We're going to head over to our TV colleagues in just a moment, count you down to the close, get a little bit of earnings coming your way, including Lululemon and a few others, so we'll break them down as soon as they cross the Bloomberg terminal. In the meantime, on our radar, I knew you were going to do this story.
You knew it?
It just popped up.
You know, if you go to the most read stories in the last hour.
Well, it's been out for a while.
Okay, well, maybe it's just in the most read in the last hour.
Yeah, that's true.
Like half of the stories are about the trade war, specifically with regard to autos. This is a really interesting one. $30,000 cars. I didn't know that was even a thing. Still.
Yeah, that's a good point. I don't know who that is.
Car prices have already climbed out of reach for many Americans. The search for a cheap car is poised to get even tougher. President Trump's tariffs on auto imports set to take effect next week are expected to drive up costs across the country, raising sticker prices by thousands of dollars. The effects could be particularly pronounced at the low end of the market, with many of the least expensive models from the likes of GM, Ford, Kia, Hyundai being built outside of the U.S.
Yeah, at least half of the 20 models priced below $30,000 will be severely hit by the tariffs, making many of them, I should say, affordable vehicles unviable in the U.S. market.
Can't believe how expensive cars have become.
I'm just trying to look at what these are.
Yeah. So I got a question for you. What do you think the average cost? You know this already, right?
$50,000.
Yeah. Did you read this?
Well, yeah. I'm kind of, doing this with you.
It's kind of annoying.
Yeah.
$50,000 is the average price of a new car in the U.S. High interest rates add to the financial toll, but as you mentioned, Carol, there are at least 20 models on the market priced below $30K. That's according to Cox Automotive. Half of them will be hit severely by the new tariffs. Among the vehicles assembled in Canada or Mexico, costs would rise by $5,800 on average.
Well, it's interesting, too, and it reminds us of some of Detroit's history, right? Automakers in Detroit have already abandoned much of the passenger car market to prioritize more profitable crossovers and SUVs, ceding the small sedans that have historically accounted for many of the industry's most affordable cars to automakers based in Asia. So if you're going to be buying, you're ultimately going to probably buying an import. And so you're going to kind of feel that pain and that higher price.
Okay, I got a couple of these cars for you.
Oh, cool. Go.
The GM Trax, TRAX, it starts at about $20,000. The most well-equipped active trim level starts at under $26,000. GM sold more than 200,000 of these Trax in the U.S. just last year, and did so profitably thanks to Korea's cheaper supply base.
Oh, interesting.
So that vehicle will soon face a 25% tariff. It'll force GM to make tough decisions on how to handle that extra cost. Stellantis also makes a inexpensive Jeep. It's the Compass SUV. That's made in Mexico. And then it also imports the Dodge Hornet from Italy. I did not know.
I didn't know that either.
The Dodge Hornet was made in Italy.
And Ford imports the entry-level Maverick, a small pickup from Mexico, as well as the Bronco Sport compact SUV. Know where your car comes from, everybody. Hey, the interesting thing is, and I think about our conversation that we had with Stuart Paul, highly recommend if you missed it to check it out, because it really got into the tariffs, the impact it could have on the U.S. economy. And I think about the U.S. consumer. So if you have to get a car, if you're going to have to, you want maybe one of these smaller, cars that tend to be cheaper. And if you have to pay these higher prices because they're imported, what else then do you not ultimately spend money on, right?
You're just looking at the Hornet online.
Are you thinking?
Yeah, the Dodge Hornet.
And?
It's pretty cool.
Okay.
Yeah. But, you can also get one for $50,000.
Yeah. Wow.
So
once you start throwing this extra stuff on, right?
Yeah.
Toyota builds its Corolla compact in Mississippi, starts at around $23,000.
Okay, so there are still
made in the U.S.
Okay,
but there's
so that's
parts,
good.
Let's not forget, it's the parts that come in, so that could also drum up the prices. Trump has acknowledged that car prices are likely to rise due to tariffs. That is President Trump, of course, but he argues that any short-term pain would be offset by long-term gains in domestic manufacturing. Again, go back to the conversation we had with Keith Naughton. Not all of this stuff can be changed very quickly.
Perhaps that's why rental car stocks are surging today, because if new cars get more expensive, used cars, which are often sold by these rental car fleets,
it's gonna be tricky. Could be tricky.
Demand goes up for those.
All right, folks, we are just a couple of minutes away from the closing bell on this Thursday. We are definitely off our best levels of the session. Little change, though, overall, when you look at the trade. Don't go anywhere. Head over to our TV team. Closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Alex Steele, taking you to that closing bell with a global simulcast. Starts right now. Scarlett Fu here in the TV studio. Carol Master, Tim Stenovic in the radio booth. Welcome to our audiences across our Bloomberg platforms, including our partnership with YouTube. A down day, Carol Master, but as Alex was alluding to a little bit earlier on TV here, it could have been a lot worse.
Yeah, it could have been a lot worse, especially if you look at some of the automakers, right? You would have thought, wow. I mean, the sector, depending on how you look at it, auto parts versus automakers, foreign automakers, but Ford and GM right now taking it really on the chin here. Ford is down, what, about 3.6%, and GM down about 7%.
Okay, so the S&P 500 is down about 0.3%. It's moved between gains and losses at least a dozen times today. It kind of masks some of the bigger moves that are taking place underneath, whether it's a Dollar Tree going up by 11% or a GM down by more than 7%.
It also masks the idea that gold continues to rally. I mean, with the advance in gold, it seems to signal a lot more concern, a lot more alarm than what's actually showing up in equity prices.
I love that you said that, because the GDX, which tracks the big gold miners, is at its highest level since January of 2013. It was like a whole different world for gold. So within the equity market, there is still a little safety rotation.
Yeah, absolutely. And you saw that reflected also in some of the moves that we saw in the Treasury space. And we were having a conversation on television a little bit earlier with PIMCO's head of leverage finance here. He's still seeing a lot of opportunity when it comes to high yield debt, junk bonds, as well as leveraged loans here. We get the closing bells in New York on this. Thursday. What is it? Thursday afternoon?
It's Friday Eve.
You sound tired too.
On this Thursday afternoon here, the bell's being rung. Actually, look at that. Dow Jones ringing the bell there. Well, that's appropriate. The Dow Jones Industrial Average closing lower on the day by about 160 points, or about 0.4%. The S&P down about 19 points, below 5,700, or about 0.3%. The Nasdaq Composite down about 0.5% on the day. Your big decliners on the day, though, were in that mid-cap space. S&P 400 mid-caps are down 0.7%, and as far as the Russell 2000, that's lower by 0.4%.
All right, once again, a day where we're kind of getting a little bit of an even split here on the S&P 500, although I don't know what's going on. I'm a little sleepy, and I think my terminal's a little sleepy. I can't bring up the numbers, but it's about an even split here in terms of gainers and decliners.
Yeah, 286 down, 214 up.
Thank you for that.
All right, let's take a look at the IMAP, and that lopsided move towards decliners shows up here in the IMAP. You do have three sectors in the green. There are some of the smaller ones, consumer staples and healthcare. Staples is really the big winner here, up 1%. Consumer discretionary, little change, but somewhat higher, and that is because of a gain in Tesla. Energy, communication services, and tech are the big laggards of the day.
All right, guys, let's get to some of the individual gainers. Petco, definitely on that list. Love the ticker, woof. Stock up about 31% here at the close. First quarter earnings forecast topping expectations. Company closing underperforming stores. We know some of their story there. Analysts were pretty positive on the firm's focus on profits over sales. I will point out, though, you did have some analysts cutting their price targets on the stock, but nonetheless, investors kind of liking it today. I will also point out stock's down about 10% for the year, and about 40% of the float is shorted. So
you have a dog, right? A pet?
I have 2 dogs.
Oh, wow.
Yeah.
So, okay.
Yeah, I'm spending lots of money.
Back to that discussion yesterday, Romaine, about how this is a staple, not a discretionary expense.
I know. I mean, I don't know if I know you watch our show religiously, Carol Master, but Scarlett and I interviewed the CFO of Rover, who made it clear that pet parents, as he says, are going to keep spending. By the way, put your dog in the will, he says.
Listen, what is the dog going to do?
Yeah, no, that's my wife said last night, too.
Put him where?
No, put
in the will. In your will.
He wants to make sure the dog is just as well set up for success as his kids.
Stranger things have happened.
All I know is I want to come back as my dog in my next life. I'm just going to put that out there.
Living the life there.
Yeah, exactly.
I wonder what she's doing right now.
Dollar.
She's laying on the bed, on the floor.
She's not concerned about tariffs.
Laying on the down comforter, totally. All right, Dollar Tree down, actually up about 11%. I'm doing gainers. Where am I? All right, rolling for a second.
Don't interrupt her.
I am exhausted right now. I feel like I need a cup of coffee. Dollar Tree up about 11% here, 2 days in a row. Top gainer in the S&P 500. We did have Evercore ISI coming out, raising the firm's price target on Dollar Tree to 85 from 79 a share. Stock closing just below $77 a share. So that was at play. We know the story. The company announced the much anticipated sale of its Family Dollar business. So anyway, a little analyst movement there. Avis Budget, we talked about the car companies, right, under pressure.
Yeah, this was amazing.
Avis Budget up about 18%.
Yeah.
Hertz also rallying big time in today's session on those planned 25% tariffs from the president on autos. So basically the thinking is our own Steve Mann weighing in, new vehicle prices, if they go up, the used vehicles the companies sell become more attractive. So that's kind of some of the reasoning there. So a lot of movement there. And one more, I know I'm only supposed to do 3, but what can I tell you? It's that kind of day for me. Up about 2%.
She's never going to stop.
I know. It was a top gainer in the NASDAQ 100. Thinking is Tesla, because they make a lot of they produce here in the United States, that they're going to be okay. Although they do import some parts from overseas. I am done.
You done?
Metaphorically.
Okay.
Sorry. Yeah,
All right.
I am. Thank you.
Let's do some more on autos. General Motors down 7.4%. U.S. automakers fell after, well, not Tesla and Rivian, I should say, after the president hit auto imports with a 25% tariff starting next week. It's hitting Detroit. It's not just hitting international automakers, as we heard earlier from our man in Detroit. On this day, Keith Naughton, who was really talking about how even though the Mary Barra and the chairman of Ford were in Washington D.C. trying to make their case, they're still obviously very, very concerned about what this looks like. Anything can happen over the next month, but as of now, it looks like these tariffs will go into effect. AMD shares fell 3.2% today. This after Jefferies downgraded it to hold. Jefferies said that AMD is falling further behind when it comes to its tech, behind NVIDIA when it comes to its tech, which could continue to pressure the stock. Shares of AMD have fallen about 50% from a peak about a year ago. At least 8 firms have lowered their view on the company this year. And finally, a late day addition is AppLovin, a short report came out. Shares fell 21% today. Muddy Waters issued a report against the company. At least it's the third report from a short seller in about a month. This specific report alleges that AppLovin misrepresents the benefits of its AI platform, forces app installations, misappropriates data, and violates the platform's term of service. Should note that the company did previously respond to February reports saying that they were, quote, full of inaccuracies and false assertions. It did rise more than 700% last year. Remember, this was one of the best performing tech stocks. It was also added to the NASDAQ 100 recently as well.
All right, let's get a read on what's going on in the retail space. Lululemon out with its report for this fiscal fourth quarter, excuse me. The company said that revenue came in at about $3.61 billion. That's a beat. EPS came in at $6.14 a share. The street was looking for $5.85. That's a beat. This is for the quarter that ended at the end of January. Their fiscal first quarter guidance, they're saying that revenue will be $2.34 billion to $2.36 billion. The street on average was looking for $2.39. As for EPS, the company said look for $2.53 to $2.58. The street was looking for $2.78. So the top end of that EPS range that they're giving is below the average of street estimates. You're seeing the shares lower in the after hours trade.
All right, let's stay on the retail and apparel side because Oxford is another company we're watching. That company reporting results. It owns the trademarks of Tommy Bahama, Lilly Pulitzer, Southern Tide, and Duckhead Lifestyle.
What?
And yeah, that's right. The company reporting fourth quarter adjusted EPS beating analyst estimates, $1.37, 10 cents better than what analysts had anticipated. But for the outlook for this quarter, that does come in lighter than expected. Fourth quarter net sales will be at most $395 million. Analysts were looking for something north of $402 million. And first quarter adjusted EPS will be at most $1.90, long way off from the consensus estimate of $2.73. Nevertheless, Oxford raising its dividend, so that stock may be paring some of its or limiting some of its losses as a result of that increased dividend.
All right, guys, going back to where equities and where assets settled for today, I'm taking a look at the bond market. So no surprises, you saw a little bit of risk off in the morning, saw a little bit of bid in that front end, but honestly, it was a very calm curve. You do see that 2-year yield now below that 4% level. We had the final 7-year auction later today. It was all right. I mean, it wasn't great, it wasn't terrible, it was just okay. But there you are, a little lower yields. The belly not really doing that much, guys. It's surprising how calm it feels the bond market has been.
Yeah, really interesting. I just want to go back to Lululemon for a moment, just looking at the release. Megan Frank, the chief financial officer, talking about another solid year of performance and so on and so forth, but says we look forward to building on our growth in 2025 while remaining agile as we navigate ongoing macro uncertainties. You know, it's going to be super, super important as we start to get into the next earnings season, what CEOs, CFOs, they all say about the outlook. I feel like I've heard the word uncertainty a million times this week alone because people just don't know what's coming at them next, certainly those who run companies.
Absolutely. Carol?
Oh, am I supposed to finish?
Yeah, we're actually done. Yeah.
And back to you, Carol.
Almost Friday. Almost Friday. All right, guys. That is a wrap. Our cross-platform. Thanks for putting up with me. That's for sure. Radio, TV, YouTube, Bloomberg Originals. We will see you again. Same time, same place tomorrow. Alex is heading out. Scarlett remain finishing up on TV. And we're going to finish up an hour to go right here.
We're not done yet, Carol.
You can do it.
Radio.
You can do it.
All right, we'll see you tomorrow, guys.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. Carol Masser. Carol, it's Thursday. It's not Friday.
I know. I don't know why. All of a sudden, I felt like I hit a wall. It happened in the last hour. Sorry. I'm really sorry, everybody. It happens.
Don't be too tired.
And I don't really like to do. You actually ran and got me a cappuccino yesterday.
I did yesterday. I'd do anything for you. Okay.
I know you would, but I don't like to do it because then it's like caffeine in your system in the afternoon. Anyway, we've got something important to talk about.
We do.
Let's get there.
Hey, Connor Sen, you know him from Bloomberg Opinion. He wrote and from our program too. He wrote a column earlier this month about Gen Z's job recession. He cited some Harris poll data from a survey with Bloomberg News that found that 80% of Gen Z members in white-collar roles say it's difficult to find a better position than their current one. So more difficult.
That's a lot.
It's at least 11 percentage points higher than other age cohorts. So it shows the struggles that this generation is facing as they are early on in the workforce.
All right, curious what Steve Preston has to say about all of this. He is CEO of Goodwill Industries International. They call themselves the, quote, largest nonprofit provider of jobs, training programs, and career services in North America. He also served in the George W. Bush administration. He was the SBA administrator and the Secretary of Housing and Urban Development. And he joins us from Washington, Tim, on this Thursday.
Steve, good to have you back with us. It's been a couple of years since we last connected. I know that this data point is going to resonate with you because you teamed up with McKinsey to do your own survey about Gen Z. And from my understanding, it really kind of gels with what Bloomberg News found with Harris poll. What did you find?
Well, we found a number of things. I mean, in a lot of ways, Gen Z's come under a bit of attack of not being motivated or not, being excited about the job market. But we really found something pretty different. We found by and large, most Gen Z people are looking for training. They're 2.5 times more likely to pursue some kind of training and education. And when you dig deeper into their attitudes, they're actually kind of scared. They're really worried about job security. A third of them don't know that they'll ever be able to retire. And 70% told us they don't believe that they'll ever own a home. So think about that as a 22 or 23-year-old, and you're looking into your future, and you're just kind of saying, oh, my goodness, there's not a lot out there for me. But they're pretty motivated.
Are they right? Based on kind of the metrics that are out there?
I think that's a great question. And when we look at the housing market and some of these other things, you can imagine that it feels pretty daunting. But I think the other thing we're seeing is they don't necessarily understand the pathway to get to a better place. I think if you're somebody who's gone straight to college and you've gotten an engineering degree, it feels a little bit different. But the majority of a lot of these people are just, don't know how to find the right training, want to get ahead, don't know how to find the right job. And if they can connect with those resources and get the right kind of support, they'll find themselves on a fundamentally different pathway. And that's what we want to make sure that these people can experience, is get a vision for what they can do in their lives and be able to get the resources and get the support they need to get on that pathway.
Well, remind everybody why this is so important to Goodwill Industries, because I think a lot of people understand Goodwill as a place, the thrift store and the thrift store network that you have. That's only part of what funds your mission.
Yeah, so our mission for 125 years has been about helping people with deep challenges in life get on their feet, get the support they need, and move into the workforce so they can take care of themselves. So in addition to those 3,300 stores, we have 600 job centers around the country where we do a lot of this kind of support. In addition, we do a lot of job training, obviously, within the stores themselves. So we focus very hard on young populations, on people who've come out of incarceration, on people in lower wage categories, to say, how can we help you get from where you are today to a place where you can get a stable job, move forward in your life, and take care of yourselves and your families? That is what Goodwill is all about. And we love that you know the stores, because we want you to shop there and donate there, because much of what is generated in those stores funds this important mission. But what we're all about is those people.
Hey, speaking of funding, got to get your thoughts on Doge, because you do get government funding. We did learn from your team when I was asking about this that you get more than $600 million network-wide from different government sources, which includes the federal government. Is that at risk?
Yeah, it's at risk for us, and it's at risk for all nonprofits. And what we're hopeful is that when the federal government gets through this process, they'll understand that workforce development programs have a very meaningful impact in the lives of people. And in fact, you know, one of the things about Doge, and one of the things about what we're talking about here, is people are very focused on the cost to the government of different programs. But if you think about what it costs for somebody to be incarcerated or be going through the justice system, when you think about what it costs for them not to be working or not paying taxes, or for their families to need all kinds of support, the value of helping those people move into a place where they can take care of themselves, where they don't need public assistance, where their children have more resources to move forward in life. I mean, the value to all of us financially is enormous. Now, we like to talk about the value to human beings because we care about it, but the financial value is huge for all of us. And I think these are issues that every one of us should care about and be able to get behind.
Look, I don't disagree, and I think a lot of people would agree with you. It doesn't seem like, though, to be honest, that a lot of folks in Washington get that message. I mean, we can look at it from a public health perspective, too. There's a question asked, okay, why does the United States support funding of disease and outbreak tracing in parts of Africa? Well, it's because we don't want these diseases to come to the U.S. If Ebola does come to the U.S., it ends up costing a lot of money, and it can cost lives. But it doesn't seem like that connection really exists right now in Washington. I think a lot of people would argue.
Yeah, I think there are a couple of challenges here. Number one is it's easy to look at the cost of a problem, but it's harder to look at the full value of the solution. And in many cases, the full value of the solution is significantly greater. Another thing I think is important for all of us is our companies are looking for talent. We need to have a competitive workforce. It's the most important asset our country has. And by providing the support for people who are what I would call underemployed or not in jobs that really reach their potential, and helping them move into some of those more important jobs to our economy and to our growth, we actually fuel the economy in ways. And so this is a very strategic thing. I think everybody gets their head around the importance of opportunity for people, and everybody gets excited about people who are looking to move forward in life and actually realize their dreams. But the pathways there can be kind of complicated. And a lot of times, if we're looking at people who are in lower income groups or have other kinds of challenges, we don't always believe that it's possible. But it is possible, because all of the data show that when people get the right kind of support, we see remarkable transformations in their lives, and it's good for everybody.
Is Washington listening to you?
Well, I will tell you, we have found across different administrations, irrespective of party, that when it comes to issues around opportunity and when it comes to issues around work and helping people get skills, almost everybody listens. People don't always agree on the right way to get there, but everybody listens. And I think right now we're in this place where things are happening very, very quickly. And I think the administration is trying to make impact in a lot of different areas at the same time. But I think when things slow down a little bit and there's time to have these conversations, I'm very hopeful that we'll see a lot of people who are interested in moving forward in a lot of the same ways that we talk about. And I think that's for both parties.
Well, we definitely look forward to hearing more from you on that front as well. Steve Preston, thank you. Chief Executive Officer of Goodwill Industries International, joining us from Washington, D.C.
I don't think, Steve, we've spoken since 2022. So
it's been a while.
It's been a while, but come back sooner next time. We look forward to chatting with you again. Hey, just reminding everyone how the market closed today, second down day in a row for the major indices. The S&P 500 down 0.3%, while the NASDAQ down 0.5 percentage point. Coming up next, a new book looks at the meteoric rise of Indians in America.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. It turned out to be a down day for the Dow, the S&P, and the NASDAQ Composite Index, all moving lower today. We had the S&P down 18, drop there of 0.3%. The Dow down 155, a decline of 0.4%. The NASDAQ Composite Index was down 94 for NASDAQ. That was a drop today of just about 0.5%. Bottom line, a down day finishing in the red. Did spend part of the day in the green, but the S&P ended with a loss of 0.3%. Earnings news after ours. Lululemon Athletica down 7% after delivering a gloomy outlook for the year ahead amid slow sales for the yoga wear brand in the United States. Down now by 6%. The retailer expects retail sales to be in the range of $11.1 to $11.3 billion, lower than Wall Street analysts expected. The outlook for first quarter revenue also missed missed expectations. Opening day for Major League Baseball in Boston. The Boston Red Sox taking the field this hour to take on the Texas Rangers at Globe Life Field in Texas. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Okay, pop quiz.
Yeah?
What do Microsoft CEO Satya Nadella, Google CEO Sundar Pichai, IBM CEO Arvind Krishna, Ambassador Nikki Haley, Congressman Ro Khanna, and former Surgeon General Dr. Vivek Murthy all have in common?
They're all Indians.
They're all Indians in America.
That is true.
And they're all mentioned in Meenakshi Ahmed's new book, though they are not all profiled in the book, which we will discuss. The new book is Indian Genius, the Meteoric Rise of Indians in America. Meena joins us from Los Angeles. Meena, welcome. I should note, full disclosure, Meena is my good friend's mother-in-law, but we would have had her on the program anyway because this book is awesome. I do want to start with numbers. We're Bloomberg. We like data. By many measures, Indians are among the most successful group in the U.S. They've got a higher median income. They've got a higher median educational achievement. They've got the lowest poverty rates and the highest rates of educational attainment among Asian groups. Meena, what do you attribute that to? Why are Indians in the U.S. so successful?
Well, I think there's several reasons, and of course, one of the contributing factors is what you just mentioned. But one is the acquired, one is their acquired ability. Their skill sets. Many of the Indians who have come to this country have specialties in STEM. And, we are living in a world in an era of tech domination. So those particular skill sets lend themselves to the needs of the country. And so they've risen well and done very well. If you look at Silicon Valley, a third of the startups are all run by Indians. They were all founded and their CEOs are Indians. If you look at the medical field in this country, 1 out of every 12 doctors in America are of Indian origin. That's quite a astounding number. So, that's one of the reasons they're highly educated, but they're highly educated in the STEM fields. When President Johnson passed the Medicare Act in 1965, you all of a sudden had 20 million people who had access to healthcare, but the hospitals didn't have the doctors. So, and at the same time, the AMA had suggested that medical schools reduce the numbers of medical students. So where were the doctors going to come from? And at the same time, you had the Vietnam War. And so a lot of wounded people coming back and a lot of doctors going out to help people in the Vietnam War. So they went and recruited overseas. And so Indians were coming in who were highly trained from very good institutions in India. So they recruited people because people from Europe weren't coming in anymore. They weren't immigrating to the US. So you get these Indians, Filipinos, and other people coming in with these skill sets. And then you had Silicon Valley, of course, where the military was investing massive amounts of money into technology, because after Sputnik in 1965, there was this Russian arms race during the Cold War. And so you had a need for engineers, and there was a shortage of engineers. So you had, and after 1965, they relaxed the rules.
Right.
So engineers could come in. Where were they going to get these engineers? European engineers weren't willing to come.
Yeah, it's so interesting. If you look at the folks in your book, Meena, how do you define the connection between all the people you do feature in it? Some of them, such as Nikki Haley and Ro Khanna, were born in the United States. Some others, Adobe's Shantanu Narayan and Microsoft's Satya Nadella, they were born in India. So how did you kind of figure out who to profile?
Yeah, so what's really interesting, if you look at, Satya Nadella, Shantanu Narayan, the CEOs of Adobe, Microsoft, Sundar Pichai of Google, these people, what's remarkable is they rose to the top within one generation. That's what's so unusual about these Indian Americans. They've done it in one generation. A lot of these people have specialized in STEM. And Indians are sort of obsessed with educating their children in STEM. The people who attained economic security in this country and their children were born here, like Nikki Haley, Lo Khanna, and Neil Katyal, who were profiled in my book, they grew up with some sort of economic security and they wanted to give back. They followed a different path, and many of them became lawyers and they went into other fields. And a lot of them went into politics. 99 Indians ran for public office in 2020, in the 2020 election. That's quite a remarkable amount. We have now 6 congressmen who are in origin in the U.S. today.
Well, I want to talk more about the people
on the rip. In this recent election, you had 2 people. You had, Vivek Ramaswamy on the Republican side, and you had Kamala Harris on the Democratic side, and they were pretty prominent contenders. And Nikki Haley, who was sort of the last person standing against Trump.
So what do you make of? So it's probably a good segue to talk about some prominent Indian Americans who are in this administration and adjacent to this administration. You mentioned Vivek Ramaswamy. There's Kash Patel. There's Second Lady Usha Vance. How do you look at this administration with regard to policies that may affect this community?
Well, you're talking about Trump's immigration?
Yeah, the H-1B issue mainly. If you look at some BBC reporting, for example, Indians account for more than 70% of H-1B visas. And this was a big issue a couple months ago that really divided people in this country. What's the risk if U.S. immigration becomes more restrictive?
So, this is going to be an issue. And as you said, 75% of the H-1B visas have been given to Indians, and the Chinese follow at 13%, which is quite a huge, gap. And everyone in India is very concerned about this particular issue. There's a split in the MAGA community, as you probably know, between the sort of Stephen Millers and Bannons who feel that white people built this country, and we don't need, these people are taking away jobs, and we do not need them. We can find Americans to do their jobs. And then there's, the Elon Musks and the tech bros who really feel, no, how are we going to compete with China and the rest of the world if we don't have highly skilled people? And we need skilled people to come in. I mean, we can restrict immigration, but let's keep getting skilled people coming in. And Trump seemed to side with the Elon Musk view. I think let's just look at the evidence. Every immigrant community that has come into this country has brought their skill sets. It's just not true that only white people built this country. African Americans, I mean, the country went to war. They had a civil war. Have they forgotten? Because they were so critical to the economy of the South. So, the country was built on the back of the labor of African American people. So, if they restricted, Latin Americans from coming in, I think, you'd have sky high inflation because all the fruit and vegetables would be rotting on all the fields, and people aren't willing to do those jobs.
Right. Many would argue that it's the diversity of this nation and the open door policies that have enabled it to really succeed economically. If I may, because we only have about a couple of minutes left, Meena, there is some prominent Indians that are not in your book, and most notably, at least for us in our world here at Bloomberg, because we talk about Alphabet and Google so much, Sundar Pichai of Alphabet. You mentioned him in the book, but you decidedly didn't profile him. And you argue in the book that, quote, although he is known for his management skills, he has fallen short. We just have a couple of minutes here, but I'm just curious about why he wasn't included and your thoughts here.
You know, Sundar Pichai is very smart. He's a wonderful human being. And I don't want to take any of that away from him. But I was looking at people who were visionary and transformative in their fields. And if you look, when OpenAI landed, it shook the market in the way that DeepSeek has shaken the market. And Satya Nadella actually responded with great vision, I think. And he not only bolstered Sam Altman, but when Sam Altman was, when the shakeup happened and there was a fallout, he actually offered Sam Altman an alternative to set up at Microsoft, and he stabilized the whole situation in the market. And I think he had great vision in the way he had, first of all, invested in OpenAI, and then secondly, when the blow up happened, he actually stabilized everything by providing them with a home, and then everything got stabilized. What did Sundar Pichai do? He got so anxious, he kind of ran to the founders and asked them to come back and help them out. And I don't think you run, to mommy and daddy and then say, come back, help me, I need you, if you really are visionary. So that sort of made me think. And the other thing is, DeepMind is, DeepMind really is the sort of the innovative part of Google, and that's run by Hassabis, right? And I'm not saying that Sundar Pichai hasn't done wonderful things, but I'm looking at who's the visionary here.
Right.
And in my mind, it's been Satya Nadella.
Mina, it's a great place to leave it. It's a fantastic book. Indian Genius, The Meteoric Rise of Indians in America is out now. Mina Ahmed is the author. Coming up next, we go to Irvine, California. This is Business Week Daily.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Turned out to be a down day, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Federal Reserve Bank of Richmond President Tom Barkin says uncertainty around rapid policy changes by the Trump administration has created, quote, a sense of instability and is affecting businesses and sentiment. That headline breaking right now on the Bloomberg Professional Service. The Dow, the S&P, NASDAQ ending the day in the red. Stocks fell after the U.S. pushed ahead with tariffs on automakers. Auto stocks lower today with the S&P down 18 to 56.93, a drop of 0.3%. The Dow down 155, down 0.4%. NASDAQ Composite Index down 95, a decline of 0.5%, with a 10-year 4.36%, the 2-year 3.99%. Gold up 1.2%, 3,056 the ounce. West Texas Intermediate crude up 0.3%, 69.87 a barrel. So bottom line here, down day. As for the market backdrop, Katie Nixon is Chief Investment Officer at Northern Trust Wealth Management, and she was interviewed right here on the Bloomberg Business Week Daily.
I don't think investors really know which way to turn right now. The market today is a really interesting example where you sort of look at the averages, look at the bond and the stock markets, and you say, not much going on, but beneath the surface, there certainly is a lot of churn.
Katie Nixon of Northern Trust Wealth Management. Lululemon Athletica After Hours is trading lower after delivering a gloomy outlook for the year ahead amid slow sales for the yoga wear brand in the United States. Right now, we got Lululemon Athletica down by just about 6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thanks, Charlie. Do appreciate that. Irvine, California. It's in Orange County, south of L.A., inland from Newport Beach. You can call it a company town, but not in the way that you might think. One company owns about 75% of the apartment units in the city, and almost everything else, from shopping centers to office spaces to a golf club, solar panel installation business, and yes, Carol Masser, even the community newspaper.
It's wild. We're talking about Irvine Company and the secretive developer behind it, who's the wealthiest real estate developer in America with about $17.4 billion to his name, according to the Bloomberg Billionaires Index.
Michael Waters and John Gittleson write about this for Bloomberg Business Week. Someone named Donald Bren. Michael Waters is a Bloomberg Business Week freelance contributor. He joins us from New York City. Check out his story on the Bloomberg and at Bloomberg.com/businessweek. Michael, good to have you on the program. Who is Donald Bren?
Yeah, thank you for having me. So Donald Bren is the CEO of the Irvine Company, and he is one of the wealthiest real estate magnates in America. And essentially, the Irvine Company historically was owned by the Irvine family. So they essentially consolidated this vast plot of land in Orange County. At its peak, the Irvines owned 100,000 acres of Orange County land. And eventually, they decided to convert that land into a city and develop housing on top of it. And so the Irvine Company was born out of this inherited land. And starting in the 70s and continuing to the 80s when he took full control, Donald Bren, who is this developer from the area, entered the orbit of the Irvine Company, and he started out as a partial owner of the new company, and eventually took over and took this company that had been created by the Irvine family and pushed it really to new heights under his leadership.
Donald, do I want to live there? I mean, no cannabis shops, no cemeteries, no... Almost
What do you need a cemetery for? What do you need a cannabis shop for?
Almost no above ground cables. You've left the city when you start to see telephone poles. One person that you guys talked to for this story, a professor, driving through, she says, once in a while she'll make a turn and there's this very spooky feeling like, oh my gosh, where am I now? Because it all looks the same. I mean, do we want to live there?
I mean, it depends on, I think there's a lot of different opinions on it. But it's certainly the result of meticulous planning. And I think that's why, the Irvine family, when they own the company, and now Donald Bren as the owner, like think about the smallest details. I mean, Donald Bren himself is known to drive around the city and like look at his property and like ask for really specific aesthetic changes. And you really feel that in the city. Everything is just the way that someone thinks it should be and is, many people I spoke to described it as variations on boring. I think other people just feel it's very clean. You know what I mean? It's different perspectives, but it's the result of this really phenomenal sort of like top-down control over so much of the city.
So Donald Bren is 92 years old, and he's got no announced successor. You guys describe him as the one-man HOA. What happens when he's gone?
Yeah, no one knows. The Irvine Company says they have a plan for what happens after Bren. Nothing has been announced, and some of the people we spoke to, are just really not sure what's going to happen. Certainly, it will be consequential for the city of Irvine. So while the city of Irvine, they obviously have their own city council and governing structure independent of the company, the Irvine Company has such a large amount of control over just like housing and commercial real estate in the city that, who runs the Irvine Company really has a big effect on what the city will look like. And, this is an issue around affordable housing, for instance, like, the new mayor of Irvine, who just came into office this year, wants to negotiate with the company to cut rents on housing. It's a very expensive place to live. And so whoever is in control of the Irvine Company will have a big downstream impact on the city itself. But, as of now, Donald Bren is still in charge. He still has the top title, and no one really knows what's going to happen next.
It's so interesting. I feel like over the years, we've talked so much about urban planning and the developments, that are needed today. I mean, is this considered a success in terms of urban planning, or maybe or a miss on some aspects?
I think that it is by far the most successful master plan city. So like I mentioned, Irvine, California, it started out as this just like vast plot of inherited land owned by this one family and was converted into what is a very thriving city. It's the 63rd largest city in America. It's a very expensive place to live now. And so I think on one level, there is no larger master plan city in America. So the fact that this sort of empty space was then converted into such a thriving city is to some a hallmark of success. Then on the flip side, it's also a very exclusive and expensive place to live. And some might say like lacks character in certain key ways, as we alluded to earlier. And so I think that is kind of dependent, but certainly there's no other larger example of a city that was really conceived of from the ground up like this.
The cops drive cyber trucks, Michael.
Yeah, no, for sure. I mean, I think it's kind of like there's a part of it that's like tech utopia and then also tech dystopia. I think it's you see like plenty of other.
To that point, you two write about the notion that, yes, there's an Apple store, yes, there's a Capital One cafe, but if you're a local business, you got to follow and play by the rules. What are some of those rules?
Yeah, I mean, I think they really want certain kinds of businesses only, like businesses that they feel are like family friendly in different ways. They also, a lot of stores in Irvine are chain stores or have like locations elsewhere. I think they really like these like bigger stores that already have followings and bring in new people. And also just the way that the contracts are structured is that the Irvine Company takes, you have your like maintenance, your base rent, and then a percentage. The Irvine Company takes a percentage of revenue from a lot of those business owners. And, they have a lot of control. If you want to open a business in Irvine, you most likely will do it by renting from the Irvine Company. And so they have a lot of ability to sort of set those terms.
Well, the history of this development and then this individual who has accumulated so much wealth and how he's been able to stay under the radar is just kind of mind-blowing. A great read, incredible read, no doubt about it. So appreciate it. Michael Waters and John Gittleson writing this story for Bloomberg Business Week on Donald Bren. Check it out, guys. So interesting. Thanks so much, Michael. So appreciate it. This is Bloomberg.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching Bloomberg Business Week Daily. Carol Masser, Tim Stenovec, live in our Bloomberg Interactive Broker studio on this Thursday in a day where, tariffs continue to stress out investors. We had some bouncing around here. We did finish, though, relatively little change, little lower, about 1/3% on both, to the downside on both the S&P and the Dow, and the NASDAQ down about 0.6%. So finishing just, I don't even want to say off our worst levels. We really did. It was just kind of a weird day. Yeah, a weird day.
It was a weird day.
Was a weird day.
Yeah, some days are weird, some days are not weird.
Things do move around.
Do they?
Yes.
Yes, sometimes stocks go up, sometimes they go down, and sometimes they move.
Let's take a look at some stocks on the move on this Thursday. Bloomberg News Deputy Team Leader for U.S. Equities, Jess Metten, on the Thursday Stock Movers. Hello, hello.
It's been another fun day for us on the stocks team.
Yeah, you guys are busy. You're busy.
This is what we live for, though. And it's always important because you want to look at the winners and the losers when you're looking at a lot of these trades, because there's always both sides to that. And when you look more particularly, obviously, auto stocks making a lot of big moves underneath the surface here today. So, of course, when you're thinking about the big three, whether it's GM, Ford, Stellantis, of course, Ford getting hit the hardest, just given when you're thinking about the percentages here of the amount of vehicles that GM does import and its particular ties to exposure toward Mexico, it getting hit the hardest here, down actually over 7% today. It was the worst day since January, actually 28 there. But then I have to point out some of the winners, though, within that as well, because you have rental car companies, whether you're looking at Hertz or Avis, those were actually rallying. So really a lot of strategists were talking about how tariffs could potentially boost the value of the rental car companies' fleets here. So if you're looking at Avis, up to over 20% today, and then Hertz 23%.
Off the chart.
No, it is. And Hertz, that was the biggest percentage gain for Hertz on record if you go look at the SINS function.
It makes sense. It makes sense because if autos become more expensive, new cars, because of these tariffs, and this is from Steve Mann at Bloomberg Intelligence, great research, check it out. It makes sense because then demand for used cars goes up. Who are the biggest sellers of used cars? Well, it's the rental car companies with their fleets.
That's right. And then, of course, the different auto part makers, too, were rallying on that. So you have O'Reilly up about 3%. Not as much as some of these other companies that we're talking about, Avis or Hertz, but then AutoZone, too, up about 4%. So to your point, Tim, when you're thinking the story in the terminal, talking about how those impending tariffs on Canada and Mexico to risk driving up U.S. car prices by as much as $12,000.
You got to love Jess Metten. She is charged with bringing 3 names.
I know. I think we've already
3
hit
names,
them.
and she brings 3 categories.
Right, yeah, that's right.
Each with multiple names. That's Jess Metten.
We do love her. We do love her.
Okay, Jess Metten, let's talk about something. You could argue that, the autos are sort of attached to reality. Give us something that's completely detached from reality, that lives in its own world.
What fundamentals, some might say.
Right. I mean, it's interesting. Yesterday, you had that stock up, close to about 12%. Today, down over 22%. So that wiped out a quarter of its market value. Amazing. About $3 billion lost in its market cap. So yesterday, you saw the stock higher because there were those anticipations of some of the news that it was announcing about trying to load up on Bitcoin. But then today, we got more specifics on that about basically loading up on debt. So when you're hearing different phrases like convertible bonds to fund those Bitcoin, that's why you're seeing that stock actually decimated today. And even just some context, if you look at the GP function and pull it back during, of course, the height of the meme frenzy in the beginning of 2021, I mean, that stock's down about 75% from that all-time high back in January 2021.
Taking a page out of Michael Saylor's book over at Strategy, the company formerly known as MicroStrategy.
And it really worked today. No, it did not.
No.
No, it did not. All right, let's get into an area I love and adore, and I spend a lot of money, pets.
Woof, woof.
That's right. Woof. I love that ticker symbol on Petco. So I wanted to bring this up. I know y'all were talking about Chewy yesterday. And so here's another, when we're talking about the economy, people spending money, but when you're looking at some of these, especially companies tied to pets, people are still going out and spending money on this. So some context, Petco had gone public 3 times. So the first time was in 94, it went again in 2002, and then of course this last time was in 2021. But since then, it's been having different issues. If you look at that chart price too, it was trading at nearly $30 a few years ago. Now it's just above $3. So it's been in a restructuring, been closing a lot of stores, but that has been helping some of its margins. So RBC was pointing out that they do feel like it has more upside potential just because of how decimated that stock has been. And they're seeing some optimism there on some of the margin pain. So they actually think that it does have a path towards actually more profitability in the near term. But UBS is still pointing out that can only go so far as more stores are being closed. So how do you compete with a company like Chewy? So there still are some longer term implications here when you're looking at this stock.
You see the percentage of the float that's shorted?
That's right.
Almost 40%.
Yeah, it's wild when you look at different functions like that.
Yeah, I mean, so investors are betting it's going to go lower. I mean, it's a $3 stock at this point.
It
is.
is.
It's kind of amazing considering how much we do spend on our pets that you would think, I don't know.
Pet parents,
I think it would be in a different position.
I don't have a dog right now, but I'm definitely thinking about getting one. So, maybe I'll visit the store soon.
I'm a big, I know we just talked Petco, but we're big into Chewy. Yeah. Delivered to your door. Those big, boom, bags of food.
Yeah. Someone else has to carry them. You don't.
That's exactly right. Jess Metton, thank you so much. We really appreciate it. Bloomberg News Deputy Team Leader for U.S. Equities, Jess Metton, joining us right here in studio with Thursday's Stock Movers.
All right, we'll see what Friday brings. Just a reminder, the S&P 500 today fell by 0.3%.
Friday
Pizza.
brings the weekend and pizza Friday night. Yeah. Sorry, go ahead. You were going to say something?
Oh, I was just telling everybody how the markets did today. The NASDAQ composite down by 0.5 percentage point, and the old trusty Dow down 0.4%.
Yeah, we'll see what tomorrow brings.
You know what tomorrow brings?
Mayflowers?
The weekend.
Brings the weekend. Oh my God, so wacky. It's been a long week. We got another day to go. All right, do not go anywhere. Have a good and safe evening, everybody. Balance of Power starts right
now. From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lines, I'm Joe Matthew.
President Trump's promise of 25% auto tariffs to join reciprocal tariffs taking effect next week draws swift criticism and threats of retaliation from trading partners like Europe and Canada. We'll discuss the impact with Andrew Hale at the Heritage Foundation and the uncertainty they're creating in the U.S. economy with Bloomberg opinion contributor Kyler Scanlon.
Attorney General Pam Bondi suggesting she will not seek an investigation into the Signal Group chat. Will consider the fallout with Sabrina Singh, former Deputy Pentagon Press Secretary for the Biden administration.
And the U.S. is now pushing to control all future infrastructure and mineral investments in Ukraine. We'll get reaction from Daniel Fried, former Assistant Secretary of State for Europe and former U.S. Ambassador to Poland.
Thanks for joining us on the late edition of Balance of Power on Bloomberg TV and radio. We begin with threats of retaliation coming from U.S. trading partners after President Trump announced right at this time yesterday his plans to hit auto imports with a 25% tariff starting April 2nd. The European Union now weighing its options, including, they say, the deployment of what they're calling an anti-coercion instrument. And Canadian Prime Minister Mark Carney and Mexico's President Claudia Sheinbaum had these responses earlier.
When President Trump threatens us again, we will fight back. We will fight back with everything we have to get the best deal for Canada. We have a number of measures that we can take in response to those initiatives.
And on April 3rd, we will be presenting a comprehensive response to what Mexico is going to do in the face of this new situation. And that does not mean that on April 3rd, we will close the doors on working with the United States. We will always look for what is best for Mexico at that moment.
Joining us now is Bloomberg's Laura Davison. So, Laura, as we look ahead to next week and know that President Trump has suggested he actually is going to be, in his mind at least, fair and perhaps more lenient than countries are expecting, if there is indeed retaliation, is he signaling that the U.S. is just going to take that, or do things suddenly become a little bit more or less lenient, rather?
It's possible we will see less leniency or see kind of certain targeted tariffs like that 200% on European wine and alcohol spirits that he's suggested that he may take a targeted approach on some of these countries he doesn't like. He's really said a bunch of different things about what this April 2nd deadline will look like. He's suggested that there's an opportunity to negotiate up until April 2nd, but he's also said he doesn't want to allow too many exceptions. He also has said that he doesn't really want to allow for much negotiation. So it's really up to sort of the trading partners that are figuring out, okay, what's the best approach? So far, no one has seemed to gotten it. The Canadians kind of had this more like war posture. Mexico was much more, let's be cool and calm about it. Neither of them really got anything out of it so far.
Remarkable to see how much of a U.S.-made vehicle, in some cases, particularly for GM, is assembled outside of this country. Is the phone ringing at the White House from the big three who want him to stop?
It certainly is. And Susie Wiles has been involved in some of those conversations going back to last month when they got that 1 month reprieve. But it's clear that the automakers haven't figured out a plan here either, like the various heads of state. Hyundai was in here just in Washington just this week announcing this big investment. They were also not spared from this. This has really been sort of a conundrum for all these companies as they're figuring out the rules until yesterday, where that you could move parts across the North American continent really without penalty. And that is really that's changed and with the stroke of a pen.
With us in Washington, Bloomberg's Laura Davison. Laura, thank you so much. As we add the voice now and consider the economic impact of all of this, Andrew Hale, Senior Policy Analyst for Trade Policy at the Heritage Foundation. It's great to have you back, sir. What do you think about Liberation Day next week? Is this another head fake or the start of a real trade war?
Well, we need clarity, we need continuity, and we need to know what a lot of diplomats in Washington are saying, and officials and senators and congressmen. We want to know where this is going to land. We want to have a clear process, and regardless of what that is, we'll then know what to work with. But the markets want clarity, they want continuity. Businesses need to have this so they can make plans for their projects and their investments. And I think that's what we all want at this point. We want to know exactly what they're going to do, and we want a process and something that we can follow so we can start making decisions. And of course, we've seen how the markets have reacted to the uncertainty.
Well, and when we consider business decision-making, Andrew, it's one thing if tariffs are actually implemented. It's another to have to make those decisions when you aren't sure, to your point, what ultimately these costs are going to look like in terms of input costs you're going to have to pay. Is it possible that even if not everything the president has outlined comes to fruition, we still see the detrimental effects in the manufacturing economy in the U.S.?
Well, for example, if you look at, for example, steel and aluminium tariffs, they will certainly benefit American steel companies like Cleveland-Cliffs, okay? But we get 40% of our steel from Canada, refined steel. We only have 11 blast furnaces left in the United States. We had 57 in 1990. And it's so difficult to get planning permission, zoning, et cetera, and EPA regulations are really difficult for the production of steel and to getting new blast furnaces. So we're not going to replicate the 40% overnight we're getting from Canada, and tariffs are not going to bring that about. What we're going to do is we're going to pay more for steel. And steel goes into the table I'm sitting at, the chair, my toaster, appliances, the door knob I'm looking at, the hinges on the door. These things will become more expensive. And then, of course, it does have an effect on downstream industries and downstream workers as well. So, yes, our major steel companies will do very well. And we're picking potentially, I don't want to pick winners and losers. No, I know that the administration prioritizes steel, auto manufacturing, aluminum. These the auto manufacturing tariffs are 232 national security tariffs. Yes, in a time of war, we do need to have a strong manufacturing base so we can shift to a military-industrial complex economy. But again, we also need to be concerned about the effect that this is going to have on the consumer. And at the end of the day, tariffs can be a tax on the consumer.
There remains a question, though, Andrew, about the end game. Are you trying to raise money? Are you trying to raise revenue or zero out a trade imbalance with any number of nations. We talked about that earlier today on Balance of Power with Jared Bernstein, the former director of the White House Council of Economic Advisors, of course, Biden administration. This is what he said about the impact and strategy of this approach.
These broad-based tariffs have never been shown to lower the trade deficit. They've never been shown, even if you do lower the trade deficit, for that to translate into more factory jobs. We had a lot more success tapping an untapped demand or elasticity for people who wanted to build factories in this country. Many of those factories are underway. Those shovels are in the ground, and that's still ongoing. But that has proven already to be a lot more successful than the tariff strategy.
So we have a philosophical disagreement here, Andrew. Where do you stand?
Well, I'm less concerned about, for example, the trade deficit as some others are, because that's the flip side of a demand for our financial assets. The whole world wants to invest in the United States. I'm less concerned about the trade deficit as others, but that's a personal point of view. But I want to talk about, if I could say, I could answer that with the recent tariffs, 25%, 232 tariffs on auto manufacturing. I mean, these tariffs are designed to boost American auto manufacturing by encouraging the final assembly in the U.S. factories. And as more production shifts to the U.S., the theory is wages in the auto sector and related industries are expected to rise due to increased demand for skilled labor. That's why the United Auto Workers are supporting this. Having said that, let's look at, for example, domestic U.S. manufacturers of autos like GM and Ford. During the production process, so many of the intermediate goods crisscross the U.S.-Canadian border a number of times in the manufacturing process. We should not be tariffing those intermediate goods every time they cross the border. We need tariff-free intermediate goods for our domestic manufacturing, and that's how you boost a manufacturing here in the United States without hurting the consumer and downstream industries and workers.
Well, so when we consider boosting manufacturing in the U.S., which is what ties into the administration's kind of phrasing here about this potentially being some short-term pain for longer-term gain in those longer-term investments companies, in their mind, will make because of these tariffs, how long realistically is that time horizon till we realize that manufacturing in the U.S.? Because you can't just snap your fingers and have a factory built with workers to populate it overnight.
Well, as I've said, it takes a long time, and just keep the permission to build a new blast furnace for the production of refined steel takes a great deal of time, and it's extremely expensive. We priced ourselves out of the market. That's why we're getting 40% of our steel from Canada, because, of course, they also have very high EPA environmental regulations, but their steel is made with nuclear power, and, of course, they have vast amounts of hydroelectric power. It's very difficult to build nuclear reactors here in the United States, given the regulations. So I actually think that potentially with regards to tariffs, I do think that there are occasions where tariffs can be a benefit, certainly with regards to as a negotiating tool to obtain market access in other markets. But with regards to, right here with manufacturing, we just simply don't have the infrastructure to do this. So I think and that's largely because of these regulations. So if we could take a blowtorch to some of the regulations that prohibit us from building the infrastructure for manufacturing in the United States, that would be best to try that first, because I think we might be putting the cart before the horse by immediately, going to the tariff.
All right, Andrew Hale, Senior Policy Analyst for Trade Policy at the Heritage Foundation. Thank you for joining us.
Thank you so much.
And coming up, the fallout continues from the Signal security breach as the White House is struggling to defend against criticism of the incident. Sabrina Singh, former Deputy Pentagon Press Secretary, joins us next to discuss on Balance of Power on Bloomberg TV and radio.
Well, first, it was sensitive information, not classified, and inadvertently released. This was not classified information, and we are very pleased with the results of that operation and that the entire world is safer because of it.
Attorney General Pam Bondi earlier today indicating the Justice Department would not open a criminal investigation into the sharing of military attack plans in a group signal chat. Meanwhile, the top senators on the Armed Services Committee are demanding an investigation. Republican Chairman Roger Wicker and Democratic Ranking Member Jack Reed sending a joint letter to the Pentagon's acting Inspector General to review the case. The Pentagon's previous Inspector General was among those President Trump fired shortly after taking office. And joining us now for more here on Bloomberg TV and radio is Sabrina Singh, former Deputy Pentagon Press Secretary during the Biden administration, here with us in our Washington, D.C. studio. Sabrina, thank you so much for your time. When we consider the way in which an investigation may or may not move forward, given your time at the Pentagon, would it be your expectation that one of the first things that an investigation establishes is that this was classified information that was shared?
I mean, from an objective standpoint, and having served in the administration previously and understood all the sensitivities that go into an operation, I mean, and folks on the joint staff would also say the same thing. Everything in that text thread was classified, especially what Pete Hegseth put in, that in particular. What the Trump administration is saying that it was not classified information. The investigation would go into examining where that information came from and if, in fact, it did come from classified documents, which I believe they would find that. But that's exactly what the investigation would look into. And, to your point, Donald Trump fired all the inspector generals for all the agencies. So I don't know who is in that acting position right now. But if I were still there and this happened under, with any other employee, the IG for DOD would be looking into this, and no doubt Congress would be as well.
How does this play in the Pentagon? What do you hear from your former colleagues, your old contacts? Because the Trump administration says you're telling the wrong story. Enlistment is up sharply since Donald Trump was elected and since he took office. As you just heard from the Attorney General, the mission was a success. Is that partly true? We're looking at the wrong story here?
I actually think there's two separate things here. One, recruitment was going up under the Biden administration. In December, Army saw great numbers. So that's a good thing. We should celebrate that. And I hope recruitment does continue to go up under this administration. Two, the operation was successful. That's because we have the best of the best serving in our military. They should be applauded for that. What the Trump administration is doing to continue to degrade Houthi capabilities, that's a good thing. Let's celebrate that. What's not a good thing is what the Secretary of Defense did, which is put those fighter pilots that were going and pre-stage, pre-operation at risk. He put the entire timeline and sequencing of events in an unclassified commercial texting app. Everything that's pre-operational before an event begins is always classified. It is to protect our pilots in the air, our fighter pilots. So how does this play in the building? I think, again, anyone else knows the operational risks and security that the secretary took. And, he's going to have to face accountability, I think.
Well, and in terms of accountability, had it been anyone else inside the Pentagon, would they still be in their position right now?
Oh, I mean, no, absolutely not. I can tell you any other DOD employee, any other state employee, any other NSC employee would have been immediately put on administrative leave. There would have been an investigation launched probably right away. And ultimately, the decisions from that investigations would have yielded the appropriate accountability or punishment.
Talk to us about this assertion from the president himself, along with others in the national security team we've heard from this week, that there isn't an effective platform for real-time communication, that it's cumbersome, it's old-fashioned, we don't have time to get to a skiff and meet. We need a platform like this. A, is that true?
No.
And okay, well, then tell us why. And is it time for something more up to date? What are the tools?
So that is just absolutely not true. So that entire text thread has the entire national security apparatus on it. Every single one of those individuals has a suite of classified, whether it be phones, computers, video calling, accessible to them either in their offices, remotely at their home, or just say you're out with your family and the president needs to get a hold of you, you have access to a classified device at all times. So that's not an excuse. There is rooms like the Situation Room or classified rooms called SCIFs that any person that needs, authorization to speak to someone else, their counterpart, can go into at any time and pick up the phone and make a call. The Secretary of Defense has that whole suite in his office. So to say that, systems are cumbersome, to some extent, classified systems are cumbersome because it's a different desktop. It's physically different systems from your unclassified system. But it's not like you have to physically get up from your desk. I mean, you just kind of hit a switch at your desk and the secretary can be on a classified system, a top secret classified system, or switch back. So it's very easy, actually.
Well, so when we consider the way the communication happens internally, how does it work? Does it work any differently when we're receiving information, whether it be military plans for joint operations with other countries or intelligence that our intelligence sharing partners are sharing with us? What chain? What is necessary in that chain of sharing that information? And does this suggest that any of those protocol could have been breached as well?
So everything that was shared in that chain is completely fine to be discussed and shared on classified systems. That is exactly what, it's important for the Secretary of State to know the cadence of when these strikes are going to occur. Same with the National Security Advisor. So doing that in a classified setting, updating the president, the National Security Advisor needs to be able to walk into the president and say, the strikes are beginning, our fighter pilots are in the air. That's all okay being done on a classified setting. When I was in the administration, we never discussed an operation. We didn't even confirm an operation had happened until our fighter pilots were safe. And only then would we start confirming that. Even if there were media reporting, even if there were social media, videos out there, we wouldn't confirm it until our pilots were safe. And that's when the downgrading of information can happen, when the operation has concluded. And that's what the American people deserve to know. But pre-operation, during the operation, you never talk about some of these things.
This has been helpful. It's great to have you with us here in the studio. Sabrina Singh, the former Deputy Pentagon Press Secretary, with us on Balance of Power. Thank you so much. Coming up, we turn to how tariff uncertainty is impacting consumer confidence. And a look with Kyle Scanlon, Bloomberg opinion contributor, next on Balance of Power, Bloomberg TV and radio.
I've been at the Fed for 10 years, and this is the most dramatic shift in confidence that I can recall, except for when COVID hit in March of 2020. A lot of it is uncertainty around the tariffs.
Neil Kashkari, Minneapolis Fed president, yesterday at a Fed listeners event in Detroit. The conversation centered on how tariffs are causing a shift in confidence among consumers. And with us now to discuss how young Americans are reacting to this economic uncertainty, Kyla Scanlon, Bloomberg opinion contributor. Kyla, it's great to have you with us as part of our conversation here on balance of power. What does this mean? We talk so much about people concerned about their retirement savings, concerned about their nest egg. What does it mean for a millennial right now trying to get some stability in this economy?
I think for both millennial and Gen Zs, they're trying to navigate this particularly uncertain economic environment. It feels like every time you turn around, there's something new with tariffs or something being undone with tariffs. Connor Sen over at Bloomberg Opinion wrote an excellent piece titled "The Gen Z Job Recession." And I think a lot of Gen Zers are experiencing that uncertainty as well. You know, you're graduating from college and entering a labor market that might not be that receptive to you as it might have been historically. And so I think they're having a lot of issues with saving. They're having a lot of issues entering the labor market, having, of course, issues with inflation and higher prices, and then, of course, economic policy uncertainty that we're all facing.
Well, so yeah, enter tariffs. Is it so much, Kyla, the idea that they are actually seeing prices of things like eggs, for example, although that is a situation that has gotten better, appearing different in front of them, or just the expectation that they're eventually going to go up and they're not sure if they are going to be able to afford it?
I think it's both, right? So I think the Dallas Fed manufacturing survey gave us a lot of insight into how, you know, not how millennials are feeling, but how the broad swath of industry is feeling. Like, these were people who were like, we really can't make investment decisions. And if companies can't make investment decisions, they're not going to be able to hire, they're not going to be able to do capital spending. And of course, that's going to impact how they interact with millennial and Gen Zs who are trying to enter or maintain their spot in the labor market. And so I think for everybody, you know, tariffs have been this wild ride, and we have now 25% tariffs on auto imports, and that could be you know, an interesting story too playing out over the next couple of weeks as we reach April 2nd, Liberation Day. But tariffs have definitely been a point of uncertainty, even if they haven't totally taken hold yet.
So if you're a young person, Kylie, then you can't afford a car. You already couldn't afford a house. How much will a break in the housing market, a loosening in the inventories, never mind prices, have to do with the way young people are feeling about the economy?
Housing is an economic foundation. That's really the main thing that people interact with when they enter the economy, and that's kind of the main investment vehicle for a lot of Americans. And so if we can experience some loosening in the housing market, that'd be great. But, you know, mortgage rates are quite high. It's quite expensive to build homes, and there just really isn't that turnover that we need to see in the housing market. So ideally, it'd be quite different, but it seems like it's going to take a while for that to get a little bit better.
All right, Kyla Scanlon, Bloomberg opinion contributor, thank you so much. Coming up, we'll turn to geopolitics as the Trump administration is seeking to control infrastructure and mineral investments in Ukraine as part of a revised partnership deal, according to a draft obtained by Bloomberg News. We'll bring you the details of that next on Balance of Power on Bloomberg TV and radio.
one of the things we are doing is signing a deal very shortly with respect to rare earths with Ukraine, which they have tremendous value in rare earth, and we appreciate that.
President Trump last week on a pending minerals deal with Ukraine. And today we have exclusive details as to what that agreement may look like. Bloomberg reporting President Donald Trump's administration is demanding the right of first offer on investments in all infrastructure and natural resources projects under a revised partnership deal with Ukraine. This according to a draft of the document obtained by Bloomberg News. And joining us now with the very latest on this is Bloomberg's Nick Wadham. So, Nick, we've known that this mineral deal has been in the works for some time, but is this a signal that it's actually going well beyond that if they want future rights to all of this?
Right. I mean, I think what's extraordinary about this document is what we had previously thought that the U.S. and Ukraine were in a very fuzzy sort of cooperation or discussion that basically would be dangled in front of President Trump. Hey, we got this notional agreement with the Ukrainians. Now we can go ahead. That would be something that Ukraine wanted, something that the Europeans wanted. But what we see in here is a very detailed extraction plan where the U.S. is not only going to have massive control over Ukrainian resources, but also have essentially a veto on any other country that would invest in Ukraine. So it feels a lot like a mineral grab in a way, and it's really gonna force a big choice from Ukraine, because this is not the sort of intention to negotiate or intention to do business together. This is the real deal.
So does Ukraine basically have to decide now? Is it the U.S. or Europe?
Well, I mean, I think they're hoping that they could potentially continue to push this down the line, or this may be something that they wouldn't have to deal with in the particulars until much later. And the question, of course, would also be the legality of it. I mean, I think, President Zelensky is going to have to take this to the Ukrainian parliament. Would they be willing to pass it? So it's going to put them in a pretty uncomfortable position. They could say, yes, well, let's just agree and move on, and we'll work out the details later. Oops, 2028, President Trump's no longer the president. We've got a new guy. We can scrap this thing. But a lot of unknowns here.
Nick, thank you. Nick Wadhams runs our national security team here at Bloomberg in Washington. For more, we turn to Daniel Fried, former Assistant Secretary of State for Europe, former U.S. Ambassador to Poland. Mr. Ambassador, it's great to see you. Welcome back. Give us a sense of what's actually happening behind the scenes here, because this feels very fluid. We spoke with Ukraine's ambassador to the U.S. just 2 nights ago and couldn't tell us whether there would be a minerals deal or what phase negotiations we're at. This is the latest snapshot. It'll be different tomorrow?
Fluid is about right. Everything is fluid. The negotiations with the Russians, the Black Sea Fleet deal, Russian demands that are always moving. The Russians are trying to get us to chase them, a sport they excel at and we shouldn't play in. And now the minerals deal. It is very dense. It is very different than the deal that was ready to be signed on February 28th. That deal was a very good deal for Ukraine. You can see why the Ukrainians wanted to sign it. It got the U.S. invested in Ukraine, in the literal and the figurative sense. It was solid. This is much more extensive. Now, snapshot is about right. The Ukrainians are clearly going to push back. It's not set in stone. So let's hope it doesn't give the U.S. such extreme rights as to be a bad deal for Ukraine. The idea of getting the Americans invested in development of Ukrainian minerals is a good idea, because that will convince President Trump, that we have a real stake in Ukraine's security. The Ukrainians want that. But the details are important. And if we ask for too much, the Ukrainians will push back. And as we know, there are people in the administration who support Ukraine and people who feel rather otherwise.
Well, and I wonder if this is really so much about just Ukraine and the United States. What about Europe, who is saying, yes, President Trump, we are willing to step up and we'll provide peacekeeping forces, we'll invest more in our own defense. This deal may not be good for some of those allies.
Well, the outlines of the Trump plan for Ukraine could work. That is, a ceasefire in place and security for Ukraine with the Europeans, not us, being in the front. The Europeans are slowly getting there, mostly. We'll see. We ought to give them some backup to get them across the line. But President Trump's plan could work. but now he's got to push back against the Russians and not let the Russians play games with us. And he's got to have a deal that's good enough that Ukraine will want to sign it and want to live by it. There's a sweet spot where we make money, the Ukrainians make money, they keep their country, the Europeans do the work, we all win except for Vladimir Putin. But we're not there yet. And the U.S. needs to remember what it got into this to achieve, which is peace in Ukraine, stop the war on terms favorable to us. And let's hope that the initial reports of this deal, the Bloomberg report, Financial Times report, aren't the final word, because if they are, it's not such a great deal.
Will President Zelensky regret not signing that deal when Scott Bessent went to Kyiv?
Oh, man. The deal on February 28th was a really good deal. Okay, I will just say that. I was sorry that deal didn't get signed.
Yeah.
Well, and I'm sure Zelensky in the aftermath might be feeling sorry about the way that that went down as well, or at least has expressed that he regretted some of what happened.
Right.
It does seem fences have been able to be mended in some sense since then, as the U.S. and Ukraine are talking and the U.S. and Russia are talking. How long, Ambassador, do you think it will be before all three parties can be together at one table when this is no longer parallel negotiations?
Well, this is not the big question. The big, I mean, I understand what you're saying, but
what is the big question?
The big question is whether Putin's going to play seriously or whether he's going to play games. Right now, he was playing games. Look, I know the chief Russian negotiator who was in Saudi Arabia earlier this week. It's Grigory Karasin. I know him. I've worked with him before. He knows how to work with us. He knows how to not work with us. And he was not working with us. They are playing games. They're stalling for time. They're throwing in new demands. They're asking that we lift sanctions as a precondition for a ceasefire. What? We should not play that game. That would make us suckers. And I'm not for playing the sucker with the Russians. We need to remember peace through strength. And President Trump has said, and he's right, that we can put pressure on Russia, and he might do that if he decides Putin is stalling. Now, maybe he hasn't reached that point, but I think yesterday he said it's possible Putin is stalling. Good recognition, and I hope the Russians understand that that might be from our president a warning shot. Don't mess. And I think eventually we're going to have to push back and stare down the Russians. And we have, as the president likes to say, we have cards. We can increase sanctions. We can encourage the Europeans to put in forces in Ukraine and do so without Putin's permission. It's not his country. And we can put our thumb on the scale in the interest of the United States.
All right, Ambassador, thank you so much, as always, for joining us. Daniel Fried, former Assistant Secretary of State for Europe and former U.S. Ambassador to Poland, joining us here on Balance of Power. And still ahead on the show, President Trump pulls Congresswoman Elise Stefanik's nomination to be UN ambassador over concerns about the slim House majority. We'll discuss that next with our political panel right here on Bloomberg TV and radio.
Now we need Congress to pass the largest tax cuts in American history, and Mike is going to get that. And I think we can finally say one big, beautiful bill, because everybody's there. I spoke with John Thune, who's doing a terrific job also, and the senators, and we want one big, beautiful bill. Just put it all in that bill, and we'll figure a way to have it passed, right?
President Trump yesterday pushing Congress for, yes, one big, beautiful bill to enact his agenda. And today he announced that with that aim in mind, he's asked Republican Congresswoman Elise Stefanik of New York, to remain in the House rather than moving forward as his ambassador to the UN, which she was nominated for. He wrote on Truth Social, quote, "It is essential that we maintain every Republican seat in Congress. With a very tight majority, I don't want to take a chance on anyone else running for Elise's seat. Therefore, Elise will stay in Congress." Wow. Joining us now for more is our political panel, Kristen Hahn, Rock Solutions partner and Democratic strategist, alongside Republican strategist Sarah Chamberlain, president and CEO of the Republican Main Street Partnership. Welcome to you both. Great to have you. Sarah, I'm hoping you can help us out with this one, because I think we all found ourselves a little confused as to how exactly the president just realized the majority is thin and would get thinner if Elise Stefanik came out of the House. Is that really this is about? Because we've known that for months.
It's about a couple things. So down in Florida, in what used to be Walsh's seat, the fine, Congressman fine, it's getting very close. I still think we win that, but the polling is showing that it's really tightening up. So that's a concern, obviously. And then in Elise's district, which Elise Stefanik is a member of the Republican Main Street Partnership, what's going on up there is they could not agree on a candidate. And in New York State, all the county chairs have to agree on a candidate. So that became a little bit of a problem. Okay. So unfortunately for Elise, she would have been a wonderful UN ambassador, but she just has kind of gotten caught up in this.
Wow. That's a real answer. It sounds like two reasons in this particular case. What's the consolation prize?
I have no idea. I don't know, because now another member
right?
of Main Street, Lisa McClain, has stepped into that. So I don't know. But Elise is going to be a trooper and do this. And I'm sorry, she would have been a great ambassador, but...
Unless it's wait around a couple of weeks or months, because maybe there's another opening.
Well, the president
suggested that.
In his Truth Social post did say he looks forward to her joining the administration at some point. So, I don't know. We still have many years to go of this second Trump White House. But, Kristen, to the point Sarah was making on things being tighter than expected in the Florida district for the seat that Mike Waltz, the national security advisor, vacated, is there a real chance that thing flips when he won it by more than 30 points just in November?
I think we're seeing, I wouldn't say unprecedented, but a large amount of money coming into that race from individual donors, meaning very small dollar donations. I mean, the totals are just staggering for a race like that. It's still going to be very, very tough. It's a Republican stronghold, but we need to fight in every district that we can. And I think Elise Stefanik, I mean, unfortunately for her, that her district is also safely Republican, but I think that we would have made a real effort to take that seat. So I think there was probably no other choice.
We're looking at elections in Florida next week. We're looking at Wisconsin Supreme Court next week. And as journalists, we want to project. We want to connect the dots and have some mechanism to forecast the midterms, because it's the first chance we've had since November. How seriously should we take the outcomes of these elections now?
I mean, I think all of these smaller races, I mean, I think those of us who do this, we're looking at these races that are, we say, down ballot from the congressional seats and the Senate races. And what does that mean? So I think that, yes, it's an indicator. I think we should take all of these races in these kind of off-cycle times. And that's the best indicator, I think, of what's to come in the midterms.
Well, so obviously we're all going to be paying attention to this next week, but we're going to be watching what else is happening on Capitol Hill as well, Sarah, because rumor has it the Senate might want to move forward on its budget blueprint, trying to align with the House as soon as by the end of next week. What is the realistic timeline you're seeing here?
That's what the senators, the Republican Main Street Partnership, are saying, that they're hoping to get the vote next week, the end of next week. It's going to be, as we've always said, it's going to be the House version, because that's the only thing the House could pass. So Thune and and Johnson have gotten together, agreed on this. Trump is, as we heard, 100% behind it. So the vote's next week. We're very excited about this. Then hopefully we can get everything together. I still say it could be July, but they're hoping for Memorial Day.
That would be remarkable
if
they pulled it off. You know, we talk about one big, beautiful bill. What if it's not beautiful? What if it's one big Frankenstein bill? And you've got 5 factions in the Republican conference to please. Do you worry about threading the needle on this with so many major endeavors in one piece of legislation?
We certainly do.
Who keeps you up at night?
Many things keep me up at night. But as we move forward, actually, our members voted for it in the House, so they like the legislation.
Yep.
We're not cutting Medicaid. I said that last time. I mean, that's just not happening. There will be some compromise around that. They're really looking for waste and fraud. We found a lot in California just to start with. So nothing in this bill actually keeps me up at night. I think the American people will support it, and I think our members are going to be great to get it passed.
Cuts will be deep enough to make all of your members
I believe it will all make
Freedom
my
Caucus,
members happy. We are not Freedom Caucus,
no, of course,
but President Trump will be calling the Freedom Caucus members, keeping them in line.
Keeping them up at night.
Keeping them up at night. Yes, better them than us.
Perhaps at all hours.
Very late at night.
if when he posts on True Social is any indication, you really never know when any phone call is going to hit or a truth is going to drop. Kristen, to Sarah's point on not wanting to touch Medicaid, pretty much every Democrat we've spoken with has said that's mathematically impossible. You're not being intellectually honest about that if you want to achieve these kind of spending cuts without doing so. If they can, though, what happens to all of that Democratic messaging? Because that has been the focus of the pushback against this package.
I don't see how they can. I mean, and you know, it's been reported that Republican leadership has said we can get to $700 billion in cuts to Medicaid without a lot of consternation within our conference. And I'm just saying what's been reported, you know, and those extra $180 billion is where it really you run into problems with getting the votes. I just don't see how you get there. We talk about waste and fraud, and there's only so much you can do. And through reconciliation, you can't touch Social Security. I mean, that's the Byrd rule, right? I mean, so that entitlement program where you could, if you were to reform that, and that's a whole other conversation, would be somewhere where you could save money. So I'm just not sure what you can do. I think that the Democrats, they're right in pointing out the impact that cuts to Medicaid would have. People are concerned about that, particularly in rural areas in states across this country. So I think the messaging is in that respect is on point.
We all want to know what the parliamentarian is going to make of this final product and what is allowed. Leadership, apparently both sides of the aisle meeting with the parliamentarian to get ahead of this now. What do you know about that?
They're trying to put a little pressure on.
Have those meetings begun?
They have begun.
Yeah.
So it'll be interesting to see what the outcome is. I think she'll rule over the Republicans and we'll move forward.
You can fit all of this into reconciliation?
I think you can.
Border policy?
I think you have to. I really think you have to.
That obviously brings up the bird bath is a real thing.
It is.
How do you get border policy in a budgeting?
You have to be very creative.
Okay.
And I think it goes back to what you said. Is it going to be a beautiful bill? No, it's not. Like, no bill that big is a beautiful bill. It's a Frankenstein, just like you said. There are a million things in it. But there's you know, if you're a tactician, right, and you're a legislative tactician, you're looking at how many things can we add and, you know, or subtract in order to make people happy enough and not upset enough to actually get this thing done. And it is, I do not envy the Republican leadership on both sides for having to do this, and they're not going to get, you know, Democratic votes in the House. They've got to have all their Republican votes, hence Elise Stefanik.
I don't want to switch gears with just a minute left, but I'm going to do it anyway, Sarah, because I would love to know what Main Street members are hearing or thinking about the signal breach that has dominated Washington for the last several days. I saw YouGov polling today that suggested even 60% of Republicans think something went wrong here.
Something did go wrong. They certainly shouldn't have done it. We're fortunate that it didn't cost any lives, didn't do anything like that. It was foolish to do it. Former member of Main Street, Walsh, he took responsibility for it. I am quite sure it's never going to happen again. So I think the Main Street members are just ready to kind of move on from this.
Can they move on without a resignation or a firing?
I don't know that answer. That's going to be interesting. That's going to be decided over the next couple of days.
Well, and Kristen, the White House clearly wants to move on as well, hence dropping an auto tariff announcement yesterday when this was dominating the news cycle. You're a communicator. You do this for a living. Is the White House doing a good job of spinning their way out of this?
No, and I think, the tariff announcement it did dominate a little bit of the news cycle, but this is pervasive right now, at least for now. And so when you have all the different principals coming out and having different excuses for what was happening, it said to me as a communicator, they're not communicate. They're not talking to each other, and they're clearly upset about what happened.
And it's not done yet. Kristen Hunt, Sarah Chamberlain, great conversation. Thanks to both of you for being with us. We'll have much more ahead here on Balance of Power. Australia's Prime Minister Anthony Albanese calling an election for May 3rd. We'll get details with a report live from Sydney coming up next on Balance of Power and Bloomberg TV and radio. This is Balance of Power on Bloomberg TV and radio. Just out, Australia's Prime Minister calling an election for the 3rd of May. Voters there weighing which candidate can best manage complex relationships with, yes, the Trump administration, as well as China. Joining us live now from Sydney, Bloomberg's Paul Allen. Paul, what's at stake?
Yes, well, for the Prime Minister, Anthony Albanese, he's seeking a re-election as Prime Minister. He'd be the first Prime Minister in about 20 years to successfully do so. The alternative would be suffering the indignity of being a one-term government. The opposition leader, Peter Dutton, meanwhile, seeking to lead his centre-right Liberal Party back into power after just 3 years. And polls suggest there's going to be a pretty close race. Top of the agenda domestically, of course, is going to be cost of living. We've had a sneak preview of both parties' plans with the budget and budget reply just this week as well. But as you mentioned, they're navigating the relationship with the United States is going to be a major challenge for both parties as well. Now, Peter Dutton, the opposition leader, says he could have got a carve-out for Australia on these steel and aluminium tariffs. He says should he win, his first trip will be to the US for a meeting with President Trump. Anthony Albanese, the Prime Minister, has ridiculed that idea, saying, look, no country got a carve-out. And if you look at Australia, it actually runs a rare trade deficit with the US, means the US sells more to Australia than Australia sells to the US. BlueScope Steel, an Australian steel manufacturer, has the 5th largest steel manufacturing operation in the US. And Rio Tinto said the US asked Australia to send more aluminium after the outbreak of the Ukraine war. We've also got a major defence deal going with the US as well, of course, the AUKUS Pact. But none of that was enough to save Australia. So regardless of who wins, navigating that relationship, going to be a tough one.
All right. That election just 5 weeks away. Bloomberg's Paul Allen, live from Sydney. Thank you so much for joining us. And just a quick programming note, make sure to tune into Bloomberg Surveillance tomorrow morning, 7:30 a.m. Eastern Time, for a conversation with Republican Congressman French Hill of Arkansas, the chair of the House Financial Services Committee.
We'll see you back here tomorrow. Thanks for joining us on Balance of Power. This is Bloomberg TV and radio.
This has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it others seem to have a very, very narrow definition in mind. And the people we can all agree are stone-cold geniuses always seem to have a dark side. I read in Bloomberg Business Week about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're going to try to live up to that name together tonight.
It's the Business Week Show.
Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News, and sometimes our magazine, Bloomberg Business Week, writing about Wall Street's money and power. And what that means is I write about ambition